lesson one, day one, sorry. And we're just going to be talking breakouts basics, okay? So like, what is a breakout? Support and resistance, key levels, breakout examples, and a good versus a bad breakout, okay? So I need you to know the basics, all right, for now. And then the next week will be more aggressive and more in depth. So you got breakouts in a bullish trend, all right? And you got breakouts in a bearish trend. And then you got range breakouts. It's only 3 types of breakouts, all right? So you didn't know, now you know. There's literally only 3 types of breakouts. Consolidation breakouts. This is the one where you're going to get the most fake outs though, okay? But this is your 3 types of breakouts. So that covers the first question, what is a breakout, right? So it's when price breaks a high or breaks a low or breaks out of a consolidation, okay? I just need you to know that for a minute. This is the most basic stuff we can literally do. So I hate to say this, all right? I hate to say this, but this is why I try and tell people as well, don't get too messy with it and stuff and take things too thin, right? So like that's a breakout technically, right? Like technically this is a breakout. This little pullback there, and then this blue candle, that's a breakout. And above, that's a breakout too. But this is where you can get fucked up a little bit, right? If you ain't like zooming out a little bit and seeing the overall stuff. So that's where the next thing comes in, which is literally support and resistance. So maybe I should bring it up on the screen for a sec, just so you can see. I'm making this shit up as I go. Where's my images? No, actually, you can see it anyway in the actual Discord. You can see what our lessons are. I dropped the picture in there. So a breakout. Type 1 in the chat if you understand what a bullish breakout is, a bearish breakout, and a breakout of a range. Type 1. But type 2 if you're confused on anything at all. Because I'm happy to go over it. Okay? I need to know all of you are up to scratch with the basics. But just because I keep saying basic and easy, don't let that put any of you lot off. And if you're watching this in the session replay, in the coaching replay, sorry, the bootcamp replays, feel free to go to the questions channel and drop your question in there. And I'm going to answer for you. I'll even jump back on call and I'll break shit down again. I need this 2 weeks to be about all of you lot. And I need you lot to be asking me questions if you feel like you need to. Like I really, really want you to have a lot of clarity at the end of this. But most of you saying 1. So that's cool. Okay, so all right, just a quick little test. All right. So what was this? Was this a bullish breakout or was it a range breakout? From this area, if you was to have entered down there, is that a bullish breakout or a range? 1 for bullish breakout and 2 for a range breakout. Okay. Ghost 1, Ron 1. Yeah, okay. Sweet. All right. Yeah, most of you saying 1, which you're correct. Bang on, 1, definitely. So this was a bullish breakout. Now type 1 if it was a bullish breakout inside a range, or type 2 if there's no range. Okay. One, correct. Yeah, I'm gonna say correct anyway, so the rest you can just, if you didn't know, right? So this is, even though it's a bullish breakout, it's still in a range. So this is where support and resistance comes in. So this mark up some support and resistance, but firstly, obviously, I have to do this, even though I know most of you, I'm certain, know what a support and resistance is. All right, so a resistance is a place where price gets pushed down from at any point, and a support is where price gets pushed up from at any point. All right, that's literally as simple as it is. Now, a lot of people will tell you, you know, there's different ways to do it. There's different ways. This is different ways that. I don't care, right? I'm genuinely going to tell you right now that, like, you could do this and this would be valid. Like, if that's what you want to do, that's absolutely fine. Do I think it's overkill to draw a support like this? Yeah, because I'm kind of looking at the most recent supports. All right, so if I'm on the 1 minute time frame, right, I don't really need to look too far to the left. Let's just say I look to this area. Let's bring price back before we get there. So I'm looking at this area. Now, a lot of people would draw it there because we ain't quite there yet, okay? And obviously this is a beautiful area as well where it resisted from. It's pushed up as support, so that's not wrong neither. But when I tell people you're already at this area of support right now, pull it down. Look for the next area where, you know, price have wicked, because they're very important. Price have wicked, have rejected. Price is pushed up from in a sharp way. Also, where price has actually made a trend from. If you can get somewhere where price is trended from, and whether you like it or not, this is a trend, right? This is genuinely a trend. Only a small one, but still, it was a trend. So you can almost guarantee that when price gets back to an area, it's going to at least react from it a little bit. So yeah, it might do this and then go boom, break through and use it as a resistance, but it's going to react from it, right? Some sort of way. So that's basically what I'm trying to get in your head. So right now, okay, cool. Let's just say before we got to this point, I probably would have used this. I would have said, all right, cool. But now we're there. I need to pull it down. So I'm going to pull it down to the next area. Resistance, resistance. And then we broke above it. Started an actual trend. So now that's a support. We get down to it. Boom. We absolutely smashed through it. That's cool. Because what am I going to do? Now I'm going to pull it down. And I'm going to make a new support. That's why sometimes I do like multiple boxes. But I prefer it if I kept it clean for you lot. So let's just say I'm looking for right now my main support. Well, it'd have to be there. Now, where would my breakout be? Because we was talking breakouts also. You know, it'd have to be up there for a second because there's nowhere else. Now, I know you see people like Mamba and stuff doing the mid-break levels and, you know, stuff like this. They would draw this and go, oh, this can be my break. Correct. Yeah, it could, but not for me. I need to see some shit like this. So then I can put my breakout, right? So if I'm anticipating buys from the support, then I'm not going to just get in when it touches support. Like, I need to see a rejection wick. Okay, check. Maybe a bullish engulfing candle. Well, we haven't got a bullish engulfing candle yet. So what else am I going to do? I'm going to wait for it to come back, revisit until it gives me what I want. So we're back now, back at the area. Wait, my bad, a bit too fast. Back at that area. This whole area is a one. And what have we got? We've got a perfect place to put our breakout line. Wick or body. I told you I have been using the wicks. And there's your little breakout. So I think we all pretty much know anyway about basic support, resistance, and breakouts, right? I just need to let you lot know how I'm currently viewing support and resistance and stuff. So before you'd see me do some shit like this, right? This is the old way I used to trade. I have like a big area down there. Say, okay, cool. Which is still valid. But let me just get to the point why I don't do this no more. I would do this. Okay. You know, if you've been watching me for a while, this is true. This is genuinely sometimes what my charts would look like. That's still all valid. That's absolutely fine. Let me just check if we still got microphones. Yeah, nobody said nothing. Cool. I'm guessing that it's all good. So anyway, that's what it'd be like before. Now I'm looking for my main range and where I'm currently at right now. All right, this moment in time. So it would be there. This would be what I'm looking for. Now, what's next on my list? Okay. Oh yeah, wait, sorry. I'm going way too fast. I do this all the time. Let's have a few more examples of support and resistance. Let's just change the time frame. It don't really matter. All right, cool. So consolidation, but also this whole area is a support. This whole area was resistance. My bad. I'm gonna copy and paste resistance. So let's take you back to a time where it didn't break out. This is basically how I would draw my main range support and resistance. Now, before I used to do these mid levels, all this stuff you can, but type 1 in the chat if you agree that this is cleaner than what I used to do, or just type 2 if you actually prefer all those crazy areas. But I want to know what you'd prefer. I know what I prefer now. I just prefer my main range support and resistance. Okay. Instead of all the mid levels and the crazy stuff. Yeah, 1 makes it simple. Even though 2 is still valid, And you can do it. Like right now, you could look at this and go, yeah, but this is also, you know, a place and stuff. It's going to get your brain ticking too much. It's going to get you thinking, oh man, it could react from there now and do this and do. And yeah, that's true. But if you just simplify trading and go, my main support and resistance is the range. So if I break to the upside, where am I going to be targeting? It's going to be targeting the top of the range, which is resistance. Do you know what I'm saying? So as it does anyway, we knew that because it was bar replay mode. But you know, let's even bring it back to a point where we was still in this range. All right, cool. Maybe at this point I probably would have done some shit like this, try and include this wick. All I know is when we get to resistance or support, I'm looking for a sell off from there it is, look right there. So even though I'm not just entering because it's at resistance, which you can do and I have done loads of times, if I'm looking for actual structure, well, all I need is a little baby pullback. There's my baby pullback. You can choose the body, the wick, etc. But see what I'm trying to say? Like, even in ranges, we still get bearish and bullish breakouts. But all we need to know is our main support and our main resistance. And we don't need to be mixing it up. Because if I was to have mixed it up then and give us too many, like, you know, little baby supports and stuff like that, these little mid-levels, it would have freaked me out of my position. You know what I mean? It would have been like, oh shit, it did react from that area. Because it did. And technically you could have got out there. But if I just take away the fear and be like, yo, look, this is the range, pretty sure that it's going to come down and try and break out below or above, okay? That's one way to deal with it. That's another perfect example of support and resistance, okay? And then another example is actually breaking out and retesting it. So we don't quite break out there. Now we've broken out. We come back, we retest it. So that's the perfect example of a break and a retest right there. So this was resistance. Okay, we break out, we leave that big ass wick, you know, rejection wicks is for next week. We're actually not getting into liquidity sweeps and stuff like that till the second week. More advanced stuff. But anyways, that's a breakout of a fucking support, resistance, sorry, and then used as a support. And currently on the way to the TP right now. You know what I mean? So support and resistance, bang a 1 in the chat if you fully feel confident that you know what a support and a resistance is. Bang a 2 in the chat if you need me to carry on. And don't be shy, like I said, man, this is for you lot. If you lot feel like you don't really need this lesson, that's fine. I appreciate you showing up though, even though I know a lot of you do know this stuff. But I gotta try and remember a lot of people actually don't. But that's what Master the Basics is for. This is going to be a little bit more quicker paced and we're going to be smashing it out there a bit quicker. But the main goal is by day 10 for us, like next week now, it won't be this Friday, it'll be the Friday after. I want you to have a full plan. I'm going to put a new channel in the bootcamp section and I want to see people's list, this step-by-step plan, this strategy for bullish, bearish and range setups, but I'll get to that in a bit. Key levels, okay, so key levels is next on our list. So we've basically just identified what breakouts are. We know what a bullish breakout is, we know what a bearish breakout is, we know what a range breakout is, right? But one more time actually for the range one, just because I believe range breakouts are where you're all going to get faked out the most, including myself. So the best way possible to deal with a range breakout is a break and a retest, all right? And then you can say, okay, now we've broke out, you know, we're doing our little thing, let's wait for a trend. So break and retest when you're in a range, all right? They're the horriblest ones though, they're the worst ones. So key levels, what is a key level? All right, so this is good actually. Key levels are important for when we're at all-time highs. So all-time highs, it's like say NASDAQ, we're always at all-time highs on NASDAQ. I'm pretty sure we are now, right? Yeah. So where can I target? Well, I'll target the round psychological numbers, okay? So what you got to think in your head is big, massive institutions and banks and the big players, as we call them. We don't really know who we're talking about. We just say the big dogs, the big players, right? Them ones there, people who move the markets, they don't actually like care about, you know, these numbers. Look, let's really zoom in. I don't really give a shit about like 29,392, okay, or 29,386. They don't give a shit about that. They really ain't targeting levels like that and pushing money places like that. They're trying to push them to the round psychological numbers. So take a look at where price, you know, reacted from. If I was to put my my line there, okay. Now, I know a lot of you are probably gonna go, listen, dickhead, that's not. It reacted from, you know, a bit different to the actual round psychological number. It doesn't matter if it's a few pips or whatever. Look at where they targeted. 29,400, okay? So 29,400, round psychological number. Let's carry on. I mean, where did it just resist from a bunch of times too? Like, you got to like look at these. All right, so another round psychological number, just 29,360. All right. You can count that as an area, yeah, but it's gonna target new round psychological numbers. So let's take a look right now where we're at. Where did we wick? All right, so let's just take away the 50. All right, 29,480. 29,480, absolutely bang on the wick, and then it dropped. All right, 1 hour time frame, bang on the wick. It does this, then it does that, right? But that's key levels. So key round psychological numbers is what you're going to be targeting when there's all-time highs and you've got nowhere else to target. So that's why I just dropped my own TPs on these round numbers, because they're going to get super close. If not, they're going to go over them a little bit and then they're going to like react from them. So you can go and test this yourself, man. Like literally go to every single one of these wicks. All right, 175, cool. They call it a quarters theory, I believe, right? There's quarters theory as well. But look, 29,110. Like if you was to just have said at that time, you know, I'm going to target the next round psych number. So, you know, if you was down there somewhere, then these would be your round psychological numbers, right? Key levels. I'm going to try my best to get them bang on, but boom, there we go. I think you get the idea anyway. They're just round, bold numbers. They're the ones you want to be targeting, like 29,050, etc. Right? Instead of 29,5125, like you would just be targeting shit like this, and then you'll see how it reacts as well. But anyway, that's another thing too. You know, most people, which I do myself, I take my scales and lines off the. No, I take my cross. Wait, what am I talking about? I take my grid lines off, all right? Now, let's just say I kept my grid lines on, horizontal only. They're your key levels. They're your round psychological numbers right there. So, for me, I take them off. Yeah, I do. But they're actually TPs. So, let's just say... Wait, sorry, I'm just going to check the chat to see if everyone's still there. If my mic's still working and stuff. So, let's just say we go to the 5-minute time frame. Just take it in. Just bear with me and take a look how it acts. Take a look how price reacts from these lines, right? Like I'll make them a little bit more seeable, right? So let's just put them like this. Just say these blue lines are take profits, all right? Look how the price acts from these round psychological numbers. This is key levels. Go test it yourself. Look at where the wicks are. Like literally, this is how it reacts from round psych numbers. So yeah, they're basically TPs in a way. Instead of using the Liquidity Pro, if you knew you were bullish, well, use to get in. You know you'd be targeting these these lines. Look at them. This is literally, it's crazy anyway. It's just like art basically. When you understand this stuff, you'll understand that it targets big, bold numbers. So even though 29,340 isn't as bold as just 30,000, say, well, it's going to get there. Do you know what I mean? It's on the way there. That's what it's doing. Then it usually consolidates around big key levels and numbers. Let me take them off my chart because I don't like them. I know what they are. But let's just actually see. Like a big round number, like 27 bang on. Let's go to 27 bang on. All right. 27. Is it? See, that's not round enough. I want a better example. It'd probably be like, far back I gotta go just to get to 20. All right. 20 it is. Bear with me. I know I'm going a bit slow here. I'm trying to. All right, there it is. All right, so usually when it gets to a big round psychological number like 20, bang on 20, all right, you've got to look at it as a whole area, because you've got to think big ballers, big players, they're not on a 1 minute time frame, all right? They're not all Mamba effects, they're long-term investors and stuff. So they're looking at things like 20, 30, 40,000. Do you know what I mean? They're not looking at what we're looking at. So if we was to go to the daily, you would see, yeah, look at this. Look at this. Look how it acted there. I should have just went to the daily. It was way easier. Way easier. So 17. Boom. Pushes from it. Where did it push from there? I'm trying to prove points here. See, people. Quarters theory. 20,500. Boom. And then it drops. All right. These things, they're not coincidental. Where did it go and where did it consolidate? 22,000. All right. So, and it did that for a while. It couldn't break through it. So, where are we now? Back there. We broke through it. Probably going to retest it in the future if we haven't already. Nah. I think I've proved my point with key levels anyway. Basically, the round psychological numbers is where big ballers and players are going to send all their money to. They're pushing it towards 20. When they talk on the phone and they got their cigars, they don't say, "Hey boys, this go and hit like 21,096." They're just like, "Nah, right, we're gonna hit price and fucking all pull out at like 22." So we got what is a breakout done, support and resistance, and key levels. Don't let what I just taught you go over your head and fuck you up a little bit. Just understand that you know, like right there, price was reacting from 20. Okay, so as I'm looking at it, I would say it reacted from 26,400. Now they ain't giving a shit about that. They're not. They're just saying 500. All right, that was sorry, 26. My bad. I'm so confused today. 26 is what big peoples and players were talking about. This is the area. So for us, we're looking at actually where they wicked and stuff. The key levels, though, realistically, and the targets would have been at the time the round psychological number, which would have been 26,000. All right, it wouldn't have been 26,008 or ratata. This whole area they would have just been targeting. Then we absolutely blasted through it. I don't know where is planning to stop. The Nasdaq doesn't really stop going up, so that's another tip for people. If you want to be a long-term investor, go and invest in Nasdaq stocks or US 30 or S&P 500. They just continuously rise. But yeah, key levels, round psychological numbers. You also get the quarters theory. We're not really going to get into that though, because I just believe I've told you enough when it comes to round psych numbers. That's why you see wicks. That's why things act the way they do. Because look, you're looking over to the right, 29,400, it drops. I mean, you look over there, it's just going to be the whole area anyway, all right? So get on your charts and go and look where prices wicked and start to get in tune with the round psychological key levels, because that's basically what key level is, all right? Also, somewhere that's been tested a few times, support resistance, they class that as key areas. I couldn't class that as a level because it's not a level. Like a level is literally a number like this. Boom. 29,400, forget the 75. That was the level. All right. But the area overall, if you draw the box around there, is this. That's the support and the resistance area. So that's a key area, but the level was the round number. Whew. Bang on one in the chat if you know what a key level is right now. A round psychological key level, okay? Bang a 2 if I've confused you a bit, but you know, we only use them for when we're looking at all-time highs and places we've never been before. Unknown territory, I suppose. Because otherwise, we're just going to be using support and resistance. Okay? But when you find yourself at all-time highs with NASDAQ or gold or anything, just look at those round numbers and think that's where they're going to want to be pushed, okay? That's where price is going to want to be pushed, and that's where it'll probably react from pretty sharp. Oh, my back is killing. All right, so we got 2 more things left in this lesson, all right? And breakout examples. No. Sorry, I covered breakout examples. Yeah, no, I covered that. A bullish breakout, a bearish one, and I'm pretty sure you all know though by now. But let's just take it back. Not going to take too long on this, honestly, I promise you. Because I can already see lessons that I'm going to be teaching you next week, like manipulation, liquidity sweeps. Like, you know, we're bullish right now. People think, oh, that's a break of structure, we're going to get bearish. And I know that was just a liquidity sweep right there before actually doing the move. So we're going to get into all that spicy shit, I promise. But firstly, I just want to keep it simple. So breakouts. Right, cool. Sorry. So yeah, if we're trading and we're this bullish, all right, let's just forget about what's going on over there, apart from our main support and resistances. But otherwise, all right, a lot of people are going to look at this and go, I see breakouts there, valid, that is a breakout, but you're likely to get swept because of how bullish we are. Also as well, have you noticed now as well, I won't be using the bodies, I'll be using the wicks. So if I did use the body, that's where I used to get faked out. And it fucked me up. Now I use wicks though. Kind of just saves me a lot of fake outs, I'll be honest. But there was a break right there. Cool. Let's take a look at it. Would it have made sense for us to have even got in that? Right? Like pip worthy. Actually, would that have been a 1-to-1? Yeah, that's a 20 pip. That's a 20 pip win right there. Even though it's ugly to look at, that's a 20 pip win. And then it goes and does this. So even though that was a 20 pip win, the actual sense and the way my brain works, knowing about liquidity and stuff, is I probably would have waited and been like, we're getting in on the break back to the upside. Okay. And there would have been the better move and the bigger move, etc. But yo, I think we've covered basically all the stuff I wanted to on day one, which was what is a breakout. We know what a bullish breakout is. We know what a bearish breakout is. We know what a range breakout is. We just wait for the break and the retest, all right? Support and resistance, we know what that is. And now you know what key levels is if you didn't know what key levels is. Sorry, let me mute my phone. Because obviously that must be annoying. But is there any questions? Like somebody shoot a question at me. Oh yeah, I got one more thing to go over before I actually end this class as well. A good breakout versus a bad breakout. But anyone need a question answered right now, then shoot. And I'll look at the chat in like a minute. But I'm going to give you an example of what I think is a good breakout and what's a bad one. So, but we just seen a bad breakout actually. Knowing that we're in this kind of range overall and seeing like this amount of support there, I would have said this is technically a bad breakout. So this little tiny bit of structure there, this little one blue candle, and then it breaks to the upside. That's a bad breakout. Even though it worked out as bad, a good breakout would genuinely be a trend breakout. So it'd be some shit like this, okay? Counter trend trade in mind, this is now, and we ain't into this territory yet, but we know price needs pullbacks and stuff, right? So for me, a counter trend trade actually is a good trade. It's not an A setup, it's a B setup because it's going against trend. But you know the price needs pullbacks, okay? So when it does some shit like this, if you was to have had a Fibonacci on, which will be part of the boot camp, then you would have entered on a breakout there, maybe a break and a retest, or you would have entered there. No matter what way you look at it, though, it would have been a decent breakout. So for me, that's a good breakout. So I'm saying, or an even better breakout would obviously be then in the direction of the trend. Holy shit, that was a liquidity sweep. But no, sticking to the actual trend is that's always going to be the best breakout. So oh my god, that was the best breakout actually there. This was a full-on reversal. But no, that's a B setup in my eyes still anyway, in my opinion. A really good breakout would have been this. It would have been this one. This would have been a lovely breakout, probably an A+ setup if you look at it and go, actually not really. So let's just pretend, all right? Let's just pretend we're actually bullish on the higher time frames, okay? A A+ setup for me is when you got, forget that trend line, something like this. This would be an A+ setup. If we was on, say, the 15 and the 30-minute time frame was bullish, and this is the 1-minute time frame, and I know that New York is about to open, if this shit breaks to the upside, that would be an A+ setup. That's the A+ setups right there, right? That's a really good breakout. So a bad breakout would be a range breakout. So you've got to wait for the retest, or a counter trend trade would be like a B setup, but an actual A setup is like I just said. If you've got like, all right, overall, sorry, can't really see the screen, my eyes are blurry. Overall direction, bullish. Let's say 30 minutes, 30-minute time frame because we're scalpers, okay? Pull back on 1-min time frame, and then a break. Oh, my eyes are bad. I need to put my glasses on. So boom. Let's say that we've just looked on the 30-minute time frame, we're bullish, or the 15-minute, we just know we're making higher highs on the higher time frames. Then we look and we see the pullback, all right? And we're like, okay, yeah, cool. We got a pullback. We're creating lower lows now, whatever, right? This is just a pullback. You got to keep it in your mind. This is where you can add like trend lines and shit, all of that jazzy stuff, but you got to keep in mind you're overall bullish. So there's so many things that I've just seen that makes this an A+ setup for me. If you waited for the break there, a break and a retest, cool. Could have had your break and your retest there. You could have got in there. Do you know what I mean? But you know your target in the top. We're overall bullish on the higher time frames. We've just got take profits and shit. Or even if you just got in on this, even if you just got in on the breakout of that, all of this is A+ shit. So that's what I call a really good breakout anyway. When you're going in the direction of the overall higher time frames. So yeah, I think we've covered pretty much what I wanted to cover on this video. I feel like this is really day one. Even though this is day two, I feel like this is day one because yesterday I just wanted to make sure that everybody kind of knew what a breakout was. So yeah, I suppose trends and ranges we did kind of cover yesterday, but today we're gonna cover them properly. So the first thing we're gonna do is we're gonna cover trends, which I know is all basic stuff once again, but this is day two. You gotta understand we got 8 more days to go, so I am gonna pump it up, and it is gonna be a lot more complicated. So firstly, we're gonna look at trends and market direction, uptrends, downtrends, and identifying ranges and shit. All right, so trends. The market has direction, so you're gonna have an uptrend which makes higher highs and higher lows. You're gonna have a downtrend, lower lows, lower highs, lower lows, right? We know that, and if you don't, then you're about to find out, right? But like I said before, go watch Master the Basics. If you're really that much of a beginner, this is kind of for more, you know, we're gonna breeze through these a little bit quicker. So I'm gonna get on the charts and show you live examples anyway, but firstly, and I'll show you as well, actually, it'll be interesting because this time around I'm gonna show you what I think is a proper higher high and a higher low, not just internal structure and every single little move. I'm gonna show you what a proper higher high and a proper higher low is, all right? So you don't get tricked out, because that's gonna help you a lot in trading. But basically, yeah, an uptrend is higher highs and higher lows, downtrends, lower lows and lower highs. And identifying a trend helps you trade in the right direction with high probability. So basically, that just means that if we're in an uptrend, we should technically be looking for only buys if we're taking A+ setups. So if we want to pass prop firms and shit, and we want to go for A+ setups, then we want to be trading the trend. Say you're looking for an A+ setup, this is going to go in your favor in the future. Like on day 10, when you put your plan together, you can watch back all of this and think, okay, so you know, if I'm seeing bullish structure, proper higher highs and proper higher lows, not tiny little internal breaks and stuff, right? We'll get into all in internal and external breaks and stuff like that and structure. But firstly, if price is overall making new highs, all right, you should only be looking for buys. Same way, if it's making lows, you should only be looking for sells if you want an A+ setup, right? Or you can count the trend trade and shit, and that's when we get fancy with it. That's week 2. But firstly, this is the basics. So next, ranges. We kind of covered this yesterday as well, but support and resistance just basically getting fucking bounced from, all right? So we hit resistance, we come down, we hit support, we come up. But like I said, there's actually still opportunities to trade within a range. It's just, you know, you're going to have to look at the higher time frame range and then catch those lower time frame breakouts. But overall, the market's just moving sideways. We're moving between a support and resistance. There's no clear trend. It is best to wait or trade the range, right? Like I just said, we're trading from, if we're at resistance, we're looking for lower time frame breakouts to come back down. But my personal opinion on ranges is wait for the break and a retest and an actual trend to start from a range. So we'll be covering these again a little bit briefly. All right, and 2 seconds. This tea's so nice. Okay, so I basically just explained this anyway. Trend is your friend. Trade in the direction of the trend. The trend gives you the highest probability. I just covered that. Higher highs and higher lows, and lower highs. I'm going to be covering those proper though. I'm going to show you where you might get confused and you might think the trend has changed on you, but actually when you zoom out and you look, it haven't. I'm going to show you proper higher highs and proper higher lows, actual swings, and the differences between, you know, little fucking fake breaks or whatever, or the way your eyes can trick you. You need to sometimes zoom out and see the bigger picture, right? So we'll be doing that in a minute. And yeah, that's the same shit I just said. Anyway, lower lows, lower highs. All right, so ranges need patience. Oh yeah, ranges need patience. So like I just said, we ain't gonna force no trades if we ever catch ourselves in a range. So in a minute when I get on the charts, I'll show you what I mean. But say we're on like a 15-minute time frame or a 5-minute time frame even, or a 1 hour, whatever, higher time frames, because we're trading the 1 minute, say, then it's fine if we're ranging in a 15-minute range, because it makes sense that we can catch actual big moves in that range on the 1 minute time frame. All right, so I wouldn't force a trade, but I would definitely either wait for the breakout of the range and then a retest and carry on in a trend, which is the next point, or I would just trade the support and resistance, the range. I've done it loads of times, but that's not an A+ setup. All right, so when we break out of the range, then we're in a trend. We're looking for pullbacks to support, resistance, moving averages like the EMA and stuff. I'll cover those in this lesson. Sorry, state food. Right. Use trend continuation setups, which is I believe what I did last night. Tokyo session, the one we did last was a trend continuation, so we were making beautiful higher highs. I said, look, I ain't waiting for the open. If we pre-break, I'm getting in, and there it was. Do you know what I'm saying? Beautiful trend continuation setup. So if you didn't see Tokyo session, go watch that replay on Twitch. Is there, and follow the trend until structure changes, right? But then also sometimes, you know, this is where I'll disagree as well. If we're in a trend and we're bullish, I'm not only looking for buys. I will definitely counter trend trade. But I'll understand though, you know, we need to use things like a Fibonacci, or we do need to look for things like support and resistance, fair value gaps, all of that stuff, which we will be getting into. But right now, I just want you to understand that if we're bullish and we trade a pullback, there's ways to kind of figure out where you want to be getting out, right? You don't just want to think is a reversal, because markets, whether they're going up or down, need pullbacks, and that's to just take some liquidity from the higher lows or fill in some gaps. Do you know what I mean? Trigger some orders. That's literally what pushes the price up. Is, you know, people sometimes don't understand it. They're like, it's just some, like, it doesn't move on its own. Price doesn't move on its own. These charts don't just move on their own. People, all right, people are making them move. money's making a move, right? We're following in the footsteps of the bigger players. That's all we're doing. We're trying to figure out, okay, you know, why are they coming to this area? Why is there a trend? Why are we bullish? Do you know what I'm saying? Without going into news and fundamentals, I just look at the charts and can figure out from looking at a chart, you know, what my setup's going to be for the day. And before I move on as well, I just want to bring up a point that I was watching a YouTube show earlier, and there's so many AI fucking, you know, new generation ads right now. Literally AI people as well. They're not even real people promoting it, obviously. But they're AI ads, right? And they're like, don't ever think that anything you've learned in trading is going to help you. You know, algo trading's the way forward, this and that. All right, they're so full of shit. If you see an ad trying to swift you away and say that all of this hard work and the stuff that you learn doesn't work and is not going to work in the long run, fuck them. All right, and fuck them AI bullshit adverts, because everything that I've learned in the last 5 years is the reason that I can literally pass prop firms, take payouts, flip small accounts, whatever, right? It fucking AI anyway. That's what I'm trying to say. So, in a range, all right, I'm not even going to talk about that because I kind of feel like I just did. But, oh no, there's a few points actually, yeah. So, if we're in a range, don't worry about that buy near support and sell near resistance, because I just told you that if we're in a range and we're on a 15-minute or a 5-minute time frame range, we're going to look on the 1-minute time frame anyway, and we're going to obviously sell from resistance back down to support, vice versa, right? So that's all that means. Look for confirmation at the levels. So I'm going to break that down too. I'll show you what kind of confirmations I'm looking for when we're in a range. I'll show you what confirmations I'm looking for when we're in a trend as well. Also, tight stop losses and quick targets. That's literally the smash and grab. So I have to add that in there. And wait for breakout setup. So I think we can get onto the charts now and actually look. So trends. We covered it yesterday, but like I promised, I was going to give you a bit more of a, you know, in-depth thing today. So I kind of want to tie day one into this day as well. So firstly, we're going to go with an uptrend. What I look for in an uptrend, what like the confirmations, where I'm looking to enter, where I'm looking to target. All right, so let's just look for a nice trend. I mean, right now that's a perfect example of a bearish trend. I'm looking for an example of an uptrend. All right, so this is the 5-minute time frame. Beautiful, beautiful, beautiful. Right, so we're going to bring it back to there. Okay, just bring it back. Right, so we are currently, let's just say we're at this point, right? Boom, that's our lower low. So, oh yeah, that's another thing too, market structure. Before I get onto the actual trend, I want to make sure everyone knows proper market structure. So when you see people do this, right, it's easy to say this is a higher high, this is a higher low, right? Every time it breaks, is a new higher high. So just a quick thing for you lot, right? You cannot get a higher low until there's a higher high. Okay, so like until this gets broken, like say price was doing this and you know you're bullish, so this is a higher high. Okay, this is the higher low, this is the higher high, and this is not a higher low. This can't be a higher low right now. Cannot count that as the higher low, even though that low is higher than this, because this needs to break. Until this actually breaks that high, there's no higher low, because it could literally do this. It could reverse. Do you know what I mean? So like I need you to understand structure properly. All right, that's what I'm about to teach you quickly before we get into this trend. But this is what I was talking about, zooming out and actually looking. So okay, technically all of this is market structure, right? So I'm just going to go from here, pull back, market structure. Okay, all of this is market structure, all right? But I'm going to look at a point now where you could say, okay, cool, this low right there, this wick, I mean, all right, it broke below this, all right, it broke, it did break, but it didn't close. Okay, so an actual breaker structure is when a candle body closes. So there's no breaker structure there. That's actually just a little bit of a liquidity sweep before carrying on up, all right? That's a pullback. The wick closed. I mean, the wick wicked there, but it didn't candle body close below the wick. So this is where people get confused. Now, you could put your, let's go there, sorry. I want this to make as much sense as I can make it. So a lot of people, they would say, this is the, this would be, in my opinion, right, that wick there, that would be my higher low, okay? Let's take this back. And this would be my higher high, all right? Not this, even though that's the highest point that it got to. Indicators will tell you that's the higher high. Indicators will tell you that's a higher high. For me, the candle didn't fucking close, all right? So where the candle body actually closed is my higher high, all right? So, yeah, it broke above, but it didn't close. So that's my higher high right there. I'm always going to use the body. I'm not going to put my higher high up there, even though that's what people are going to say, that and indicators say. But I have found from trading that if the candle body breaks the wick, which it did, this candle body broke the wick, until this candle body actually closes, there is no higher high. Do you get me? So, yeah, you got to wait for the candle body to close. So, still no new higher high. Higher high, okay? Candle body closed above this swing point. So, that's another thing too. I need you to like look at things and go, like structure wise, okay? You need to look at this now and try and take this in without getting too confused. I wish I could block this off somehow. Block this off. I'm just gonna block this off. I don't want to see the thingies through there. Fuck's sake. I wish I could like pure hide those candles. I'm just gonna have to pull it across. That makes more sense. Right, cool. So swings, actual higher highs, actual higher lows and structure. Take it back. Perfect example. So this technically, this gray candle there is a pullback. So you'd say, all right, this is higher high, this is the higher low, higher high, higher low. But for me, this is not good enough. This is just square. This is just a block, right? That block there is not good structure. So a lot of people would disagree, and they can. That's absolutely fine. That's what trading is about, innit? We're supposed to disagree on certain things. But for me, actual structure, actual higher highs and shit, that wouldn't be it, all right? It need to be very, very noticeable, curvy. It needs to have a curve. So unless it got a curve, I can't put a curve around this. It's fucking square. I can put a clear curve around that. So to me, that's structure. That's my actual higher high. So actually, let's make a test. Let's do a test. This is going to be interesting. Higher highs, higher lows. It's got to be a thingy for this. All right, yeah. Let's take away the breaks of structure and shit. I've never used this indicator before, mind. I'm just only now using it. All I want to see is market structure. There we go. There's the swings. It is working kind of how I would say. Okay, so it's using the fucking wicks. Now that's where I disagree with them. For me, like, yeah, that's the highest the price got, but it came back down and it closed there. So yeah, the higher high, all right. But for me, that's it. Until the body gets broken, which it did there, then there's the new high there. That would be it for me, all right. So people are going to debate on these, but let's let this run for a sec. New higher high, okay, cool. It's not showing me higher lows. It's showing me a lower low, all right? So there we go, lovely stuff. This is where an indicator can fuck you up. This is exactly where I was trying to get my point across. That's not a lower low. Do you know why that's not a lower low? In my opinion, because it just wicked. It only wicked. So for me, and my strategy, that's why I'm saying this indicator is telling me there's a lower low. So take it back. You're going to see that and you're going to say, oh, it's not even showing anything now. Great. Oh, it's a shitty indicator anyway. I'll let you know that much. It's late as fuck. But basically it's telling you this is your lower low. So say that indicator showed you that at that time. That's where you're going to go. It's a reversal, bro. It's a reversal. You know, like if your mindset is set to thinking that this wick, because it broke below these, is the lower low. No, it didn't close. The candle refused to close. So yet it came down. It didn't close. It closed above the bodies. And it fucking carried on up, all right? And that's a little bit of a liquidity sweep. That's just a little tiny grab of the liquidity that's below this level, all right? That's all that is. So there's liquidity there. People who missed their opportunities, all that stuff. That's all that is, all right? So the whole point that I was trying to make is candle body, candle wick, okay? Just a random ass candle. Let's change it green. All right, so we got a bullish candle. Majority of you are probably going to have green candles for bullish. So this is as high as the candle got to. This blue line is as high as it got to. Okay, but that's where it closed. This is as low as price got to. This is where it closed. All right. I mean, opened, sorry. Opened. My bad. So the candle opened there. Got this low, got this high, and then closed there. So it's important to understand. That's why I use the candle bodies, not the candle wicks, all right? So I don't believe that if a wick fucking wicks outside, that's a change of structure, that's a lower low. Like, no chance in my mind am I saying that everybody jump out of this uptrend because of this right there. It ain't happening. So that's why I say zoom out a little bit. Take a look at where the curvy areas are. That's a higher high. To me, this is the higher low. All right. I'd say this would be my higher high. All right. Clear stuff. Higher low. Bodies. Okay. So let's test that. All right. Let's take my line and let's pull it up. Higher low. Higher low. Higher low. All right. So until the fucking candles close below this point, then I'm not interested. I'm only looking for buys. It can wick below it, but it needs to close. Bang a 1 in the chat if you're all with me so far. All right. This is making sense. And if it's not, then that's fine, because I'll keep going, but I just need you to know that, like, these wicks are only wicks. The candle bodies is what you should actually be focusing on. Okay, if you're trading candle charts, which most of us are. So let's just keep it going. All right, so we got a new high. Because why? This candle there, this one, broke and closed. It closed above. It left a wick. Yeah, it could be a liquidity sweep. But still, that's our new high. So this candle body there is our new higher high. And our new higher low, sorry, would be there. So this is basically, until this fucking line there gets closed below, we're still bullish. We're still bullish. All right, cool. Let's pull it up. All right, so you could put this there now, or you could put it there, even though I don't like it because it's pretty square. There's, you know, like, to me, I'd say until price comes all the way back down there and breaks that, we're still bullish. All right, so, okay. You see? Do you see? So I hope I'm making points here. I just hope that I'm making a point, right? Let me just pull it back. If you was to have pulled your higher low up to this area, all right, like I just explained, there's no curve. There's no round, all right? There's just a fucking square, look. It's just square. Like, there's no curve. So if you was to have pulled your higher low up there, and as soon as a candle broke through it, okay, yeah, you might have been able to get a good breakout, or really is messy as shit, because I'm still bullish. My whole thing is I'm bullish until this fucking line down there gets broken. So while everyone's getting stopped out, I'm still bullish. Do you know what I'm saying? That's the reason I wouldn't have got stopped out if I was technically trading that way. Like, I hope this is making sense to you lot, man. you know, if you watching this on a replay and you got questions, go to the questions section in the Discord. And yeah, but like I said, I honestly until that level they got broken, I was bullish. So let's have a look now where my higher low would be. My higher low would be there. My higher high would be obviously up there, right? So candle bodies. Now you could put your higher low there. You could put your higher low there. Or you could keep it where the actual curve happened, right? Because if you look and you zoom out and look at it, that's just a straight line. Yeah, there's structure on the 1 minute time frame, but we're looking at it on the 5 minute time frame. So that's just a straight ass line. Like this is actual structure, okay? All right, cool. Boom. Higher high. Now we have a curve. We do have a curve. Guess what it does? It fakes us out. But that could be an indication now that we just closed below this higher low, because it is a curvy one. Like I would have counted that as my higher low. There's actual like a curve there. So does this switch? Is this the beginning of a reversal? Very, very choppy. All right, so let's put this up there. All right, I'd be forced to move. Okay, so yeah, so see, I done this now. Look, all this choppy, square, nasty shit. You're looking for fake outs again. So you've just been faked out. We're still bullish until that line gets broken. Simple. Look at it. It's still bullish. Like this is still got to be the higher low, because all of this is just fucking nasty bullshit, right? It's ugly. There's no curve to it. And then you see this. So that's clearly a higher low. That's a higher high. So let's bring it back. All right. Don't freeze on me. Okay, so out of the two of them, if I had to choose my higher low, it would be this one. A lot of you would choose that one. That's absolutely fine, you know. But for me, until this line around there gets broken, I'm still bullish, technically. Right, just because of how I'm looking at it. I'm looking at it and I'm just eyeing it up, and I'm seeing the high, like the actual curves, all right? Curves. A curve. I'm just trying to drill this into your head. That's all it is, all right? And it got to be candle bodies. So candle body, all right? This was the higher high until this fucker broke. So boom, it breaks. Right, that's kind of a curve. I mean, this put it there, this test that. Until that gets broken, we're bullish. That's basically how you avoid a lot of fake outs, by using the actual curves and other nasty, shitty stuff that you can't draw around, because you're asking to get swept. You're asking to get swept. Look at it. Like, if that was your higher low in your head, and this is your higher high in this range, soon as liquidity from this area gets swept out, which we know it does, because we just seen it, soon as liquidity gets swept out, boom, sweeps it. Now it can carry on his merry way. So that's how I see structure anyway. Probably baffled a lot of you, but yeah, fuck the wicks basically. Candle bodies. Wicks can wick, but if they close back below, do you know what I mean? Wicks are only good if you're trading breakouts and you're smashing and you're grabbing. That's a 5 minute time frame. And it's the exact same thing for a downtrend, so I don't really need to go into that, I don't think. Let me take a look. I mean, we could, but I don't even know when the downtrend starts, because apparently it was just fucking blowing to the moon. But see, this is perfect though to look at. You've got to look at this stuff and go, a lot of you are going to get caught up in this and think all of these tiny little moves are structure. So every time you see one of these lows get broken, like, you're going to go, we've just broken structure. But we haven't though, because test time. Get ready. Keep your eyes sharp if anyone's even still there. Okay. One. All right. Okay. So 1, 2, and sorry if I'm taking ages doing this, I'm 3. Which one would price need to break below? All right, which one of these would price have to break below for me to believe that we're actually bearish? 1, 2, or 3? From what you've just watched, which one of these? I'll put a line there if it helps you out. 1, 2, or 3. Okay. 2. Okay, we got 2. Jay is invested in this boot camp. That's what I like to see. Don't be scared. Give me your answers, because there's no, you know, you could be right, I could be right. And I don't believe in rights and wrongs, but sometimes there is wrong ways. But okay, 1 and 2 so far. I'll say mine right now. I'll give you whoever's thinking, if there is anyone thinking, 10 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right. So, okay, I would have chose 1. But 2 is valid. So 3 is fucking not valid. All right. So 3, let's just get rid of 3, and let's keep 1 and 2. Now, why is 1 and 2 valid? All right. Like, I would have chose 1, because for me, this is the, well, I mean, like, now looking at it, I mean, 2 looks pretty clean as well. So 1 and 2's right. 1 and 2's correct. All right. But for me, for some reason, just looking at it, I think to myself, like, if you was to go to the 1 minute time frame, number 1 looks cleaner. Number 1 got the more of a curve. If you want to talk about curves, all right, look, curve work. Look at that. All right. Then number 2 got a curve though too. But number 3, no curve. So you gotta be curvy. That's the fucking whole moral of the story, right? If that bitch ain't curvy, leave the fucker on the sidewalk. So we've got 1 and 2. I'm gonna choose 1 though. But let's just say you chose 2. That's absolutely fine. Okay. Boom. So let's just say this is not valid structure to me. Get that away from me. That's ugly. All right. Until one of them get broken, we're still bullish. So you see how if you did choose 3, if you chose 3, then you would have been faked out and it would have carried on. That's no structure really. That's not good structure. That's like, as soon as you start seeing structure and going, nah, you ain't tricking me. This is fucking bullshit. This is absolute ugly. Like, and I don't want to be so aggressive about it, but it is. So now we're going to go and put this there. That's valid. That's cool. All right. This is really horrid, but you know, I mean, we're still bullish until this gets broken. Now this is valid to me. I mean, this is kind of curvy. This is not. This is not. This is not. This to me is. So until this gets broken, we're bullish. Okay. You see, like, I need you to see this. This isn't like amazing stuff, all right? But yeah, okay, yeah, you could have definitely caught a quick scalp. Fair enough. Could have caught a nice little quick scalp on a 1 minute time frame, yes. But overall, the fucker's still bullish. All right, so we know what happens anyway. Boom. Yeah, I mean, so I just hope that sunk into your heads, basically. I hope it's slowly getting in. I need to drill it into your brains, because that's kind of what I was taught by Alex Gonzalez, if you know him. Alex Effects. All right, they call him a scammer, whatever. Call him whatever you want, it might be. But I learned them kind of things from him. So, you know, respect where it's due. As soon as you really realize what actual structure looks like, it's a lot harder to fake you out, man. It's a lot harder to fake you out. So, also, like, I'm going to do it one more time. Like, I'd say this gap probably puts a lot of people off, but let's just not look at that stuff. Just look at this. Until this gets broken, okay? All right, because this wick is not our higher high. Fuck what the indicator told you. Yeah, that's as high as price got to, but that's not my higher high. All right, this is my higher high, where them kind of bodies are. So until this level down there gets broken, we're still bullish. Okay, this is how you can avoid the fake outs and catch the breakouts in the right direction. All right, so still fucking around, wicking it. See, you see. So say we were waiting for only buys because we knew until this level down there got broken. Let's get rid of that. This down there got broken, or even this. Look, this didn't even get broken. Even if you use this little baby curve there, candles came down, fucked around. All right, might have faked you out if you're using the bodies. I told you it would have been there for me. So in my head, if I'm thinking, yo, I'm only looking for buys until this gets broken. That's how A+ setups are born. You know what I'm saying? So boom, get your breakout, and there it is, as easy as that. Fucking hell. I mean, 20-point stop loss. You're targeting this wick up there, and that is what happens when you know what structure is. That's what happens when you look for only A+ setups. Okay. Are you with me? Can I move on? All right. Say 1 if you're with me and I can move on, or 2 if you still need some more. But I hope that you're like letting this sink in. I hope that you're going to catch some gems from this, because I do believe that, like, I know I sound repetitive and that, but I have to, because otherwise it's not gonna get into your brains. But when you know this stuff, it's gonna be way better for you to like not get faked out and stuff. So that was just an example of trend. That was just an example of a trend. We didn't even need to do the downtrend because it's the exact same thing. Okay. So if we invert the scale, oh, also if you didn't know as well, you can invert the scale. I'll tell you before we move on, there's this trader out there, I can't remember his name, but he has this theory where he can only sell, like he only looks for shorts, like in his head. So if the market's bullish, it doesn't look right to him. He only likes sells. So he inverts his scale, all right, and he just presses buy. So he just does it backwards, all right? So like how in a fucked up way that looks cleaner than it did when it was bullish. Like if I go back to when it was bullish, I mean, still clean, but yeah, some people find in their head that sells are easier for them to get into than buys. Is mad psychology out there. But yeah, invert the scale is the exact same fucking rules right there. So we've just went over it, so I'm not going to do too much. But okay. All right. So seeing things now that we're not ready for yet. So at that point, that would have been the lower low. You would have had this whole bunch of consolidation, which we'll be learning about as well. When there's consolidation and range, there's going to be a lot of liquidity resting above and below. So until you see a little liquidity sweep, etc., right? But how you wouldn't be stopped out of this trade? How you wouldn't be stopped out of this trade? Okay, so if this is our lower low, all right, well, when that gets broken, this is now our lower low. So this is the lower low. This is the lower high. Lower high, yeah? Correct. Sorry. You wouldn't be putting it there. You wouldn't be fucking with this nasty shit, because why? It's straight. There's no curves. There's no curves. So if this is our lower low, and then we can keep dragging this down, all right, yeah, maybe at some point you'd go, I think this is okay. Yeah, I'll use this as my lower high. If that gets broken, then we're bullish. No, not at all, because it's still an area of resistance. Look at it. Just ugly. There's no actual fucking round curve for me. So that's my lower high up there. So the moral of the story is, until that line gets broken, I am only looking for sells. So the fact that this just came up and swept the liquidity from there, I'm well within my range. I'm still well within my range to look for sells. Boom. That makes total sense anyway. So just go back, watch this video if you have to 1,000,000 times. Let it sink in. That's perfect example of a trend, all right? Next thing on the list. Ranges. I know we kind of did this yesterday, but we're fucking doing it again. So What was the point of ranges? Price moves between support and resistance. No clear trend. Best to wait or trade the range. So let's give an example of that. Because we're literally, apparently we don't even need to look for examples. They're just there. So range. Don't worry about the gap. The gap's horrible, I know, but this is a range. I'm going to turn it purple. So we got the top of the range. What's this called? Resistance. All right, this is resistance. 1, 2, 3. And how many times does it need to react from this area to be classed as a resistance? You know, only once. Literally, as soon as it did this shit, and it pushed down, that was a resistance. So, you know, when you can only tell it's a range once they've done that shit like twice, at least twice. You know, like a double top. Like if it double tops and does this, then you're like, okay, I feel a little range coming on. Also, this talk about bodies too. Again, let's talk about the candle bodies. So these are wicks. They wicked outside the range. This is where a lot of people get tricked out and go, we're breaking out of a range. We're not. You need to see the break and the retest. So candle bodies to me are way more important than the wicks. Just study that for a second. Study it. Study the bodies and then the wicks. All right. And then when we officially break out, okay, we've broken out. A retest. All right. Or we could just easily come back into the range and stay there. But usually is a break and a retest and then a trend happens. Let me put this on because that's pissing me off. Way easier like this. Boom. See what I'm saying? So a lot of people could have got fucking smoked there thinking that's a break and a retest. Whatever. But what I want you to focus on is the liquidity sweep. So after all this build up, after all this bullshit, you include these wicks, really choppy action. All right. You can do this as well. Chris Swaggy C taught me this. I got a fucking dry mouth. 2 secs. Yeah. It's that tea. So there's ranges inside ranges. So you can use your bodies and you can use your wicks. So just use them both. All right. We break outside the range and you think, oh, this is cool. Yeah, we got a little break and retest going on. Just understand there's going to be a sweep of liquidity from the highs or the lows. All right. And seeing as we're overall bullish, when you zoom out, expect a liquidity sweep to the downside before popping off to the upside in a major way. All right. So range is what we can either wait for the break in the retest, the liquidity sweep, or an actual shift in structure. But this is absolute dog shit price action. I'm not going to lie, it is making lower lows, but at the same time, it's just ranging, still stuck in a range. Look at that. So sometimes ranges go on for weeks. Sometimes people can't understand. This is a 5-minute time frame. We can range on the hour time frame, the 4-hour, the day. All right. Honestly, you can range on a daily time frame, but then obviously we go to the lower time frames and catch trends and shit. But this is horrid. I mean, look at this from Friday. Sorry. Yeah. From Friday to Tuesday, that's 4 days, 1 hour and 30 minutes. Price was constantly fucking people over and doing this. All right. Because you need to zoom out sometimes, look at the higher time frames, say, what is it doing? Look at that. Look at the state of it. Yeah, there's fair value gaps and shit you can look at. We're not that deep into this yet, but I just want to do some examples on ranges. So let's go back to that range and let's actually see if we can get some opportunities to trade. So you marked up your range on the 5-minute, let's say, okay? Yeah, where's our range? Where was that nasty looking range? With the gaps in it. There it is. Cool. Let's just mark up this range. And say, right, at this point, we kind of know we're ranging. We're waiting for some shit to happen, right? Boom. We can include these wicks. We can just include the bodies, right? Whatever. All we know is we're in a range. Just go to the 1-minute time frame. So in ranges, you still get support and resistance. So the gray boxes is going to be the it's kind of like, let's just put it red. Resistance, and then we're going to get get my way. I'm going to put this one green. Cool. Right. So we're breakout traders. All right. Now, this is why I say about ranges inside ranges. These are the wicks. These candle bodies, these big ones there, they're just wicks on a 5-minute time frame. So, sorry that it's so slow. Look, they're just wicks. Wicks on a 5-minute time frame. So, if you're trading a range, you don't want to like mark up the range on the time frame you want to trade on. So, say you want to trade the 1-minute time frame and there's a range on the 1-minute time frame, just don't trade. Don't be trading. But if there's a range on a 5-minute time frame and it's doing this, we can go to the 1-minute time frame and then we can look and go, okay, cool. So we got, you know, a support there. We got a support down there. Our wicks, whatever. What we're looking for is to trade back up into resistance, or even just half of it, a little bit of it, whatever. Don't always expect it to get back to the top cleanly. Do you know what I'm saying? All we're looking for is an opportunity, a breakout. Here's the breakout, we're done. Literally, that's all it is. So once again, this brings us back to the lesson we was just learning anyway, which was structure, right? So, not bad. It's okay. So look at this, right? Why is this the lower low? Why is that a lower low? Because if you zoom in, all right, just take a look. Zoom the fuck in, right in there, under the microscope. This candle closed under there. So that closed, all right? That's a lower low. So technically now, this candle's my lower low. I can make this one my lower high. All right? I hope I'm saying this right, because sometimes I actually get it wrong. Lower high, lower low, yeah. So when that gets broken now, we're good to go. Okay? Boom. It's broken. Target all this little shitty bit of structure, even though, you know, it ain't my high highs and my lower lows, etc. It's structure. It's still targets, all right? Boom. That would have been me done out the trade, just from trading inside a range. 20-point stop loss, almost a 1 to 3, all right? Don't know how far it goes. Actually makes it to the top. So that's how you can trade in a range. But that's a little bit of multi-time frame analysis too. But yo, hopefully you're all with that. And if you're watching the replays and you've got any questions and stuff, remember you can just reach out to me on the questions thing. So yeah, ranges, we can either just trade between the support and resistance, or we can wait for the break, the clear retest. Let's see if we can get an example of that actually. So let's just see if we can get a little example of a break and a retest. And that was a fake out, obviously a liquidity sweep. Fake out, sorry, a little bit of a sweep. As soon as we see that, all right, you got to remember now, yeah, we've broken out, but this is where we'd be going to our 1-minute time frame, and this is also another way we can use our structure, proper structure, higher highs and higher lows, the way that I taught you, right? So if we go back to the lesson just now and we were talking higher highs, we'd say this is our higher high, yeah? Now technically, what did I say? I don't like stuff like this. I don't want to call that my higher low. I don't want to call that my higher low. I want to call this my higher low. So until we fucking break below this white line all the way down there, because of the curve that I keep mentioning, we're bullish. So, no, I'd only be looking for buys, but even though we know what happened because of the liquidity sweep, right? But let's just say that that would have gave me what I wanted. That would have gave me what I wanted. Just knowing that we came back, we retested an area, okay? We're not looking too deep into it. We're not trying to stay in there for a year. Right, all we're looking for is a little break and retest and a little breakout and an entry. Or you could even just enter from that rejection wick, whatever, right? A lot of people do. They just enter like this and they target the top. Right? You get my drift anyway. There's ways to do it. For me, that's not personally how I would have traded that. I would have back. would have lost that trade, I think. Next, if I was waiting for the break to the ups. No, I wouldn't have. I dragged this down. This is really ugly, but still, fuck it. I'm looking for the breakout. There it is. You know, I enter on them breaks. What is it? NASDAQ, so like a 10 pip stop. Little 1 to 2, little 1 to 1, whatever. Boom. That would have been me though, because I know that this is the overall target, really. Just that wick there, that little 1 to 2. So yeah, that's a break and a retest. But then you see what happened anyway, because we're on the 1 minute time frame. You see what happened then. Came and it swept that liquidity out, boy. So that little baby move there means fuck all. Because when some shit like this happens, wherever it is, you'll be in trouble. I bet, and that's the news anyway. That's got to be a news event. That has to be. That's a fucking liquidity sweep if I've ever seen one. Because of all the people that put their stop losses in this area down there. This is a stop loss area, and this is also a buy order area where people are like, okay, I missed my opportunity. I'll just place a couple of buys. Ra-ta-ta, you get a drift by now. It comes in, it triggers people's buys and stop losses. Got people thinking, yo, I'm in the profit now. They get off their phone, they walk away from the markets, and then it does some crazy shit like this. Right. Back down, sweep some more liquidity. Wasn't ready to go. Do you know what I mean? So yeah, that's a range though. Ranges are horrible, they're dangerous, they're nasty, and it is best to stay away from them or choose a different pair. So always have like 2 pairs in your arsenal, like gold, NASDAQ, maybe Forex, you know what I mean? So what's next on the list? We're almost done. All right. It was only, I just wanted to drill into your head today, proper higher highs and higher lows, and why candle bodies matter more than candle wicks, in my opinion. All right. So, which I think I proved that anyway. I genuinely could prove it over and over and over again. And I don't want to sound like a dick or come across being cocky, because that's not the point. I don't. But when you squint out them eyes and you do go, no, let me really take that in and look at it. Where can I get my little pencil and go, here's a curve, there's a curve. You know what I mean? Like you got to kind of look at the waves. If it's just straight and choppy and nasty, this is not good, you know? Like, so that's why I'd always say, you know, this is obviously the high at that point there. And this would be my higher low. And once again, look, once again, the fucking thing came down. And where did it react from? It reacted bang on from this candle, right from your higher low. So if you put this as your higher low, all right, this little one there or this little one there, you probably would have been faked out. But me, until the candle body closes below that, I'm looking for buys only. Get what I'm saying? Nasty, choppy shit, I know. But that's why I wouldn't have been stopped out there. I wouldn't have been stopped out there anyway. I wouldn't have been faked out, sorry. Would have only been looking for buys. So it made it back up. It made it all the way back up. Do you know what I mean? Before doing that nasty drop. But still, I wouldn't have been faked out at the time, because none of this to me is even my new higher low. Like none of this. This is all ugly and really shitty and wicky and square. I need to see that nice little bit of curve going on, that bit of structure. So that was the point of this whole lesson. What to say? Let me just take a little quick look if there's anything else that I've missed. Ranges need patience. Yeah, we got that. Price bounces. Yeah, we got that too. We got trends. Pioneers. Yeah, we've done it all. I think we've covered this lesson. So, basically, is there any questions before I go? Because you can also drop a question in the channel that I set up for the questions if you're watching this on a replay. But like, I hope that everyone who is watching have got it in their heads right now why the candle bodies matter more. Like, I just needed to drill that into your head so you don't get faked out by these wicks and stuff, and you actually understand when a trend changes and when a trend shifts. The candle body has to close below the bodies or above the bodies. Okay? Hopefully that made sense. Yeah, there's no questions now. Bang a one in the chat, the people that are there. If you're happy with what I just said and showed you, kind of thing. Because even though we're gonna have the simplest breakout strategy ever, which we do have, I need you to know these things. Like, I genuinely need you to know when a trend is shift, or like a trend is shifted. I need you to identify them. Do you know what I'm saying? Yeah, just need you to know. That's all. Cool, sweet. But yeah, it's a little bit, it's crazy because, like, it's so confusing until you start to figure it out for yourself and you understand these wicks are just sweeps of liquidities. These wicks are just fake outs. Actual breakouts are certified breakout is when a candle body closes. Right? So it's fucking crazy, man. Honestly, the wicks, they really mean nothing to me anymore. That's how I kind of don't get tricked as much as I used to. But at the same time, I don't day trade anymore. When I was day trading, like, this stuff used to get me all the time. But yeah, I feel like I can leave that lesson there now. I don't think there's anything I missed. It was kind of like a repeat of yesterday, but more in depth. So if I was to ask you lot now, you know, fuck yeah, I'm gonna ask you. I don't think there's anyone really there, but I'm still gonna ask. And if you're watching this on the replay, then feel free to just join in and bang it in the chat and say, "Oh, I would have said this or that." But I'm gonna give you 3 options. All right. 1. Give you. Yeah. Boom. Okay. So look, because I'm not gonna mark them up with the numbers anymore. All right, but this one is number 1. Okay. This one is number 2. This one is number 3. So if we was currently right now there, which one would be our higher low? Would it be 1, 2, or 3? Where would you put your higher low? Where would your breakout like line be? Okay. Think about it. 1, 2, or 3. Where would it matter? Like, if we was to break there now, would we be bearish? If we was to break this one, would we be bearish, or this one? So number 1, 2, or 3. Jay's typing. 2. 2. You're correct. 100%. Why? Because you cannot have a higher low without a higher high being broken. Okay. So this don't even count. That's not even, that's a trick. That's just, that ain't even one. That's nothing. That was a trick question. Okay. So a lot of people would have said, no, but this there, that's the higher low. It's not. All right. This is the higher low. This one there is also a higher low, but this one's the current one. This is the one that matters. So until this gets broken, we're bullish. So I've drilled that into your head. I'm glad though that, you know, you've got it and you understand. And I know a lot of you probably already did know, but I just need to like do this for the people that don't know. All right. This is our day today. All right. This is what we're going to be doing. So it's just going to be about scalping. What is scalping? Best scalping times, the scalping mindset, tight targets, and stops. A couple of key scalping concepts. Sorry. And yeah, risk management a little bit. But like I said, this is still a basic week. This is week 1. We got another week, and I will bump up the fucking volume, and it will be tougher. But look, it's not about making it tough, right? And it's about just getting it all into your heads. I hope you watched yesterday's video. Sometimes that can be confusing, I know, but trust me when I say, if you just watch me a few times, let it sink in, you'll get it. So, what is scalping? I don't know why it looks so weird, man. It's because I've zoomed in so much on these things. Scalping is making small profits from small price moves, holding trades for seconds to minutes, high focus, high execution, volume and volatility are your best friends. So, this is going to be good for me to even go through now actually and reset my mind a bit, because I've been like not doing this. All right, I haven't been scalping and taking my small profits and grabbing my fucking money and smashing and grabbing like I usually used to and how I should be, because obviously I know how to. That's why I'm teaching this course, because this is literally the way that I became successful with it, right? Let me just quickly check Discord again. I got PTSD with Discord. Keeps fucking up my streams. Are we still good? Are we still good? You can still see the screen, yeah? The slideshow. Sorry if I keep... All right, I'm going to stop asking. I'm just going to run it, because I don't want to go through all of it and then have to come back and be like, yo, it wasn't this. All right, I'm going to stop asking now. It's working fine. So look, yeah, scalping is making small profits from small moves, or big profits. Make big profits, but the goal is to get in and get out. All right, holding trades for seconds or minutes. But with these war markets, I'll be honest, even holding them for minutes is a little bit shitty. So don't worry, you know me. I come back with a bang every time. I got a master plan. Yeah, I've been seeing profits, not grabbing them. So I've been going against my own shit. So this is going to be good for me to even go through today. So we need high focus as scalpers. Way more higher focus than day traders and swing traders, because they have time to plan their trades. So if you're a day trader who trades, you know, the 1 hour, 2 hour, 4 hour, whatever, or you're a swing trader, you trade the daily time frame and stuff, you've got literally hours and days to plan up things. We hit the charts 15 minutes before the open, and we need to be focused. We need to be switched on. So when it is time to go, we gotta go, okay? And then volume and volatility are our best friends. So, you know, they say the trend is your friend. Well, for us scalpers, I actually agree more with the volume and the volatility are going to be more of our friends than the actual trend is. But both of them go hand in hand together, right? So scalping times, the best scalping times, right? So high liquidity equals tighter spreads plus more movement, all right? This is where brokers and stuff come in, but we'll get into that. If you've got a shitty broker with shitty spreads, change your broker, all right? Because spreads matter with Forex, but obviously most of you are trading futures, so it doesn't even matter. But anyway, the best sessions are going to be London Open and New York Open. Now, right now we're trading Tokyo. So when I came up with this, it was meant for London and New York, and I will be going back to trade in London. But right now, Tokyo's just doing better. That's all it is. So when I end this week now and I take a look at London, I'm going to back test the whole of London. If it was good, I'll go back to trade in London. You know what I'm saying? Because I love London and New York. But anyway, 8 a.m. UK time until about 11 o'clock. In the morning, London time is perfect for trading. Now, this is Eastern time. Oh, sorry. Eastern time? 8 a.m.? No, that's wrong. That's a fucking typo. All right, so 8 a.m. in the UK, in my time zone, is London Open, all right? And, yeah, it is. 8 a.m. And then 8:30 a.m. Eastern is the New York, all right, on 9:30. The 9:30 is the stock market open, but that 8:30 is what we call the pre-breaks. That is actually the New York Open, all right? So that's when volume starts to pop off. So I say to you sometimes, actually all the time, if you want to avoid the stock market open, you can actually trade an hour before the stock market open, right? So it's kind of confusing, but in London, UK time, my time, 7 o'clock in the morning is like pre-breaks and the early start for London session, and then 8 o'clock in the morning UK time is the actual time start trading. Now, if you're in America, forget this. 8 a.m. obviously isn't London Open for you lot in America. I'm sorry about that. That's a mistake. So just figure out what 8 a.m. in the UK is. Wherever you are in the world, just Google it. That's where you want to be trading London session, around that time, okay? That's where the volume is, and that's where the big pops and the moves are. Sorry for that typo. And avoid low volume times. So basically, usually, low volume is the Tokyo, right? Or after the market reset is really choppy, is slow. But Tokyo's been absolutely fucking lovely for a few weeks now. So Usually though, Tokyo is the session most traders avoid, especially breakout traders. But yeah, basically best scalping times are always going to be London and New York usually. But Tokyo's been alright. Tokyo's been alright. Especially because we're on the 1 minute time frame as well. Let me just jump on and see if there's any questions. Oh, we're good. I will check every now and again to see if there's questions. But seems that we're good. Cool. So next, scalping mindset. We're going to focus on execution, not prediction. Let me just wet the whistle for a sec. Hope that's the right saying. I don't know, that doesn't sound right. I don't know what I just said. Yeah, scalping mindset. Focus on execution, not prediction. So I don't care about what we think's gonna happen. That's why I always say, you know, New York session. I've tried changing this so many times. I've tried changing the way I approach the New York stock market open, and the point is, it's no fucking point. Focus on the execution. So that's why I always say about don't try and avoid a fake out. Just get in. If it breaks and it fakes you out, enter the other way. And if that fakes you out, call it a day. You're gonna get bad days and good days. But you know, if you're absolutely disciplined, you're gonna be fine. Like, focus on one pair, I'd say as well, because splitting the screens is kind of more advanced. But if you trade in Nasdaq, choose Nasdaq. And if US 30 had a great day that day, all right, who gives a shit? You can't predict if US 30 or Nasdaq's going to be better than the other, because I've seen choppy price action before and said, oh, I'm going to stay away from that. I'm going to choose the one that's actually trending the nicest. And then the choppy one's been the best breakout. So is whatever you choose. If you say I'm choosing Nasdaq from today, I'm only trading Nasdaq on the stock market open, 9:30 Eastern, you stick to that pair and you stick to the plan, all right? You don't think about predicting, you know, it might do this, it might do that, because it's a fair value gap, blah, 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 blah. It's a fucking open of a stock market. It's New York, it's crazy. And I'm specifically talking about New York, right? Because it's way crazier than the rest. But it's there to liquidate people, manipulate people, get people in and out. So that's why I say just get in, get out, take what the market gives you. Literally, it says it right there. Take what the market gives you. Protect your capital at all times. What does that mean? That means that when we hit a 1-to-1, usually move to break even, all right? Or just smash and grab, get that money, or close. Don't be scared to close neither, because a lot of people will hold their losers, which I've been doing recently, like a fucking moron. A lot of people will hold their losing trades and let that shit hit the stop loss, but they won't take the money. Like, I'm talking right now, all right, and I can feel it in me. Like, it's pissing me off, because it's like I'm speaking to myself. I'm teaching myself right now. Like, what it says there is what I haven't been doing for the past few days. All right, small wins compounded daily create massive results over time. That's what happened to me. So them small 250 wins, the $500 wins on Top Step, all compounded up, and I took my payouts. That's how you do it. So say you got a 50K account, you passed, cool. Just go for like a $250 win per day. Grow the account, all right, and take what you can from it. All right, but the small wins, that's all you're going for. Some people go for massive wins. That's what I've been starting to do. So my discipline, look, discipline equals talent anyway, right? And that's our talent as scalpers. So we need to be in, we need to be out, we need to take our money. Now, like I'll say it one more time because I need it to sink in my own brain too. I haven't been doing that. I haven't been taking my small wins and compounding them daily. I've been fucking saying, 500 ain't enough, 1,000 ain't enough. Who am I to say that? Like, who do I think I am? So sometimes I need humbling like this, you know what I mean? But yeah, scalping mindset. Let's move on. All right, key scalping concepts. And we ain't even gone to the charts yet. I'm just going to break down what we're going to do today. So, tight targets. I say look for 5 to 15 pip targets, all right, depending on the pair and volatility. Now, that means if I'm trading gold during London session, you see me use a 4-point stop sometimes. The most I've ever used, I think, is like 8. So like 4 to 8 points, because it's London session. The volatility isn't as crazy usually as New York. Now on New York, I might want to risk maybe 10, 15. All right, so that's why I've put 5 to 15 there. But realistically, if you're trading Nasdaq or US 30, minimum is 10 pips or 10 points. So never use a 5-point stop loss with Nasdaq or US 30. All right, jot that shit down somewhere. Remember that. Don't be using 5 pips or points on Nasdaq or US 30. So more like 10 for the London session or the Tokyo session if you're on a 1-minute time frame. If you're on a 5-minute, 15-minute time frame, you're going to be wanting to use 10, 20 to 30, maybe even 40, maybe even 50 is whatever what you're going to learn by the end of this course is whatever looks right. So if we come to the charts and we get our ruler out and we look at how many pips or points a candle is averaging, right, before the New York Open, let's say, and every candle's around about 30, 40 points per candle, then I'm not going to want to use a 10 pip stop loss, am I? Okay, so it all depends on volume, how big the candles are, what things are looking like on the day. So I switch between things, but just remember that if you usually use like one standard like mini, say you just use a mini or 10 micros that is, and you go in with 1 mini and 4 points on gold during the London session, 1-minute time frame, right? If you trade the New York and the average candle's about fucking 12, 13 points, understand that you need to like lower the amount you go in with and make the stop loss bigger. So if you're going to make your stop loss, say, 15 points instead of 4, because there's loads of volume, then you're going to want to use around about 2-3 micros, right? You're going to want to really lower that shit because the volume is huge. So that means that it's going to take you into profit fast, or take you into the red really, really fast, all right? So, yeah, don't get greedy. Hit the target, take the profit, and move the fuck on. Another thing that I haven't been doing recently, all right? 1-to-1s, you're always going to get a higher win rate. 1-to-2s, decent. 1-to-3s, you're pushing it a little bit, right? But that all comes with next week and the more advanced stuff. We'll talk about trailing stop losses and shit like that. All right? Yeah, so tight stops, use small stop losses basically. Don't take 5 to 10 pips literally, all right? That's just the lowest. That's the lowest I would ever go scalping. That's why I've put it like that, all right? So keep these ones in your mind. Gold, 4 to 8 points during London. Or just look at, I'll teach you in a minute anyway how to use the ruler and check the average candle size. And Nasdaq and US 30, these 10, 20, 30, maybe even 40 or 50, but we'll get into that in a bit. Keep risk tiny per trade. So that's up to you, actually. Keeping the risk tiny per trade is actually up to you. You risk more and trade less. So like if you risk 1%, 2%, just trade once. So if you're risking 0.5%, you can trade twice. All right, and like I said before, cut the losers fast. So don't be letting those losers run. Don't be scared to bang a close button, right? Because people find it hard. They're like, there's so much energy to just tap the button and press open and close. No, it's not. It's fucking not. Like, I literally go, sometimes if I'm passing a prop on my own, I'm reckless. Bang, bang, in, out, in, out. As long as I know what I'm going for. I'll take 15, 16 trades in a day. But I'm not trying to teach that. So, high probability setups. All right, so trade support and resistance, bounces. Literally taught that yesterday. Use trend direction for pullback entries, so taught that as well. Basically, we want to use our support and our resistance. We want to be trading from resistance down or up from support, yeah? And we're going to be using trend direction overall for the best A+ setups. We're going to be looking for breaks of structure on the lower time frame. So basically, I'll get on the charts and break all this stuff down anyway, but it's kind of yesterday's stuff. So if we're looking at the 15-minute time frame and we're bullish, we're going to be looking for our entries on the 1-minute time frame. That means that if we're bullish, we're overbought, we're just going up, and we're expecting a pullback, we're going to go to the 1-minute time frame and look for the break of structure and the counter trend trade, all right? And use confluence levels plus trend, volume, and momentum. Yeah, all of that it adds up to a high probability setup, right? So yeah, we do want to just be trading in the direction overall of the higher time frame, which could be a 15-minute or an hour direction, but I'm going to be trading on a 1-minute or a 5-minute time frame, etc. We'll get onto that all anyway. I don't want to get too deep with these slides. So low risk per trade. Yeah, I think I just kind of said that. So 0.25 is to really, really like take your time with a prop firm, stay in the game. I advise you to probably go in like 0.5, the lowest, 1%, maybe max if you're trying to be smart. But, you know, when I'm trying to pass prop firms, sometimes I use 2, 3%. I'll risk half the account, you know what I mean? I'll risk 50% of the account if I know what I'm risking. If I'm okay with risking 50% of the account, that's fine. But if you want to be smart, the real way to do it is this: risk low to stay in the game, because people are trying to get payouts in the same week. They want to pass in a day and get paid in a week. No, you need to think about like passing in a week and getting paid in a month. You know what I mean? Or maybe even passing in 2 weeks and getting paid in a month or 2. All right, so survive to scalp another day. Consistency comes from managing risk. It really does. So risk management's the only thing that keeps anyone with a good trading strategy profitable. I don't give a fuck who you are. You could be Mamba, Patrick Wayland, where his name is, Tory Trades, any big trader, all right, legit ones. The only way that they actually stay profitable is by managing risk, and that's why I don't blow accounts no more, unless they're props. I blow props. They're easy to blow. It's actually hard to blow a personal account when you've got a decent amount of coin, because it's like, if you're disciplined and you're managing your risk, how are you going to blow the account? Do you know what I mean? If I got a 10k account and I say to myself, I'm going in today and I want to make a grand or 2, but I'm willing to lose 1,000 max, and I see it hit 1,000 and I'm down, I get off my phone, I put it away, I don't even look at the charts, like, because I know I'm risking a lot. I'm risking like 10% per trade. You know what I'm saying? With a 10k account, I'm risking 10%. So it's like, I know that. So I know what I'm doing. But that's why I manage my risk so much. That's what I'm trying to say, basically. I know how to take a loss. I know how to take days off. People find it hard to walk away. So risk less, trade more. I just explained that. If you're risking 0.25% per trade, you could take 4 trades in a day. And if you lost all 4, you'd only lose 1% of the account. So you can trade more. But risk more and you've got to trade less. So if you're risking, like I was risking 10% per trade, you can fucking take 1 trade and that is it. You're done. Get off the chart. All right, trade when the market is active. Avoid dead markets, news, spikes. Oh yeah, so this is interesting. Avoid the markets, obviously, when it's dead. Now, last night, did I do that? No. Did I trade Tokyo when it was absolutely dead? Yes. Did I pay for it? Yeah. All right. The markets was dead. NASDAQ did a bit of a decent move, but gold, I don't know what the fuck I was doing even looking or entertaining that chart last night. So I had to learn the hard way, but avoid dead markets, walk away, get off the charts. So I'll start doing that more. News spikes. Now, when news comes out, you can either make a shit ton of money or lose a shit ton of money. My advice is stay away. Just stay away. Literally, I've traded the news before. I've had good outcomes. I've had bad ones. But like, if we was to do it, like say I did bring full port Fridays to the Discord, which I might, because it sounds fun, right? And obviously everyone has to understand that's fully gambling though. But full port Fridays would be a news spike, right? So I'd be waiting for the news on a Friday and I'd be banging buy or sell and risking the whole account. $100, 2,000 leverage, let's fucking have it. You know what I mean? That's the kind of thing it'd be. Right, how to scalp. We're going to get onto the charts in a minute. Let me just check if you're still with me. Oh yeah, sorry, I didn't even check. Is there a higher probability based off structure to break out harder versus a different one? Is there a higher probability based off structure to break out harder versus a different one? Wait, they're trying to ask me that in a different way, bro. I might not be reading it correctly. So yesterday's video explains that. An A+ set, I'll do it again today, but A+ setups you got B setups and you got C setups, all right? Like, yeah, range in market, like last night's Tokyo one during gold, that was it was stupid. It was absolutely ridiculous. It was a terrible idea. So yeah, the high probability ones would be trend, of course. Yeah, it'd be trend, it'd be structure, it'd be clean looking markets. Choppy markets, also, you know, known as dead markets or low volume markets, are bad to trade. But sometimes, you know, if you've got a consolidation on a 4-hour time frame and it's going up, down, that doesn't mean on a 1 minute time frame there's not going to be loads of volume and awesome opportunities. So it kind of depends what time frame you're on. But the lower time frames that you're on, if they are choppy, the markets are genuinely bad. Like if you've got a 1 minute consolidation, 5 minute consolidation, 15 minute, for us scalpers, that's terrible. But we can get away with the 1 hour and the 4 hour and even 30 minute and 15 minute consolidations. We can get away with those and the ranges as long as we're trading the 1 minute. All right, I'm going to quickly get back onto the slides because I'm almost finished with it. How to scalp. Right, identify the trend on higher time frames. Now, this could be, like I just said, 15 minute, 30, 1 hour, 4 hour. Do I think 4 hours overkill for a 1 minute scalp? Yeah. So my higher time frames are going to be 15 minutes, 5 minutes. All right, I'm not really trying to go between different time frames, but I will still teach it. Because it's good to, like, you know, say, okay, look, the 1 hour's super overbought. The 1 hour's just been going up for fucking, you know, 7 hours, 8 hours. Is due a massive pullback. So that's the only time I'll ever really, like, use higher time frames to try and predict, even though I said we don't predict something. But that's day trading. Scalping, I barely even look at other time frames. I'm like, 1 minute's good. There's my liquidity indicator target. Boom, I'm in. So it's kind of like the more simple your trading is, the more money you're going to see, the more profitable you'll become. But the risk management is literally what's going to keep you alive. So identify a trend on a higher time frame. Drop to the lower time frame for your entries, basically 1 to 5 minutes. All right, they're my two that I always trade. I never trade 15. I look at the 15 when I'm already in a trade, just to see, all right, this 15's looking good. This 15-minute candle's looking strong. Maybe it gives me some confidence to stay in the trade. Mark key support and resistance. Wait for price to pull back or break. Enter with confirmation. Take profit at the target. Move on. Next setup. Done. No attachments. All right. So what we're focusing on today, or what I want you lot to focus on today. All right. Maybe even after I've jumped on the charts and done some shit. I want you to master your entries. So, you know, I want you to go to TradingView. You don't need the bar replay mode. Just go to TradingView. I want you to, after we've done this, mind, I'll post this fucking picture specifically for you in the chat, but I want you to go and look. Find a nice, you know, 2 setups. Don't even cherry pick them. Just go to like New York session. See how you would have entered without trying to predict anything. All right? Like I'm going to show you in a minute. We're not trying to predict shit. Right? We're just going to master our entries. That means getting in when it's time. All right, improve speed and decision making. We're scalping a 1 minute time frame and a 5 minute time frame. We've got no time to make decisions. All right, that's why I say to you all, you know, when people are on Twitch, I'm like, yo, if you're missing your setups because there's a delay, I'm sorry, but to be honest with you, a fucking 3 to 4 second delay can impact your trade so much. All right, stick to 1 or 2 setups per session. So if you've got different accounts, you can trade 4 times. If you've got 2 accounts, you can trade 4 times in a day. I say if you lose your first trade, you can take your second one and try and recover from it. Journal every trade. I want you lot to do this. I want you lot to just journal, like, not journal, screenshot your trades. Don't be right. You can write if you want and stuff, but just screenshot your trade. Like now for the rest of the week and next week, just fucking screenshot your trades and look at them and think, did I stick to my plan? Did I enter when it was time to enter? And did it work out? Like, if not, why? Review it and refine it. Because if you review it and there's nothing to refine, like say I get in a trade, I go to NASDAQ, I mark it up, perfect. I got my breakout lines, my support, my resistance, my liquidity levels. They're what I'm targeting. And I enter on the break, whatever breaks first, and it fakes me out twice. Do I need to review do I need to refine my strategy after reviewing it? No, I don't need to refine it. The strategy's fine. But right now, do I need to refine the way that I'm impulsively entering on terrible looking charts? Yeah. Like last night, if I go back and review my Tokyo session, but I can't now because Twitch has fucking blocked my channel. So if I went back and reviewed it though, I'd refine my strategy. Yeah, this is what I do to myself today. I'd say, right, listen, motherfucker. Today, if you see a choppy market, you ain't trading it. Simple. Cool. So, sorry, man. Right. So what was I saying? Those slides, man, they fuck me up every time. So journaling, reviewing your trades, refining things is absolutely fine, but don't keep changing your strategy. Changing your strategy is bad. Like every single time you lose a trade, you don't change a strategy, right? You got to stick to being consistent, and that means staying loyal to your strategy and not jumping into bed with the next fucking trading strategy that you meet. Do you know what I mean? Like you got to just trust it. Trust that it's going to do you right, because it will. So, right, first things first, while you're waiting, let me just quickly review what I got to do. So let's go to NASDAQ. Whoa, what happened today? So let's break it down. Let's do exactly what I was just talking about. So, New York session. Where we at? New York. Let's pull it back. Bruv. New York, where am I? There it is. All right, so I'll come on the charts typically for, 2:30. Sometimes, 2 o'clock, sorry, ready for that 2:30. Sometimes I'll come on 15 minutes before. It doesn't matter. But let's just say, right, cool. I'm there. I'm ready for the New York 30 minutes before the open. Now, higher time frames. This is where higher time frames come in. We're bullish. Cool. So you can tick that off your list and say, I've come to the charts. I looked at the 15-minute time frame. We're bullish. All right. You can even mark up support and resistance and stuff on your 15-minute time frame. I don't. I just keep in mind, all right, we're making highs on the 15. So if I drop to the 1 minute now, I'm technically looking for buys. So, I'm going to be putting my breakout, my support and resistance. So my main resistance right now, we change that color as well because that's terrible. My main resistance right now would be up there because, you got multiple pushes from it. And when we broke below it, we had a massive drop from it. To me, that's a lovely resistance. All right. Then I'm going to go and look for a support. Now, this is like the most recent support. All right. We're kind of at it though. So because we're at it, I would want to look for the next one down, one that I can target if we break out to the downside. All right. So this is how my strategy's changed a little bit from before. But yeah, let's say I did break to the downside now. This is where I'm expecting price to kind of get to and react from. But we're still 30 minutes before the open, so this is how I would be doing shit. I'd be looking like this. Sometimes I would do this, so I'm not going to lie. That's in my instincts right now to do this. So I'm expecting reactions from these areas, right? Support, resistance. Try not to clutter the charts. So we got our trend direction on the higher time frame. Bullish. So in my mind, I'm on the 1 minute, but I'm keeping it in my head that on the open, we could pop off to the upside. And if we did, it'd be great because it'd be a big move. So let's just run it. All right, we've already pre-broke. So now we've just broken this level there. We're still making bullish structure. That's cool. Right, there's the open. There's the open. So I want to be on the charts. All right, and now look at this. Look at this. What's this? This is dead volume. This is something I tell people to stay away from. But because it's the stock market open, I'm not going to tell you to stay away from it. I'm not going to tell you to stay away from the stock market open because it's so volatile. All right, it's there to like sweep liquidity and all that shit. But where would I put my breakout lines right now? I'd put it there. All right, so oh no, I'm on a 1 minute time frame. Sorry, people. My head must be gone, man. Fuck's sake. I'm going to have to do on a 1 minute now. I don't trade the 1 minute time frame, right, for New York. Let's just say I did, right? We'll do a 5 minute and a 1 minute example. So this is my 1 minute example. You could put your breakout line there. We're super close. You've got 2 minutes until the market open. I'd be putting it there to give myself a bit of breathing room, all right? You could even use this wick as well instead of the body, just to like not get faked out as easy. You put your breakout there. So if I'm on a 1 minute time frame, I'm going to be, oh yeah, this is also what I told you to do as well. Measure the average candles. What's the average candles averaging? What's the candles averaging? Around 10 pips, 10 points, whatever, right? So yeah, I feel safe using a 20 pip stop today. Cool. If it breaks to the upside, my first target's going to be the resistance area. It's a 1 to 2. I haven't even put my indicator on neither, but there's going to be TPs there, right? Oh, actually, it's above still. Got that. Then you got this one as your first level. And then we got a breakout to the downside because we don't know which way it's going to break. Just because the 15 minutes bullish don't mean that we're going to break to the upside, all right? That just means that after doing some crazy liquidity shit, it probably will carry on up. But this is the stock market open, and this is the 1 minute time frame. So yeah, this is brutal. But yeah, there's a few ways you could trade this. You could do this, or you could do this. I personally, for me, 1 minute time frame, 2 minutes left. I'd see how the next candle opened. Yeah, no, I'd have to pull it down. It'd be there. All right, so it probably would have been there, but as soon as I see this candle do that, we're too close. I'd put my stuff there. And then see how it worked out. Boom. So anyway, sorry for longing that out so much. But there's the TP, right? So it's an easy 1 to 2. That's the strategy. That's literally all we do. That's literally how we trade. So obviously the liquidity line there is my main thing. But once I hit this, I kind of expect a reaction from it because it's a zone that has been wicked before. It's been used before as support and resistance. So it does react from it. All right? Look, just because that line was there saying, yo, wait for me, come and get me. This overall, use your intuition before any indicator. Use your knowledge before any indicator. We marked up this fucking support zone because we expect price to react from it. And that's exactly what it did. And I'm not cherry picking this shit. I think this was from, when was this from? This was from today. This is New York session today. NASDAQ, all right? Beautiful trade on a 1 minute time frame. Now, let's do it on a 5 minute time frame and see how that shit would have worked. That's fucking beautiful though, huh? I bet it didn't look like that on a 5. So let me just check if there's any questions. Optics typing. At the 8:45 marker. It broke crazy. Oh, yeah, you're in America, ain't you? For me, this is New York session open. Boom. The stock market open, right? Let's try the 5 minute time frame. Let's mark it up. Let's do the exact same thing, but on a 5 minute time frame. Because I actually don't even trade the 1 minute on the New York. So let's look at what I would have been doing. Right, this is how I would have been looking at it. Boom. So, same shit again. That's the resistance right there. Most recent one. Okay, you can even add this wick if you wanted, but that's overkill. And then you got clearly an area of support, all right? Now, like I told you before, I want to be targeting the next big one though. So right now, my breakout lines, I'd be forced to do this. Shit, my bad. I'd be forced to do this. Either the body or the wick. Now, seeing as the body and the wick has rejected this area, I'm definitely these days waiting for the fucking wick to get broken through cleanly, all right? So that's how I'd put my thing. Right, cool. Now, let's look at what the 5 minute candles are averaging. 5 minute candles are averaging 50 pips. So why the fuck would I want to use a 20 point stop or a 20 pip stop? That don't make no sense. That's why I'm saying to people I'd rather use a 60 point stop and instead of going in with a mini, go in with 5 micros. Do you know what I mean? Half it. So this is how I would kind of do my thing. But yeah, it is what it is. You either, you know, 20 for me though, that is like ridiculous, absolutely crazy for a fixed stop loss, unless you're on a 1 minute time frame. 1 minute time frame, it looked fine. That's the difference between these candles. So the next breakout would be up there. I hate that. I can't do that. So I'd want to see price come down, and then I could put my line somewhere like this. So I'm going to put it back where it was. We're going to see how price acts. Okay. There we go. So let's have it right. I wouldn't have entered on the first one. I would have entered this one. So this is the open. I wouldn't have entered. I'd be like, nah, we're still waiting. We want this area to get broken. And then I would have entered. I would have entered that, I'll be honest with you, because there's volume, there's a nice big candle. So I would have entered that. I would have been stopped out. Boom. Cool. So I enter, I lose. All right. Guess what? We have this now. I probably would have I definitely would have done this. 50, 60 pip stop, whatever, right? 40, whatever floats your boat, mate. All right, whatever's going to make you feel good. 50 though, probably for me on a day like this. I just half the amount I go in with. And then I'm looking for my second entry. All right, cool. So you got a wick, no entry. I would have re-entered on that. But I would have entered after this wick. So would have been there. Same thing, like a 40, 50 pip stop. I've been using 50, so let's just say 50. I got a 1 to 2. Am I 1 to 2? So even on a 5 minute time frame, if I was only solely focusing on NASDAQ, it would have been a successful day for me, I think. No, it's different when you're bar replay mode in it. But if I'm going off of my strategy, that's what would have happened. And look at it. Where does it wick from? Where does it react from? I mean, I probably would have ended up fucking hoping it blasted through, holding it, and pulling out on a 1-to-1. So it probably might have been a break-even day for me. Maybe it's different in real time, right? But there we go. It comes all the way back up, smashes the stop loss. So you really do need to be smashing and grabbing. Let me just see one thing as well. Put the indicator on. So me, I probably would have been holding for this 4-hour line to get swept out. It would have come down. It probably would have come and broke even. I might have took a 1-to-1 when the candle closed like this, because it's showing me I just closed from a support like this. I rejected it. So I would have probably just took a 1-to-1. Would have been a break-even day for me, man, because I would have lost my first one and I would have won my second one. But if I smashed and grabbed and took my 1-to-2 when it hit this area, it'd have been a good day. You never know. You never know. It's bar replay mode. It's so different in real life markets. So do we have any questions? So go to the 15, like 15 after. Might be 20 after, since it broke off the 15 close. Oh, I already did it. Right. So this is today's New York. Did anyone even take money from this session? And this fucking tea is freezing cold. I can't believe I really actually... I'm not going to do it. I can't drink that. Did anyone make any money from the New York? I took no trade. It's all right, man. No problem. But like, you know, if you're focusing on just one pair, the strategy is so easy. This is literally the strategy. So honestly, step by step, I wouldn't even overcomplicate it. I mean, you can use higher time frames if you want, but like literally, if you take me to a 1 minute time frame chart, right? Let's just go to yesterday's New York session. I don't even know if I traded it. Tuesday. All right, let's just go to Tuesday. New York open. All right, let's do this. Let's just literally, let me just show you what I would have done if I was on the charts. All right, so 20 minutes. So we got 10 minutes now. I would have done some shit like this. I would have been like, hey, cool. Well, I don't really like that. I like this more because this one makes more sense. You've got the most touches. Boom, 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 boom. All right. So I like that. And plus, if we was to break to the upside now, you know, right now I got to wait for that to break. So that's my fucking take profit. It's not exactly amazing, but still, with a 20-point stop, it's over a 1. So that's how I would do it. More touches, the better. So bang. You got that as a resistance, all right? And my support would have been down there. So why wouldn't it be there? No, because we're at it already. Why wouldn't it be there? Because it doesn't make no sense for my take profit. That makes a lot of sense. So looking on a 1 minute only now, I get a pullback, I can break and go this way or whatever, right? So let's actually wait for the open. 5 minutes. Right. All right. So this is ooh, the volume's picking up. Cool. So my breakout line would be there. My breakout line would be there. All right. Simple. I would keep my breakout line there. I'm not going to lie. So probably might get faked out, but still, what's the candle averaging? What's this candle averaging now? We're picking up volume. 25 pips. Cool. I feel safe using a 25 pip stop and going for a 1-to-1, but realistically, I'd like to get a 1-to-2 always. I'll put my liquidity indicator on and hope that it gives me some decent looking TPs. All right, there we go. Nice 4-hour one there, nice chunky one. And then put my breakout down there. 1 minute time frame only. I ain't even looked at the higher time frames. I ain't even giving a shit about what's going on. All I've looked at is the resistance, the support, the main kind of range that we're in, right? This whole trading range. And I'm looking at where we are now. And I'm going to execute. I don't give a fuck if this fakes me out. I don't care if this fakes me out. All I care about is executing on time. Because I know that I'm risking the amount that I'm okay with losing. All right? No trade. All right, interesting. So obviously I would have entered this trade. So I'd be in the trade. I would have got to a 1-to-1 bit more. So technically with a 25 pip stop, you definitely got to be at break even now. So that probably would have took me out at a break even. Yeah, back to break even. All right. So that was a break even trade. Guess what? Let's put this to break even. Fine. Took a break even. Who gives a shit? All right. Or you smashed and grabbed. What did the second trade do? Boom. Fucking second trade absolutely smokes the take profit, gives you back what you lost and more. So you just lost a 1 ratio, and you just won a 2.4. Well, actually, a 2.5 at least. So look, you just recovered. It's fine. There's no time for thinking about ifs or buts. We take our fucking 2 trades. That is it. That's literally the strategy. I don't even go to other time frames or nothing. Like 1 minute time frame actually ain't looking bad for New York right now. But let's test it on a 5 minute time frame. Test it on a 5 minute. So let's go back. It looks a little bit different now on the 5 minute time frame. You see what I'm saying? About it's all personal, it's all up to you. So right now that's clearly a resistance. That's clearly a support. But if we break above this resistance, I'm going to be targeting this one because it makes sense, right? So if I break above this shit now, put my breakout line there, let's say. I mean, yeah, I'm going to put it there for now. Now I need to wait for some structure to be made, all right? Like, I got no way really to put my breakout line, so 25, I got 5 minutes. This is the open. Oh, shit, my bad. So right now, my breakout lines, I'd say would be, you could put it there, or you could keep it there, all right? Seeing as I'm being so fucking conservative and safe these days, I'd probably put it there because I'd want to see these wicks get taken out as well. So go like this. You look at what the candles are averaging. I always do that now. I don't know why, but it's like, yo, these last few candles are like 30 pips, 20 pips, whatever. So a 40 point stop looks decent. Does it make sense? Is a 1-to-1? Nah, I put it to 30. That looks fine for me. Try and get a 1-to-2 out of it, right? I mean, even a 20 wouldn't look bad there, actually. It's all personal, though. Probably that day, though. Looking at it, I would have done that. All right, I'll put my breakout line there now. Let's use the same, 30. See what happens on the open. So clearly we break, we come back, we hit a break even. It's the same story on the 5-minute time frame by the looks. Yeah, somewhere around there. This is where you want to be. So the first trade on the 5-minute was a break even anyway, still for me. Pretty much, because I would have held that shit. It would have come back on me. Break even. Right, interesting. Oh. So it's the same shit, man. Really, except I would have had a better take profit on the 1-minute time frame. It's still a dub, it's still a dub. I mean, it still gives you opportunity to recover and stuff. Do you know what I mean? So this is just NASDAQ. This is just the 1-minute and the 5-minute time frame. I don't fuck with the 15, really. I don't mess around with too many supports and resistances no more. You lot are literally seeing how I trade. I might even stop splitting my screens for the New York, yeah, because that bugs me out a little bit. I'm a little bit bipolar with trading, I'm not going to lie. One thing I know is I'm good at it if I actually stick to my plan. Do you know what I mean? But let's go and see if there's any questions. Oh, good. We're good. Right, cool. So I know there's not really any of you in the chat, like, but I don't know why people paid. Maybe they can't get to the boot camp on time. But if you're watching this on a replay, hopefully this is all sinking in. If it's not, then just go to the questions section in the boot camp and drop your questions in there. Don't be shy. I'll answer it all right? So we've just covered, you know, the 1-minute time frame is the same exact shit, apart from the only thing you need to be doing is focusing on the here and the now, so to speak. Yeah, like this is a price action right now, this minute, right now. If I was to mark up the charts for NASDAQ, I'd be doing this. I'd be saying, cool, we're bullish. We got support and resistance, but the breakout's up there. The breakout right now, as we're speaking, is this. That's my setup right now. You know what I mean? Like, it makes no sense. It's no sense for me to trade. But if it did break to the downside, all right, does my 20 pip stop look good? Yeah, too much. So I'd probably use 15. Try and get that little super scalp. I might even use 10. It depends, all right? Let's just say I used 15. Get myself a little 1 to 1.7 ratio, whatever. Let's put on the liquidity indicator. All right, it's aiming for that liquidity, it is, but it's a shame that there's nowhere for me to get in because I actually trade breaks, so there's nowhere for me to get in. But over there was, like, what time was this? What time was this? This was like 2 hours ago. 2 hours ago, after all the nasty bullshit that New York does. Fucking beautiful, beautiful stuff. So let's get rid of that. All right. Yeah, it's choppy as hell. Horrid. Horrible. I'd probably tell you to stay away from this, actually. But break, retest. There it is. There's the money. That's exactly what I was just trying to look for. So what I tell you in a range, what do I always say? If we're ranging, the best way and the only way really to be dealing with a range is by waiting for the break and the retest. So there's the range, right? There's our little support, resistance, sorry. We get a breakout, we get a rejection wick. Absolutely fucking fire, love it. Guess what I'm going to do? I'm not going to enter straight away. I might. It depends on the day. You could do that. Your stop loss there, 10-point stop. Or you could put your breakout there. Do you know what I mean? Which I probably would. That's the kind of shit that I do. Probably miss out on a lot of pips by doing that. But regardless, look at that shit. Just look at that. So that smoked the TPs anyway from a break and a retest. All right. Lovely break and retest. But my entry would have been there. Same stop loss. So yeah, I still would have been able to hit a 1 to 3. Almost. Yeah. 1 to 3. This call out a 1 to 3. No matter how you look at it. And not just that, you've also got a bullish engulfing candle. Like really confirming that was the break and the retest. And before it even shot up, you had these TPs. So, you know what I'm saying? It's just so beautiful to look at. But this stuff there. this horrible, nasty price action. Wait for the breaks and the retests. We'll get more into advanced stuff about breaks and retests, rejection wicks, liquidity sweeps, fair value gaps. We'll get into that in a week. But right now, I want you to keep shit simple. It's so easy to break out, trade, and scalp. You just need to be disciplined and manage risk properly. So let me just quickly do one last thing. Scalping is all about execution and discipline. All right. So as scalpers, we need to be more disciplined than any other trader. So like I said earlier, if someone's looking at a 1 hour and a 4 hour chart, they got so much time to decide what to do. We don't. All right. So I mean, our discipline is stopping trading. Our discipline is like, we got to not overtrade. We got to understand, okay, we took a loss. It hurts. It fucking makes them butterflies in your belly feel weird. They ain't the good kind. We just take the loss. We take the L, right? We are the ones that take the most L's because we're scalpers, all right? So if you're a swing trader, you could be setting up your trade for a week. It doesn't go in your favor. It took you a week to set that trade up, bro. It took me 5 minutes, a piss, brush my teeth, coffee, fucking whatever order, maybe a different order, but it took me 5 minutes and I'm done. I'm either up or I'm down, all right? So I don't get scared of fake outs. I don't give a shit. The only thing that I'm caring about, the only thing that I'm actually focused on is getting in. Targeting support and resistance, volume, openings of sessions, all right? So small profits, high frequency equals big results. So I'm going to take this on board for myself, all right? Tonight, when you see me trading Tokyo, I'm going to be taking my small profits, depending on the size account that I'm going to be trading, because I might be trading a different account tonight, all right? I might be actually doing something with a different firm. So, yeah, I'm going to still be fucking with my Apexes and stuff. I've passed a few. I'm going to compound those. But I'm actually venturing out, and I had an email today from GOAT Funded Trading or GOAT Funded Trading. They want me to give something a spin. So I'm going to give it a little spin, see what they got to offer. I'm going to check out their Forex and their futures things. They reckon they've changed a few things, which sound good on an email, but I need to go check it out myself. So I might give them a spin. But yeah, I'll be taking small profits like quickly. So it depends what kind of account you're on. What's a small profit on a 50K account? $250? $500? Yeah, if you're willing to risk $200 to make 6, make sure you grab the 4 or the 5 if shit's like tweaking on you. Just look at the candle and be like, fuck, do I feel comfortable? If you don't feel comfortable and you got nerves in your stomach, get out the trade. Get out the trade. Because 1, you either ain't ready to be trading yet, which is fine, or 2, you're risking too much. You shouldn't have that feeling in your stomach. The only time you get that feeling in your stomach is if you know you're doing something you shouldn't be doing, all right? Don't try to catch every move, Connor Alexander. Do not try to catch every move, all right? Like last night with the Tokyo, I just fucking was impulsive, man. I was just trying to catch shit that wasn't there. So if the markets look shit, all right, like this, don't be trying to predict the breakout. Wait for the retest. Boom. Retest, then do your thing. All right? But otherwise, trying to trade in this like I fucking do sometimes, and I think every single time it breaks below something is a breakout. All right? Don't be doing that. It's going to hurt you in the long run. So don't try and catch every move. Missed trades don't hurt. Bad trades do. All right? Now let that sink in. Let that shit sink in. Missing a trade for me actually doesn't hurt me. Is when I enter a bad trade because I've missed a good one. So, like, whoever's watching this now, whether you're watching on a replay or whether you're watching it live, all right? Have you ever, how many times have you ever come to the charts, seen that you've missed the move is done, all right? It's absolutely beautiful. And then you go and enter a terrible trade, all right? Like, FOMO, yeah, fear of missing out. Like, I'll come to the chart sometimes, And I'll go, holy shit, New York pre-markets did the business. Why the fuck do I think they're still going to do the business for then? And why am I taking bad trades? Why am I trading ranges? Like, bad trades hurt. Missing the trade shouldn't hurt. Missing a good trade should be like, all right, I missed a good trade. Fuck, it done my head in. I'm going to get off the charts. The only thing that's going to hurt is you staying there and watching it. Connor, can you give us a little something on where you came from before trading? Yeah, I can. Let me just quickly finish these points and I'll jump on it. So missed trades don't hurt, bad trades do. Protect your mental and physical energy. All right. Now I'm one to talk about this. So protecting the mental state. All right. I'm mental. There's something wrong with me. And I'm okay. I mean, like, but I'm on about like, there is something up there that's not fucking right sometimes. All right. Like, I've learned the hard way so many times. I've hit the bottle. I've hit the bag. I've done it all. Yeah. So, you know, for me to just blaze a bit now and again and have a few drinks is fine. But like I've gone down so deep, right, with my mental health from trading and losing money that I couldn't afford to lose. Like watching a fucking Mamba Effects video, putting my last £1,000 in an account and saying, you know what, I'm gonna do this. This is me. I'm gonna kill it. And my gut's going everywhere, and I'm in there. I'm in the trade, and I'm like, oh, I'm up 100. I'm up 100. Oh fuck! Now I'm down 5. What am I gonna do? And how do I tell the missus that I just fucking spent all the rent money on trading? You know what I mean? And I fucked it up. So protect your mental health, all right? And physical energy. I don't know why I said physical energy. I meant physical, like get off the computer, get away from the screen. Don't be sitting there for 10 to 12 hours a day learning. You don't need to do that, all right? Like an hour of learning maybe a day, maybe 2. I remember staying up 12 hours sometimes, drinking coffee after coffee after coffee, thinking the more that I take in, the more I'm going to be better. No, it fucks you up, honestly. So physically as well. Like I sat on this chair for just this amount of time now, and my ass is hurting, is numb. My leg is kind of numb. Like I need to get up and go for a walk. So like, yeah, protect your mental health and your physical health, all right, when you're trading. Honestly, get out, get a bit of fresh air. Even if you don't go out, just go downstairs, get out your room and go and watch some TV. Go get in bed with the missus or some shit. Or boyfriend, I don't care what you do. Keep emotions out and follow the plan. So that's the last point I want to make, all right? So emotions, like I just said, all right, we can't be reckless, but we also can't be emotional. So it hurts. I'd be lying if I said losing £1,000 doesn't hurt. Of course it fucking hurts, all right? Prop or not, real money or not, it hurts like a little bit. Like you get like, no, it's in our nature to like hold on to that. Like we worship it. We worship money, yeah? We absolutely worship money because you can't do fuck all without it. So to lose it, it does hurt, right? But being emotional in trading, it's not going to work for you. It's not going to work for you. So like you need to find something new to do. And I'm saying that as a friend, all right? I'm saying it to like protect you as well, because there's been times that I've struggled in trading, but there's never been a time where I wanted to quit. There's been times where I didn't believe in it. I didn't believe in trading, but it wasn't a time that I wanted to quit. It was never once that I've said, fucking done with trading. Because even when I was unprofitable, and there was days that really pissed me off, or I felt like I've had enough, like even punching holes in the walls and shit, like just being really, really, really emotional. I still didn't want to quit though. I still believed in it. I still believed that I was going to get the chain, the watch, get a nice big fucking house in the future and be financially free and all this stuff. I still believe in it. All right. Like I never in my life now want to do anything else. Trading is me. I'm addicted to it. So become addicted. Become addicted, but don't become emotionally drained. All right. So understand it's real. You're going to get where you want to go. This isn't a fucking scam, or you know, trading's real. Like I honestly, people who think is fake and trading gurus and stuff can only make their money doing selling courses and stuff. They just don't understand what it's like to get a payout. Yeah. Day 4, exits and entries. So today we focus on entries and smart exits. You'll learn different entry techniques, where to place stop losses, how to take profits, and manage trades for the best outcomes. All right. So the objectives is to understand different entry types, place stop losses effectively, set realistic take profit targets, use risk to reward to your advantage, and manage trades like a professional, right? So the first thing we're going to bounce onto and look at is entries. Sorry, it's something in my fucking teeth that's bugging me. Right, lesson breakdown. Entries, all right? So breakout entries, retest entries, continuation entries, best entry times, and avoid chasing, all right? So I'm going to get the chart up now. We're going to switch over, but I know what to teach you and what we're going to be going over. This is basically what we're going over today. Entry, stop losses, take profits, retest entries, and risk to reward. That's all I want. Don't worry about these. These are for me. So this is basically what I want you lot to be able to take away from today's lesson, all right? How to identify high probability entries, know where to place your stop losses, set realistic target profits, all right? Profit targets, sorry, and goals. And understand risk to reward and why it matters. So like 1 to 2s, 1 to 3s, or even 1 to 1s, we'll get into that. And being patient to wait for the right setup, all right? So that's all I want you to learn from this today. Okay, so if you're watching on a replay, this is basically it. And then this will be like the homework at the bottom. So I say homework, I don't really ask for you lot to like drop any homework back to me or anything. I just want you to do this for yourself. This is for you to test yourself. Find 3 breakout setups, mark your entry, your stop loss, your take profit, maybe screenshot them and drop them in the chat, you know what I'm saying? Or just do it for yourself, all right? This is a test for you lot to just sharpen up your skills. Find 3 retest setups and plan your trade before the entry. Calculate your risk to rewards, you know, is it worth it? Is this trade worth taking? Am I going for a 1 to 2 or 1 to 3? You know, am I using the liquidity pro indicator? Am I using structure? All of that good stuff. Review your journal and your charts, and there it is, honestly. So just, yeah, drop a little screenshot of one of these each. Go back and watch the replay. And at the end, though, you're going to understand more clearly. But right now, you're probably like, yo, bro, teach us the fucking stuff first and then ask us. Yeah, well, this is supposed to be asked at the end, but I'm just going to show you now. So this is what I'll be expecting for you lot to do. Whether you show me that, that's fine. But this is for your own good. Remember now, you're here to learn for you. So let's get into lesson 1, entries, all right? And let me switch the screens over. So entry work, all right? So you know me, all right? There's 2... Why is it showing 3:30, bro? Sorry. Something's going on here. Oh, yeah, my UTC. My bad. Boom. There we go. Right, that's correct. So the first entry bit of work that we're going to be doing is breakout entries with strong momentum, all right? So what does that mean? All right, we want to be trading the breakout of the open of a session, all right? So, or knowing that there's momentum. So the beginning of those sessions, maybe the first hour or 2. Look, this session went on for, you know, the momentum was absolutely popping from the top to bottom for fucking, how many hours was this? 2 hours, an hour and a half, 1 minute time frame, pure momentum. So right now I can see, for me, you know, this is a clear fake out. We'll mark this up. This is a little fake out, whatever. So you've got a breakout there. This one there, this is a momentum candle. So at one time, this was momentum. This was an entry as well. So at one time on a 1 minute time frame, this wick would have been momentum. Now, this is the difference between entries, waiting for a candle closure or entering on the break. Now, my strategy, the way I trade, I don't wait for a candle closure. I trade based off of momentum. So if we was to have entered on this, you know, on the open, because we're on a 1 minute time frame, so let's just say, yo, I'm looking for my entry. You could have put it there or you could have put it there, but, you know, let's just say there for the video's sake. Not really a lot of volume going on right now in the markets because the candles are like averaging 2 point. Oh, it's gold. It's gold. That's why. All right, it's gold. Sorry, I thought it was NASDAQ. All right, it's gold. So anyway, doesn't matter what it is. It's New York open. So yeah, this is a decent size stop loss actually. A 4-point stop, maybe 8 is like the max I'd go for on a 1 minute time frame. So let's just say I'm using my normal 4. You know, when I'm at 1-to-1s, I'm at break even. I don't think it got to a 1-to-1. No. So the momentum came down. Boom, I would have been in already, faked out, whatever. Probably would have lost that trade. And then the second candle, no momentum really. That one, boom. So you could have entered there, or you could have entered around about there, seeing this little pullback or whatever. Right, but this is a momentum entry. The point is, this is a momentum candle. These are the kind of entries we want to be going for. I don't wait for closes because, like I said, I'd missed a move. Let's just say that I did get in, use my standard 3 or 4 points. All right, little 1-to-1. I'd already be at another break even, so it weren't great. Bit of a shitty one, and then you get a switch. Now, all right, pause, hold up. So, all right, you can put a breakout there now, because yeah, I say to people, go to the wicks. But if it doesn't make sense and we're like there right now, let's just say that we're right there in time right now. We're waiting the next 1 minute candle, whatever. We don't want to be waiting for it to break down there. Like this to me makes sense. So I'm going to get in on the break of this, all right, or the break of this. So momentum, no, nothing. Still no momentum. Boom. Soon as that shit pushes through like that, it is what it is. I'm getting in, right? There's momentum there. I'm getting in. So it's easy to look at bar replay mode and say, this is momentum, blah, 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 blah. But it got to make sense. It got to be like the opening of the session or around that time, right? And you've seen me on the charts waiting before for fucking longer than 15 minutes, longer than 30 minutes. Do you know what I mean? For my trades. But that's a momentum candle. 4-point stop. Don't even know if it gets to a 1-to-2. No, comes straight back up. So it's a scatty, sketchy ass day. They're momentum candles. That's a momentum entry. All right. Wait. Let's see the trend start. Bit more of a liquidity sweep going on. All right, we got a trend starting now. Cool. So, anyways, back. Momentum again. Like, you could have used this. Been double wicked. A little bit of a dodgy entry. Still could have been a good entry though. Let's just say that you was 4-point stops, 3 or 4. 1-to-2s, 1-to-3s. We'll get on to risk to reward ratio in a minute. This one wouldn't have been a great entry, I'm not gonna lie, but still, you know, if you did enter on the break of this with a 4-point stop, you still get a 1.5, you know, before it comes back on you. You're smashing and grabbing. There's plenty of opportunities though, do you get me? So these are momentum candles. This is literally the most common way you to see me trade. These are my entries, right? So like, this is momentum entries basically. So I think that I've broke down what a momentum entry is, right? It's like no waiting for a candle closure. You're just trading in the direction of the trend or where the volume is, and you're just trading off a momentum. Let me check the chat just in case this shit isn't even streaming. Nah, someone would have said something right now. I think if anyone's there. So yeah, there's people there. Cool, we're good. All right, so put a 1 in the chat if you understand, you believe what a momentum entry is, right? Just entering from momentum and volume without any confluences like of the closure or anything. We're just entering strictly from momentum. All right, they're the most riskiest ones, but if you're in a trend, technically, and you see, you know, the momentum's going in the same direction as what you're trading in, it's not that risky. Now, I can also see right now, wait there, what's next on the list for me? Break and retest entries. I'm not going to do that right now because I think there's something I missed, right? So candle closure entries. Sorry, candle closure entries. Now, when I said about momentum, that's my favorite way to trade. That's the way I do trade. But also, if you was looking at like this right now and you was looking for a real strong indication, okay, yeah, we are going down. Well, you'd want to see the kind of close below some structure, right? So whether it's this, all right, at the time, yeah, it would be, because like I try and explain to people all the time as well, when you know about, sorry, take a look. Nah, technically no. But still, if we're going off of this structure right there, all right, these wicks, yeah, they go that far, but this is the actual structure. So for me, when a candle body closes below the candle bodies, it means more to me. So like, even though this is how low things go, price, this is the actual structure for me. Do you know what I'm saying? Like this, then I'd have to bump it down to this. So, you know, if I'm being really petty and I'm looking really deep into price action, now this just candle closed. That's also like a thing some people wait for, candle bodies to close. Do you know what I mean? Below other bodies, and then go for their entries. Do you know what I'm saying? So that's momentum entry, but also actually waiting for a candle body to close and be like, oh, that was a bearish engulfing candle. Do you know what I'm saying? So this is momentum, but also is playing it a little bit more safe. But I don't really play safe, to be honest. So yeah, there's another one right there. I mean, this is what you call a trend. So this is what people find hard to understand, man. When price is ranging, it's hard to trade. When price is trending, it's fucking easy. It's easy as fuck. You know what? It's so easy when price is trending like this, making lower lows, because honestly, it don't matter if you just get in based off of while it's breaking or if you wait for that candle to close and you got in. Do you know what I mean? Like, it's a break. There it is. You got your momentum. Hit easy 1 to 3s in minutes because we're trending. So it's like when we see sketchy price action, which, look, to be honest with you, most of the time on any open, especially New York, no matter what pair you're looking at, is going to kind of do some spooky stuff. It's going to do some craziness, right? I don't feel like this actually did really do any crazy shit. I think, if anything, it probably just took a high of like a session before. Yeah, like, and then drop. But actually, this was just a bearish shift. So, yeah, this just went up, popped off, came down, broke structure, retested, and dropped. So we just covered basically momentum entries. That's the first thing off the list. The second thing, funny enough, was actually breaks and retests. All right, so the next thing on the list, I think, is break and retest entries. Yeah, so retest entries, pull back to key levels. All right, cool. So I'm going to go on there and I'm going to show you an example. So if you haven't watched the videos on actual, like, did I do it? Yeah, I already did it. Videos on actual structure, all right, market structure, then you need to go and watch that video firstly, because, you know, you should watch them in order. But like, to me, it's clear to see where the structure is, right? So, you know, a lot of people would say, nah, this is the higher low, and then this is the higher high. And you'd be like, and technically, yeah, okay, cool, you're right, you're correct. But not for me, though. You know what I mean? No, actually, for that one, yeah, that one, okay. I'm good with that one being the higher low, because it kind of got that curve that I was telling you about before in the last lessons. It kind of got that curve. If you've got that curve, you can kind of get away with it, you know what I mean? Like, if you've kind of got something there. So that is structure to me. What wouldn't be? What wouldn't be? This right there. Like this there. That's not a higher low to me. A higher low is like maybe there, but mostly down the bottom. Mostly it'd be down the bottom, it'd be there. That's the higher low, that's the higher high, right? So to me, structure really stands out. And if it doesn't stand out and you've got to look too hard at the screen, it's probably not correct. It's probably not correct. So for me, when I seen, like, say we was at this point, when I see this shit, and I say this is my higher low, until price actually candle body closes below this shit, we're still bullish and we're only looking for buys. You know what I mean? And that's how you would have ended up not being faked out and shit like that when it comes down and blah, blah, blah. And then you just fucking wait for some structure to be made. And then you put your breakout lines, do you know what I mean? And then you just target the tops. That's how you basically take break and retest trades and shit. But that's not the example I want to give you for the break and a retest entry. So this wait for the beginning and the opening of a session firstly. So this is New York. We've opened. All right. Remember what I said. Until I see this shit down there that's being fully rejected the most, get broken and close below, then I ain't interested, right? So for me, this is still like the the structure. This is like the higher low point. So if right now, currently in time, all right, this is our higher high. This is like our higher low area kind of thing. We want to see price, you know, if it does pop off and make a new higher high like this, and I see clean structure, then I'll use it as a break and a retest. I gotta see some shit like that, right? So cool, we just candle body closed. We just candle body closed. So was it super strong? No. But did it close below where I said I wanted it to close below? Yes. Now I'm thinking, okay, we're starting to reverse. What can I do? Well, not dive straight in for a sell. Wait for the breaks and the retest. So if I know this is the area of support that was being supported the most, we've just got into a session, a new session, and we've just started to, like, you know, break below structure now, but we're still floating around this. We want to see a clean break, a clean revisit, and a drop. All right, that's what we're looking for. A break, a revisit like that, and boom. Do you know what I mean? Confluences. So there's multiple ways that you could have entered this. Now, we've gone through a momentum break. They're the easiest ones. They're the ones that most of us trade on the open. Now, if we're waiting for a break and a retest trade, well, seeing as this is my main area that's been fucking bounced off of multiple times, look, as a support, when we do break below it, I want to see it get tested. Now, and I know it works as a support. I want to see it get tested as a resistance. So now we're below it. We're back at it. What could I be looking for? An engulfing candle, which means that the next candle needs to be bigger than the one that's currently on it now. So I need to see a bearish candle like this. Say, okay, cool, boom, I'm getting in. Or you can wait to see like a little bit of structure being made like this, and now place your breakout line and get in when you see momentum. So it's another momentum entry, but from a break and a retest. All right. So, but I always do like seeing some sort of rejection wicks when is at a retest area. So because we're retesting an old support, I kind of want to see a wick. Like I don't mind seeing straight up bearish engulfing candles on situations like this and getting in, but then sometimes I've seen it where it's done that and then it's not ready and it just fakes out, comes back, and then it does the job. So really I want to see rejection wicks, maybe 1, 2, whatever, just something telling me, yo, the candle tried to go back up, but it got pushed down a little bit. And then maybe an engulfing candle or some shit like that. So let's see what happens anyway. All right, but that's obviously a bearish candle, right? Yeah, I mean, it's bigger, and I mean, it kind of closes evenly with it, but it's still bigger if you want to include the wicks and shit. So yeah, it's a bigger candle. All right, there's another blue one. This is what I was talking about being a little bit more cautious. I'm waiting for the rejections, and there we go. So we got a rejection wick now. We've got this candle there telling us, yo, I wanted to come down, tested it again. Now I've rejected, and you know, I closed below this one too. You know, it's giving me vibes now. It's like, okay, even if you lose this trade, it don't really fucking matter because you went off of your rules and rule-based, or you can get re-entries and stuff. But that's the safest way to get breaks and retests. Do you know what I mean? So that would have been a really nice trade. The next target obviously is always going to be structure next to you. If you ain't using the CAFX liquidity indicator or some shit like that, you're just going to be smart and look next to you and say, where did price react from before? Like, where was structure made? That's where it's going to react from again. So that's not a perfect example of a break and a retest entry, but it's a break and a retest entry. Do you know what I mean? So, yeah, what else? Let's keep it going for a minute. Let's see if we get any more break and retests. So we get a pullback. All right. Kind of, but they're messy. So where would I want my break and my retest to be? Well, this is an area that's been reacted from a load of times. Did it come back and react from that area? I mean, kind of, but no. Like, not really for me. I'd want to see a clear as day reaction from it. I don't think I get that. I don't think I get that today. Let's just see what happens when it gets there, though. So we're back up in that area now. Okay. Use this whole area as a actual area in a zone, right? Include all the wicks and shit too. So there's another good example. I know I wouldn't have been on the charts at this time. All right. I wouldn't have been at the charts at this time. But look at the zone that is at now. So it's back in this zone. All right. I didn't want, you know, you could even put this as your most recent, like, resistance as well. Just this whole area is one. So it comes back up, it breaks straight through this one. So get rid of that one. Then look at the next one and go, okay, this is the most choppy, maddest area prices reacted from before. Wicks, bodies, all of that good stuff. And I'm back there. What's happening? Do you know what I mean? Well, you could have took your entry right there from this candle, but why would I have not done that? Because I'm looking at what the candle's telling me and saying, well, yeah, it was grey, but look at it though. For a break and a retest candle, that's not good enough for me because it wicked back up. It kind of closed like more bullish. Like even though it was bearish, it weren't ready to come down clearly. Do you know what I'm saying? Big bullish candle. This is what I like to see. I like to see stuff like this to tell me, yo, I'm wicking the area. That's one good step. We're leaving wicks. All right, what's the next step I'm looking for? Well, I'm either looking for a break of this or I'm looking for a bearish engulfing candle. Boom. So I got a bearish engulfing candle and the break of that. You get me? And then it's up to you. Safest place to always put your stop loss is above structure. But, you know, if you want to be a cheeky fucker and use like 3 points, be really, you know, a proper scalper, like this is 4 points anyway, so it works out perfect. But it's going to be looking at risk to reward then. Do I really think it's going to actually go and clean up this whole thing? Maybe. Can I rely on that though? No. So I got to look at it and go, where's my first TPs? Well, if I put an indicator, it's probably going to show me, right, show me all the way down there. I could change the time frame, or I could use my eyes and say, well, price reacted from this area. That's a TP right there. I mean, that's a decent TP. Fuck, even these wicks, all of this stuff there is like take profits. Do you get me? You got to look at what's in front of you first. So they just got smashed. All right, the whole fucking thing got smashed. All right, it came back up. But anyway, who gives a shit? Look how far it went down first. Do you get me? Like it literally went and done the thing. So that's all from waiting for a revisit to a place like resistance and then seeing a rejection and an engulfing and a break as well. And a break. Perfect. Absolutely beautiful. And then it flies all the way back up. That's why I say don't always rely on the indicator and stuff because you're going to be waiting for that. And then this shit's going to happen. Boom. All the way back up. All the way back up. So, you get me? Like you got to be, when you're scalping, you got to be on job. You just got to take what you can. And realistically, fuck that indicator off when you're looking for TPs. Try and teach your brain where you should be targeting. Like these are clear places price has been pushed up from, aka liquidity zones and stuff, right? So that's perfect for me. Let me check if anyone got questions. Anyone got any questions? Or do you understand what a break and a retest entry is? Put a 1 if you know what a break and a retest entry is. Put a 2 if you're kind of on the fence and you need some more things. Because I'll give you my confluences right now, what I'm looking for with a break and a retest. And there's only 3 of them really main things that I'm looking for when I'm at a retest zone. Is it okay not to trade a range? It is definitely okay not to trade a range. Yo, if anything, not trading a range is what I want. Like, I want that for everyone. I trade the fucking range. Every time I come and I see a range, I know exactly what I shouldn't be doing. And I do it. It's stupid. Like, I'm seriously going to have a word with myself and get way more strict, all right? Because there's times that I had to go, I knew I shouldn't have traded that. Do you know what I mean? But I still did. Trading ranges, all right, there's only, like, I don't know if you watched the videos before this, but if you haven't, then watch them in the replay section. Because I'm telling you, I covered the A+ setups, I covered trend trading, I covered counter trend trading, I covered range trading. There's only 2 ways to trade a range, or don't trade it at all. That's 1, wait for the breakout of the range, a clear retest, and then, you know, a follow on from it, like a engulfing candle, and then it carries on and makes a trend. Or if you're ranging on a higher time frame, then you can trade from the top of the range to the bottom of the range on the lower time frames. So say like a 15-minute or 30-minute range was happening, then you can mark your support and resistance of the main range, go on to like the 1-minute time frame or the 5-minute, and then trade it back down when it breaks structure and etc. But trading ranges are horrible, and they just should be avoided really. But yeah, I think that's really, really good for an example of a break and a retest trade. A really good example. So like I said, the 3 things that I'm looking for when I want to break and a retest trade, I mean, I need to see at least 2 of them, all right? So 1, I really like to see a rejection wick. I don't give a fuck if I see price come back to a retest zone like this resistance. I don't care if price comes back, all right, and say this was a perfect engulfing candle, a perfect bearish engulfing candle with 0 wick. It was just this. Boom, straight up closed that strong, and it was bearish. I ain't getting in it. I'm not getting in it because I need to see rejection. I need to see more. Like, that's how people get tricked in. Is an engulfing candle. Yeah, I might miss the move, but I still, for me, only having one confirmation ain't enough. So I'd need to see a rejection first, which is like a wick or whatever. Like, see, a lot of people, all right, put it this way. A lot of people who ain't experienced, they would have gone in there, right? They used their 3 or 4 pip stop. They might have still won the trade. But look, like, for me, it wasn't enough. My entries need to see wicks, and I need to see an engulfing or a break, just a break. Even if I didn't see this big engulfing, but if I don't see an engulfing candle though, coming from like an area like this, like a resistance, I'm not that comfortable getting in. To me though, that is shouting sell. That's shout sell. We're revisiting an area where price acts from, is left a wick, and is giving me an engulfing, and is giving me a break. That's 3 confirmations for me to go, I'm getting in. Boom. I'm getting out. Do you know what I mean? So that's a perfect example of a break and a retest. I don't want perfect examples. I want to find some like shady examples, like shitty ones. Like let's put on the indicator again. Oh, bro, I deleted the fucking thing. All right, so let's just go back to another New York Open. It's going to be shitty days, see? It's going to be shitty days. There we go. Okay, so this is New York gold. Even though I don't fucking trade gold, but have you seen a pattern right now though? Like, when was this? This was Thursday. You notice like how it just changes structure. Like, if you look at it, you can see like it goes from making those fucking perfect high highs, and then it started genuinely showing you like, yo, I am breaking structure. Like, this right now is, forget all the rest, just focus on this. This right there is the higher low, and this right there is the higher high. So when you see price break a higher low like that, okay, do I get in right now? No. I mean, you could, but still, no. I'm still not done. Do you know what I mean? Like, I need to see a clear fucking shift, and that shit's happening right now. This is where you do it. So for me, seeing that break, boom, all right, cool. Now I know that we're making lower lows, because this one's lower. This one's a little bit lower. It's still lower though. This one's fucking hella lower. So now what do I want to see? Now I know that we're making lower lows. I want to see a retest of a resistance. So I'm going to put my most likely area to look at and say, if I look to the left of me and just say it was pushed down, pushed down, pushed down, broke above it, pushed up from it, pushed up from it, pushed up from it. You get what I'm saying? You could use this whole area, this whole zone. I just want to see price come back into this zone and give me something. All right, boom. So, wait there. This one's a tricky one. All right, so we revisited there. We got a few wicks. Cool. All right, maybe this one's a messy one that I might get stopped out on, because I seen the wicks, check. I seen it break structure, come down and break this breakout. I mean, check. So if I get in and I use my 4-point stop loss, I could get stopped out. I didn't get stopped out. All right, fair enough. Good trade. Well, I just went off of all my rules. I literally wanted to see rejection wicks at the area. I wanted to see an engulfing candle. I got that. And I got the break again. You get me? Oh my gosh. Bruv, I might start break and retest trading, ain't gonna lie. That's the New York though. Boom, gold, break and retest, 1 to 6. But that's just replaying last week. So yeah, put a 1 in the chat if I can move on and you understand what a break and a retest is now, because you can go back, watch this and shit and write it down, your confluences. But I believe that the fucking break and retest trade is looking pretty good right now. I'm not gonna lie. I mean, it always has done, but it's more patience. It's more patience involved. So the actual New York Open was there. So a little bit messy, but still. would have got the job done regardless if you was to have impulsively traded that day without waiting for break and retest. But it's good to see, it's good to know, it's good to understand what you're looking at and say, oh, bro, you know, shit just broke and retested. That as clear as day. Anyone with a set of eyeballs can say, this shit just became fucking bearish. This shit became bearish. We've retested, bearish engulfing, get in. What are you waiting for? No fear. Target liquidity to the left of you, all right? Which firstly I would have targeted there probably. I mean there, you know, there. That's literally the targets, do you know what I mean? Fucking boom. So that shit's smoked anyway. So I think I'm going to move on. All right. I'm going to move on. Remember, like I said, now it's got to keep reminding you lot who's watching it on a replay. It's absolutely fine to ask questions. All right. So continuation entries, trend continuation. I kind of feel like I've done that, no? No, I just covered momentum. Trend continuation entries. All right. Let me get on it. But yeah, I kind of think that's what this is. I mean, all right. Trend continuation entries is simple anyway. So we need to see a trend. We need to see a pullback. And then we enter. Now, this is literally a trend continuation entry. So on the charts right next to me right now, you're seeing trend continuation entries, okay? So knowing that we broke structure to the downside, waited for the retest, but there's where we start getting our trend continuation entries. So we enter, we wait for pullbacks, we enter. All right, you get the drift. So if my first entry was, you know, this is just a break and a retest though. But let's just say trend continuation. Cool, so we know we're making lower lows, so I enter on the trend continuation. There we go. There's my first trade. Wherever I just scalped it, it pulls back. You get an opportunity to put your breakout line again. You get back in, trend continuation. That's a trend continuation entries, all right? So it's like all this shit right there is just nasty. And we wouldn't have been trading that anyway, because that ain't even our session. Middle of the morning and shit like that. We don't do that. So prime time, what would be trading? Let's look at Tokyo actually. Let's look at Tokyo. Same shit on Tokyo. Look, most of the time when I'm trading Tokyo now, 1 a.m. opens, this is what we're looking for. We're looking for these momentum breaks. That's 1 a.m. No, my bad. My fucking retarded. Sorry. That's 1 a.m. Fake out. Comes back down, does this sketchy shit, then does that. When in reality, the safest way to trade would be, looks terrible, absolutely disgusting. We're clearly using this area as a support, all right? We're using this area as a support, and then we're using this area as a resistance, blah, blah, blah. All right, it's nasty. What happens at 1 o'clock? We pop off. We do a bit of this, we come down. So actually, yeah, kind of, I'm looking at it now going, wait a minute. Yeah, so an hour after the Tokyo Open anyway on gold, it seems to do the shit. Boom, break, retest, engulfing. Now this is a good example of a trend continuation because now we've just broken out. We've retested. We know that we're making bearish structure now and the volume's picked up. But there's nowhere for me to put my breakout candle, my breakout line, right? So this is when this would be enough. This is when, for me, this would be enough. Like, to get in. Get me and see that and go, oh, yeah, no, I'm getting a piece of that. Do you get me? And target whatever we're targeting. All right, that would have been a 1 to 2. Yeah, the 4-point stop. So that's the time I'd enter without seeing a break. Just two confluences. Wicks and an engulfing. Boom. But yeah, that's a Tokyo session. That's an hour after the start. So it was nasty, choppy, ugly. And then what happens? This is for the person who said, do we trade ranges? Well, this is a range. We wait for the breakout, a clear breakout though, with some actual volume. It does that shit. And then, sorry, my tools are all fucked up. It does that with proper volume. It comes back and then it rejects with proper volume. So straight up, that's beautiful. That's lovely. So yeah, trend continuation, I mean, literally is what it says. You're just looking for breaks in that direction only. So if you know you're bullish, all right, say we know we're bullish, we're making higher highs, higher lows. This is really messy. This is a messy example. I'm not going to cherry pick them. So we're bullish. We know our structure. We know proper structure. We're not going to say that this is our higher low right there, because, you know, even though you could say, oh, this is a higher, like our higher low. No, like if that gets broken, fair enough, you catch yourself a few pips. But if you're looking in the overall direction and say, until this shit gets closed below this there, we're in an uptrend. We're only looking for buys. Do you get me? Then you could have caught yourself a dub. Let's take it back. Ugly is ugly. I agree. It ain't good to look at, but all right, yeah. So you would have stopped out on the one there. Pretty sure if I got in there, I think I would have been stopped out. No, I wouldn't have been stopped out with a 3-4 pip stop. 4 looks kind of big. Sometimes I would use 3. So shit, man, what's happening? There we go. There's the TP hit anyway. So you're only targeting the next high next to you. But we avoided the L because we know we're overall bullish. So even in these nasty ass, choppy ass, horrible looking markets, and we're only targeting what's in front of us, we could be okay. Because we know our higher low is this. So we're not trying to go against the trend. So I took a trend continuation. I just bought. Do you know what I mean? So yeah, I got in on this nasty looking shit, but I still wouldn't have got stopped out because I used 3 to 4 points. Would it have been an amazing trade? No. It definitely comes back down and does this. Boom, stops you. But if you know you're only looking for buys, because we still haven't broken this area, look, we still haven't candle body closed below this, and we're still looking for buys. Simple. We could enter there. We could enter there. Sorry. Why is it doing that? We could enter any one of these. And continuation. Do you see what I'm saying? So that's a fucking trend continuation. Even though it's slow and it's horrible and it's shit, if you got in on any one of these, it still would have been a dub. It still would have been a dub. So slow, horrible, nasty price action, it still would have been a dub. Easy as well. Easy dub. Straight blue for a while. But that's trend continuation and knowing that what higher lows are, lower lows, whatever, proper market structure where you can actually see curves. That's why I always say I don't get tricked out no more by market structure. I know my market structure. That's my higher high. All right, there's my higher low. So all of this bullshit in the middle doesn't even matter because until we break this, we're still bullish. You get me? So that's why I say always focus on your market structure and that. And then when you get this thing there, it would have changed up the game a little bit. You know, you probably would have used this clean liquidity sweep. That's a clear liquidity sweep. This is how people get stopped out in the markets, man, because they changed their structure now. They changed the structure because, like, right, this is the new higher high. If we're going off of what's curvy, this is the higher low. If you really look at it though and say, look at it. Look at how nasty it looks. You know, the cleanest, curviest area to me personally would be this. So that's why I would put my higher low there. So until this shit gets closed below and the body closed, I'm bullish still anyway. Boom, liquidity sweep. All right, swept out the low. Do I get in? No, because I know that we're overall bullish and the shit didn't close. So bang, I'm only looking for buys. Anyway, that's trend continuation. Put a 1 in the chat if I can move on. If you all understand what a trend continuation entry is, just trading in the direction of the trend. All right, nice one, Ghost. Listen, I actually don't expect many people to show up to these sessions because, you know, a lot of people would rather watch the replays and our time zones are totally messed up and mixed up anyway. But if you are still there, then shout out you if you could make it. All right, so we've covered breakout entries, retest entries, continuation entries. Best time to enter. So the best time to enter, I'm not even going to go back on there for a sec and do it. I'll just do it like this. So the best time to enter is going to be where volume is. And when is that? The opening of a session. So for me in London, in the UK, London session for me starts at 8 o'clock in the morning. So does that mean that bang on 8 o'clock in the morning I want to be entering my trade? No. But it means that within that hour, I want to be looking for what volume's doing. So, you know, it's different to the stock market open. New York is the only session, I'd say, that really, really pops off during those opens. The first 5 to 15 minutes of that session is when volume pops the fuck off. So realistically, the answer to that, best time to look for entries, is going to be the opening of a session or within the hour of the open. All right, within the first 1 hour to 2 hours. I don't want to really be trading any longer than an hour or two after the opens. So yeah, I mean, I do, and I have done, but just mark that down if you wanted an answer for that. So the New York stock market open is 9:30 Eastern. You want to be on the charts before that, marking up what you're looking at. Say you're on NASDAQ and going, I'm ready for a buy or I'm ready for a sell. Now, does trend continuation really matter when it comes to the New York stock market open? No, because we're trading breakouts. So let's just say, for an example, you know, we're making this kind of structure, which is very rare during the New York opens. You know, you're not going to see a lovely trend like this, but let's just say you do. Does that mean that if we're at this point in time, we're looking for buys? Well, if you was a really disciplined trader, yeah, you'd only be looking for buys. But when the New York opens, I'm telling you now, this shit is, you know, a lot of the times going to do this. Boom! Come down, sweep out liquidity, and then leave a big fucking wick like this. So even though the candle got this far down, this is actually how big the candle body ended up. So it came all the way down there, but that's how big the candle body ended. And then eventually it probably does go and carry on in the way that it was supposed to go. But we're just collecting that liquidity. We're just getting in on them breakouts. That's momentum trading, impulsive, all the shit that most disciplined traders tell you not to do is what we do with the breakout and the smash and grab, right? But that's the New York session. So London session is a little bit slower. The volume's lower. Sometimes it takes a little bit of, you know, like an hour, maybe two for it to actually pick up. But if you come to the charts and they look like this, yeah, get your ruler out. Don't stretch your screen until it looks amazing, because no matter how much you stretch it to make that structure look good, actually look at what you're dealing with. Get your ruler and say, what's these candles averaging? 4 points, 3 points. All right, what's these candles averaging? Well, the last fucking 1, 2, 3, 4, 5 candles have all averaged below 3 points. So, do you know what I'm saying? Like, you've got to make it make sense. If you come to the charts, though, and your candles are averaging fucking this, like if you're just on the New York Open, you come and you look and go, oh, I usually use 4 points for a stop loss, but now my candles are averaging 5 points. This candle averaged, 8 points. Why the hell am I in my right mind going to use a 2-3 point stop loss or a 4 point stop? I mean, you can do that if it's fixed and you can be really lucky or whatever, but I just give myself more breathing room and lower the amount I go in with. So a bit off topic there, but I just needed you to know. So best times are going to be London Open and New York Open, basically. The reason I've been trading Tokyo is because London's been shit, but I'm hoping to get back to London next week. So I'm going to do a good back testing session this week on London anyway. So let's just move on. Stop losses. So place below support or above resistance. Now, do I always do that? No, but that is the safest place to do it. So I'm going to give you an example now of how, if you was trading properly and, you know, the way most traders do, you should be doing this. All right. So this is an example of placing your stop loss in a safe place. So let's just say we would trade into the upside. We know we're bullish. We're looking for breakouts to the upside. Boom. We get in. Now I'm saying to people I use a 3 to 4 point stop loss because I'm super scalping really. But like the safest place to put my stop is structure. So it'd be below, you know, the most recent support if I'm buying. I want my stop loss to be below there. Below there. Some people would even do this because they're fucking, you know, they're not even focused on the 1 minute. They're day trading, they're swing trading. But for me, the most you could push it to as a scalper would be there. Do you know what I'm saying? So that'd be like the safest absolute place. Let's see if it revisits it and actually stops out. Okay, no. But anyway, right, regardless, that's the safest place. Do I do that? No. Like I said, my shit's around about 3, 4 because I want to get in fast and get out fast. If you're looking at holding and actually hit and take profits like this all the way up there, the safest place you probably could put your stop loss would be below the actual swing. So, you know, like this, because the majority of times is going to come back and actually test it again, or sweep liquidity and do some shit like this. Do you know what I mean? It's not always going to be straightforward clean. Like, all right, compared to this day it was. So, all right, let's just say though, anyway, this is our stop loss. It's red, boom. So we put it below there now. When we break a new high, we put it above there. When we break a new high, we put it like this. Get me? We're just trailing our stop loss. That's the safest way to do it. Put your stop loss, oh, my bad, up there. Because that's the new structure. And then you hit your TP. So to be honest with you, a lot of people, they get stopped out because they put their stop loss where they think structure is. Like they put their stop losses like this. So I don't know, let's go back to a moment in time when we're making structure like this. They think that this is where they can put their stop loss now, underneath this little tiny little bit of baby structure there. That there, that's not letting your trade breathe. You need to put your stop loss actually under structure, or where it makes the most sense. So we break a new high. Now I'm going to put my stop loss there. I'm going to even keep my stop loss there until, you know, it does the thing. And when it breaks a new high, see how close it came? You see how close that shit came? But if you put it there, it wouldn't have come close. But anyway, boom, breaks new highs, comes down. Now, a lot of people, as soon as they see their first bearish candle, they're going to move their fucking stop loss below this bearish candle, which is fine. But you're not giving your trade room to breathe at all. So you give it some structure. Boom. That's where you place your stop loss. Then you could probably put it there. Because what's the point in letting it get all the way up there, you know, and keeping your stop loss all the way down there? That wouldn't make no sense. It got to be there or there. But anyway, that's basically trading a stop loss. And the correct place to put your stop loss is always going to be under structure or above structure. All right. So bang a 1 in the chat if that makes sense to you. Ghost. Ghost. All right, Ronnie. Oh, I still got 2 people up in here, yeah? Okay, cool. Also, you know, if you're watching this on replay, I gotta keep saying it. Don't be shy to ask me. Oh yeah, there's people you're just watching. That's good. Yeah, no, all right, cool. But even if you're watching this on the replay, just shout me out and ask me stuff if you need to, and I'll message you private or I'll drop it in the chat. But safest place to always do it is that. We don't really let our trades play that much though, because we're breakout traders. And to me, with my eyes and the way I've tuned them, for me, I'm looking at this and going, there's my entry, and I'm scalping it. And as soon as I see my first grey candle, I'm out. Because we're risking so much. Do you know what I mean? Like this trade would have took 3 hours and 3 minutes. That's a day trade to me. You know what I mean? Like 3 hours and 3 minutes. To some people, that's nothing at all. But my brain's so tuned that I want to be in and out within minutes. Like honestly, so that's why I talk about the best times to trade. But yeah, the safest place to put a stop loss is always going to be above and below structure. Actual structure though, not what you see and you think is structure. Like this is the structure. Do you know what I mean? Zoom out, take a good look at it. You can see where the shit curves. Tune your brain to that, and then you're gonna understand why I hold my trades sometimes. And I'm like, yeah, I ain't gonna close because shit ain't closed below structure. Blah blah blah. Sometimes it does go against me though. But yeah, that's that off the list. Also, when you watch the replays, you're gonna be able to see me popping up my thing and reading from it, but right now you can't see it in Discord. So use structure, not random pips, right? So we can agree to disagree. Obviously I'm teaching the proper way, so using structure is the proper way, but I use pips. I use like 4 points or pips, whatever you want to call them, during London session. And if New York's popping off and there's some volume, I'll probably use 8 points. So I use 4 to 8. I covered that in my last video though, so go watch that. And if I'm trading NASDAQ, then I'll look at the candles and see what they're averaging. If the average candle's doing about 40 to 50 pips in a candle, you know, 10-15 minutes before New York open, I'm not using a 20 pip stop loss. I'm using a 50 pip stop loss, or sometimes even 60, but I'm just lowering my amounts. And that's why it's important to know what you're risking and what you're putting on the table. So let's just give an example of that, like right now. I mean, right now, if I go and press this, big up DG as well, who actually like told me about this shit. But if I just say, you know, I wanted to sell, I put my order there, or this is say I'm going to enter on the break of this. I'm going to enter on the break of this. Then I'm going to figure out my stop loss and go, well, I want to risk a bag today, so this would be my stop loss. How many points would that be if I'm usually used to using 4? Yeah, it kind of works out. Get me? It's giving me a bit of breathing room. But maybe I want to be a bit more aggressive today. So I'm going to pull my stop down to there. And I'm just going to bang another one on. Boom. There we go. Now I know if this shit goes against me, I lose basically a bag. But if I get my 1 to 2, all right, then I'm making, obviously I'm going to be making my 2 bags. There's my 1 to 2. You get me? So it's all about knowing how the candles are looking, because right now the candles are looking that way. Now, if we took it back in time, though, sorry if I'm a bit slow. If we take it back in time to where candles wasn't just averaging these tiny little amounts, 1 to 2 points and shit, and we go back to there, I don't even know if it lets me do it on bar replay mode, but let's just take a look. We look at the candles and go, ooh, we're averaging now 2. Okay, that's cool. Big candles, though, if I'm looking at the big ones, what's the average big ones? Yeah, 3 to 4. Cool. So I'd feel more safer today using like an 8-point stop or a 6-point stop. Don't think it's going to let me do it. Yeah, maybe it does. So yeah, let's just go back to there. Right before it broke. Yeah, a little pullback. Not really, though. That was a shit example of an entry. It'd have to be there. All right, so let's just say there. I'm gonna pluck my my stop. Sorry. Put it there. It's not. Is it gonna let me set a stop loss? It's not gonna let me set a stop loss, so I won't be able to figure it out. But you get what I'm saying. This is how you would figure it out. You just go and say, what's my 4 pips looking like today, and my 3 pips kind of small. Like I'd feel safer if I was using a 6-point stop loss today, and still going for a 1 to 2 because the volume's there. It has to make sense to you. It has to make sense. So let's take a look. Why was I talking about that? Oh yeah, because of random pips. So it's not random pips. I'm not just coming to the chart and going, oh, today I'm going to fuck around and do this. No, I kind of know I'm bouncing between 4 and 8 pips on gold, and I'm bouncing between 25 and 50 or 60 on NASDAQ or US 30, all right? So they're not random. They're still planned. They're what have worked out for me in the past, so that's why I use them. So we've covered stop losses and where to put them. All right, so keep stop losses tight but logical. I think that kind of covers it too, what I just said. Yeah, I basically just covered that as well. So keep stop losses tight but logical. Don't just say, oh, you know what, like I just said, the average candle today is this fucking big. You know, we've got big candles doing this just before we get into the New York. All right, they're doing that, and I'm going to go and do this with my stop loss. This is what I'm going to do if I enter my trade. I'm going to do this and hope to get this. Fucking be real. Do you know what I mean? Look at it and say, does this look good? Yeah, that looks all right. I'll just do this. You've got to be logical. So this is tight. 3 is even tighter, but it's still logical. Some people will not switch up their shit for nothing. They'll say, listen, I don't care if the NASDAQ candles are averaging 200 points. I'm still using a 20 pip stop. You want to hope to God that that shit doesn't even sneeze backwards a little bit, because it isn't logical. Bro, I was trying to find out how to put a stop loss on Trade of 8. What the hell, man? Yo, I still ain't fully got it yet, man. But I kind of do. So I know that, like, if I was to buy now, like basically setting limits, if I want to put a buy limit, I know that if I want to get in there, you know, and do this shit like that, that's all fine. That'll do that for me when I press buy now. But what I was struggling with is the market. Oh, actually, yeah, no. So this is what you would. So this is how I struggle. Look, yeah, see. So it's kind of it's different, because when you hit buy now, say I just press buy, it's not going to give me the take profit and stop loss thing. It didn't do that. So I think you got to do what DG said, man, which is save the preset. Yeah, like look, 60 points. yeah, buy 3. So if I bought 3 now, my stop loss would be where? Yeah, I don't like it, man. I honestly, when I'm trading Tradeovate, I'll be real with you, I just genuinely prefer to get in and get out myself. But what I do like to do now is look at what my stop loss is going to be. So if we was on NASDAQ and New York came in or whatever, like let's just say this was New York right now. I'm on the 1 minute time frame, and in 2 minutes from now, New York's going to open and we're going to get some volume. But if I'm putting my breakout like this, let's just say for the video's sake, and I do this, I like to figure my stuff out quickly. So I'm like, all right, cool. Let's figure out what a 40 pip stop would be. And I'll just go for 100 pips today because that happens all the time. That's not too much to ask for. Let's just figure it out real quick. Do this, grab your stop loss, pull your stop loss up and say, all right, you know what? That's because it's on sell. Sorry, my bad. Fuck's sake, bro. Get your sell limit, pull it there, put your stop loss there, and say, right, that's a 40-point stop. I'm losing that much. I'm not happy with it. Take it down. There we go. Now I'm happy. So now I know 40 points is going to lose me £800. As soon as I press buy or sell, I'm losing 800. If I lose. And if I win, and I get my 1 to 2s or whatever, you already understand. So you kind of know what's going on. So that's how I like to figure it out now before I even get in a trade. But I still haven't fully figured out, you know, dragging the stop and shit. But also, one thing I do know is once you've entered a trade, you can see. I always get stuck with this shit. Say I buy now, I bought on the break of this. Then if I wanted to like close, put a stop loss, then my stop loss, I would just right click on it, and then I put a buy stop or a buy stop. I put a buy stop. I put a buy stop order. And that's how you basically put a stop loss. Okay. Click on the plus sign. I'll show you how. Huh? Or you actually want me to get into a position? Or else? Go on, type, bro. I'm there. Click on the plus sign. Maybe I should have put the demo thing on. I still haven't even tested it on demo. That's how stupid I am. I'm still like coming to the thing and trying to figure it out on live charts. I'm so stupid. Honestly, it's crazy. It's because I don't want to log out, see, because it's fucking effort to get the email back up and type in all my shit. That's why I haven't been doing it. But no, what I like basically was trying to figure out is how I can just press buy or sell and then drag my stop loss around after I've entered. I still haven't figured that bit out, man, because, you know, like when I go market now and I just sell, I'm not going to do that because it'd be stupid. When I press on stop loss, it gives me like another order. It opens up like another order kind of thing. Honestly, it's frustrating. But anyway, what was I supposed to be doing? Oh yeah, stops don't move further away. So don't move your stops further away. If you fucking give yourself a stop loss, which is 40 points and you lose, you should be taking that L. You shouldn't be going, nah, actually I'll just set it to 80. Like, unless you understand that the only reason you're doing that is because of structure, is still having broken structure and you've got confidence in it. But no, realistically, if you set a stop loss, it's set to get hit. Your stop loss is set to get hit. Okay, put that in your head. You're putting that stop loss there so it can get hit. Because you got to understand that, yeah, you want to win the trade, but everybody wants to win the trade. No one wants to lose the trade. The whole point of becoming a good trader is knowing how to lose the trade. So a stop loss is to get hit. All right, it's for safety. That's your bulletproof vest. You know what I mean? Someone can shoot you and it ain't going to kill you if you got your stop loss. But if you ain't got no stop loss on, or you keep moving it and hoping for the best, you're gonna die. Not really, but you know what I mean. Your market, your account will die. You can do that on trade. You can do that. You can do that on Tradeovate. Well, like, basically, I'm gonna have to fucking sign out and just make a paper trading one. Right, let's do this. Fucking hell, I'm gonna just sign back in a bit. All right. Let's go to trade of 8. All right, trade of 8. Demo. You just do... Is it going to be demo? But I ain't got a demo account, though, with them. Bro. I'd have to create a demo. That's long. I'm not doing that shit. Paper trading, maybe. Let's try paper trading. Wait, let's just do the paper trading thing. I got to figure this out now. You've got me fucking trying to figure it out, like. Bro. Wild. Paper trading. Let's do paper trading. Right, it's not futures though. So, all right, paper trading. All right, it's kind of the same shit. So let's just buy. Let's just buy. Oh yeah, it's going to Lemmy. Of course it's going to Lemmy. It's Forex. I'm telling you now, it doesn't do that. It doesn't do that with fucking with futures. It doesn't do that. I promise you it doesn't do that with trade of 8. It doesn't give you that stop loss. Honestly, it doesn't. Move your mouse to the top. For example, you click buy with 2 lots at market. Move your mouse to your stop loss position. Right click the amount you wish to sell. Yeah, no, I get that bit, but it doesn't do what, like wouldn't it be better? Like, this is what trade of 8 need to do. This is what trade of 8 need to do. This is all I want from trade of 8, for me to be able to do this while we're open. Like, that's all I want from it, because I can do it on Fusion and shit, but trade of 8 just ain't giving us that. They make it complicated, bro. So I'm just gonna stick to what I said. Figure that shit out 10 or 5 minutes before market open. Figure out what 30 points is. If you're happy with that, do it, blah blah blah, on the trade of 8. And yeah, because I ain't fucking happy with the way you can't just do what I just showed then. That's the easiest thing. I do that same shit you do, Connor, innit? Honestly. But anyways, let me quickly move on, because we're almost finished, right? So don't move stop losses. No, so don't move your stop losses. Take that L like a boss. All right, set targets at key levels. All right, so take profits. All right, so this is jump on to take profits. This is easy shit now, and I've kind of already been covering this as we go along. But look, like, honestly, if we was to break to the downside now, it's like we have anyway, but let's just say, whatever, we're breaking to the downside, where your take profit's going to be. If you ain't using no indicator, where are your take profits going to be? All right, so put a 1 in the chat if your take profit's going to be down there. Put a 2 in the chat if your take profit's going to be there, okay? Or put a 3 in the chat if your take profits are going to be there, there, all right, there. 1, 2, or 3. Yeah, this is the first one. Is that your take profit if we was to sell now? And you're going to target this? Or is this your take profit? Or all these levels take profits? Every single blue one. Number 3. Correct. And it's right. But obviously, yeah, okay. It's a trick question. All of these are take profits. But for me, am I going to get in this trade and go, I want to get all the way to the bottom without looking at these moves, like where price pulled back and got pushed up from? That means that they got pushed down by sellers and pushed up by buyers. So that means that when we get back to these areas again, they're more than likely 100% actually going to get reacted from at some point. So, like, look at it. Look at the proof. Look at exactly where shit reacted from. Why did price react from this area? Where did that wick come from? That wick came from there. Like, it's just all art, really, if you look at it. It reacted from these areas. So for me to think to myself, if I get in a breakout there, this white line, and I just think that it's going to get all the way to the bottom without taking these into account first, that's me being delusional. You got to look at it and go, yo, if I'm getting in, my first targets are going to be these next to me, these little bits of structure. And funny enough, that's exactly where they get. Do you know what I mean? So then look what happens. Some shit like this. So you just got to look and see what's next to you. That's basically where you put your take profits always. So now if we break to the upside, I move my breakout line there, my TP is going to be there. You know what I mean? These are going to be your TPs. These are what you expect price to react from. always. So don't worry about no indicators. Just understand your take profits are always going to be the place that price is pushed up from and down from, not in the middle of them like this. I'm not going to put my TP in the middle of them, or like in the middle of theirs. It's going to be bang on like these areas, right? That's what it's going to be. So that's take profits for you. I'm not going to overcomplicate that one. I promise you we could go deep into that, but I already kind of did with key levels and stuff already. And this is still the basics, remember, because like I probably got a feeling that this is going to run into next week for some reason. But yeah, I don't want to overcomplicate this stuff. Like it feels like it's getting deep already. Take profits. So use a risk to reward. Yeah, I believe in that. So I like 1 to 2s. So if I'm going in now and, you know, I'm always trying to get myself a 1 to 2. So even when we take it back to this little breakout there, this isn't an amazing breakout, but I'm looking to get myself a 1 to 2. So let's see if it makes sense for me. So when I get in, let's say I'm using a 20 pip stop on NASDAQ because price is actually, you know, quite dead. Can I make a 1 to 2? No. So, all right, cool. Now I know I can't make a 1 to 2 with a 20 pip stop if I'm targeting the first ones in front of me. So am I happy with getting in still and going for my 1 to 2? Well, yeah, because I know that at least if it does get to these levels, which we know it does, then I got a chance to close my trade in a little bit of profit, or I got a chance to close break even at least. All right, so I kind of oh no, wait, the fuck? Oh, it smashed. Okay, my bad. It absolutely smashed. I didn't know that. I didn't think it was going to do that, even though I replayed the shit. I didn't know. But do you see why risk to reward ratio matters? So I believe that if you give yourself a risk to reward ratio, you're going to get more losses, because if you go for a 1-to-1 every time, you're more likely to win your 1-to-1s, because I see my trades pretty much always hit 1-to-1. If I'm using tight stops, I'm always hitting my 1-to-1s. And then usually it reverses on me or some shit like that. So higher win rate with a 1-to-1 risk to reward ratio. But over time, I prefer my 1-to-2s, my 1-to-3s. I can trail my stop and stuff. I like a 1-to-2 risk to reward ratio, to be honest, or even more. But they pretty much do work out over time better, in my opinion anyway. That's just my opinion. So set targets, yeah, at key levels. We just went over that. We know what our take profits are. Risk to reward ratios, that's on you. Minimum 1 to 2 though for me and my strategy. I'm always going for 1 to 2s. And scale out of trades, partial profits. Oh yeah, so taking partial profits. When can you take partial profits? Well, for me, like if I double tap and I went in with 2 positions, then I'm going to take partials when I hit a 1-to-1. So how do you figure out when you hit a 1-to-1? Right, well, you get your ruler, you put it from your entry, you drag it down fully to where you think your take profit is, and then you just get a line. You say, right, cool. So when price hits this, I'm going to either move to break even, or close half the position and still move to break even. So then not only have you just bagged some money, you're safe. You're safe. You can let the trade play to a 1-to-2. So that's when you can move to break even and take partial. So let's say that I sold 2 minis. As soon as I see my 1-to-1 get hit, I can sell. I can buy 1 mini. So if I just sold 2 minis over there in the corner and you're trading futures, you don't know this, right? I've just sold 2. Then when I get to my 1-to-1, I'm going to put 1 in the fucking thing. I'm going to press buy. So that closes 1 position straight away. And then I'm keeping my eye on it. Or I set, I'll set a buy stop there. I'll set a buy stop there, right? So that means, boom, okay, you know the score anyway. That's basically how you protect your capital and all that stuff. But usually me, I just let the shit run and I just close at a 1-to-2. But yeah, 1-to-1s are fine. What else is there? Let the winners run. Yeah, when momentum is strong, let the winners run. So how do I get comfortable letting my winners run? This is the last thing I want to say, really. Letting my winners run and how I find confidence. So I look at the bigger time frame, like the 5 and the 15. So if I enter on a 1-minute time frame, let's say this down there. Let's just say for some reason, you know, I was trading down there. Again, on a 1-minute time frame. All right. Just say, for example, again, on a break of this, whatever. and I see the momentum is doing this, and I go to my 5-minute time frame, this is what's going to keep me, like, or even the 15, and me saying, yo, shit, momentum's not slowing down on the 15-minute time frame, so I'm just going to stay in my trade. Do you know what I mean? And that's how you can actually catch those big ass fucking trades like this. So do I do that often? No. Have I done that? Yeah. Like on the 50 to 1,000, I did do that. I got in, caught a sniper entry, let the shit run. But that's how you can look at higher time frames once you've entered on the 1 minute and say, these little 1 minute pullbacks ain't scaring me, because on the 5 minute and the 15 minute, they're just straight up bullish candles. They're just straight up bullish candles. Let's not even over exaggerate. Just 2 15-minute candles. That's fine. 1 to 5. That's how you can hold your trades, by looking at what the higher time frames are doing and being like, oh, it's just a pullback on the 15. I've just caught myself a beautiful trade. Do you know what I mean? So that's my advice. And then once again, you can see exactly where you would be trailing your stop loss. You know what I'm saying? This is how you would be trailing your stop loss. Boom, boom. And then you eventually get stopped out. Oh, no, yet. You didn't get stopped out yet. So now you could say to yourself, well, I'm at a fucking 1 to 6. Do I close my trade? Yeah. Or expect to get stopped out. Oh, we're still going. So now we're at like, what? A 1 to 8. You still ain't closed your trade? You got to put it there. I don't care. This is actually wild. This is wild. Still ain't stopped. There we go. Boom. You get stopped out. What did you hit? You hit a fucking... What is that? Oh, 1 to 8. Yes. So there we go. Boom. Or you could have just closed it. Do you know what I mean? But like, still, my point is, that's how you catch monstrous trades, by getting in on the lower time frames and looking at the higher ones and seeing what it's actually doing. And when you see these blue candles, they give you confidence. Like when you see bullish momentum in these candles, that's giving me confidence to stay. But not gonna lie, I was just in that. No fucking way was that today, bro. No. Was that today? That's crazy work. I didn't even know. Yeah, it was. Holy shit. See what I'm saying? That's today. I ain't even fucking cherry picking. But anyway, I think that wraps it up. So let me just look. Yeah. So we covered entries. We covered breakout entries, retests, continuations, best times. We've covered avoid chasing, just wait for confirmation. Do you know what I mean? So, you know, we do that. We make a plan. We know if we're buying or selling when it breaks, or we break and retest. That's avoiding chasing. We don't get on FOMO. If we've already missed the move, we missed the move. Stop losses, we know that we should be placing above or below support and resistance, or a fixed stop loss. You can use a fixed stop loss, but it shouldn't be random. It shouldn't just be random pips how you feel on a day. You got to have a plan, all right? So keep your stop loss tight but logical. Don't move your stop loss. If you set a stop loss, that means if it gets hit, it's unlucky. Close your trade. It was there for a reason. Yeah. Key levels, target key levels, use risk to rewards, 1 to 2 for me personally. Scale out and take your partial profits, which means when you're at break even, take your 1 to 1, move to break even, take partials, all right? Or fucking trail that stop loss. That's all it is. Protect your capital. Retest entries, I don't need to go over that because we've just gone over retest entries at the beginning. And risk to reward, yeah. So focus on consistency, not huge wins. Now, this is where I've been going wrong. I've been seeing a couple of 100, 500, 600. I've been going, nah, I want a bag. I want 2. And it's been fucking me up. So practice what you preach. For me, I'm saying take small wins and just focus on consistency. So that's why 1 to 2s and 1 to 1s make more sense than looking for that huge 1 to 10 that I just showed you. You know what I mean? Because you're going to be looking forever. And the amount of times you're going to lose just to get that one win don't make sense. So compound your small wins. Take that money, all right? Take those 5 bills. They add up over a month. Yeah, small wins add up over time. Look, I didn't even look. I just knew that's what I was meant to say. So I'm going to drop this image and that anyway in the chat. And I want to see you basically all agree that you've taken away these points. You can't see them right now, but I'm going to drop it in there. All I wanted you to do was be able to identify high probability entries and know the difference between momentum entries and break and retest entries. I wanted you to know where to place your stop losses, or, you know, at least why you're using pips and how to measure candles with a ruler. I wanted you to set realistic profit targets, not 1 to 10s. 1 to 2s. I wanted you to understand risk to reward and why it matters. So you're going to get higher win rates with 1 to 1s than you are with 1 to 2s and 1 to 3s, but they're the ones that play out in the end for me. 1 to 2s and 1 to 3s are, yeah, I find more success. The smash and grab is literally 1 to 1s, or just getting whatever you see and taking it. So, you know, it's up to you. You can trade that way, but I've really been forcing myself to try and hit those 1 to 2s, being risking like 5 bills or 1,000 to make 2. You get a picture. And be patient and wait for your setup. So I've obviously been trading a lot of pre-breaks, and I've been paying for it. I've been paying for trading those pre-breaks. So don't trade pre-breaks. Just wait for the session to open. And if it looks really bad, don't force the trade. Come back in an hour and wait for structure to be made. Simple. All right. So I just wanted you to take that away from this today. There's a little bit of homework at the bottom you're going to see when I post this picture in a minute. So that's on you lot to kind of do it. But yeah, I would like it if you could, you know, go screenshot 3 breakout setups, mark your entry and your stop loss. Just mark them up. Just show me what you think a good example of a breakout trade is. All right. And I want you to find 3. No, actually just one. One will do. One will do. But if you can find 3, go for it. But like 3 max, 1 minimum. I want you to find a breakout setup with just momentum. And I want you to find a break and a retest setup. And I want to see a screenshot of where you put your stop loss. You know, just, I want to see it. And if you don't post, that's fine. I'm not going to kick you out or be mad at you. You know what I mean? Just do it all. And that's your homework, basically. Review and journal your charts. All right. So you can do that while we're trading live and stuff. Just review why you got in them trades. And if the answer was because I did, then that's not a good answer. Because yeah, I want you to trust in my trades, but at the same time, I want you to be like, I'm using him as an extra confluence. I'm learning what he's teaching me, and I'm just using him as an extra confluence. But a lot of people disagree with my entries, and they save themselves money, and then they end up going on to do better trades than me. You know what I mean? Because my mindset might not be the same as yours every day. So yeah, that's it really. That's the lesson wrapped up. All right, so day 5, yeah, breakout and scalping. Oh shit, I'm reading the wrong thing. Risk management and trading psychology. My bad. So all we need to focus on out of everything is this. This is what we'll be learning today. And then obviously at the end, you'll see what you need to take, what I want you to take away from today's lessons anyway, all right? So a lot of this, you're going to be like, we kind of learned that yesterday though, and the day before. Yeah, you're going to get those days where a lot of the stuff that I mention are mentioned in the other trading classes, but the only thing is we just dive deeper into certain subjects. Do you know what I mean? So I feel like we've dived into like trends, breakout trading, you know what I mean, counter trend trading. And mind you, this is the first 5 days. Like we'll be doing that shit again for another 5 days, but way more in depth with things like, you know, liquidity sweeps, fair value gaps, all that shit, that the extra sprinkles on top that makes a trader a bit better. But listen, before I even get into it, I just have to let you know, like, obviously this fucking whole class is about, you know, not revenge trading, risk management, all of that stuff. You've seen today we took an L on New York twice. I took a bit of time off, went and had some food, chilled. I came back to the charts. I recovered that shit, yeah. I'm just going to say it as it is. No revenge trading or nothing, just a straight up nice couple of confluences. I'll run you through them and stuff, but that's what the perfect example for today's lesson is: revenge trading and taking a break and coming back with a plan. All right, that's all I need you lot to learn today is position sizing, trading psychology, a little bit of that. We're going to talk about things to avoid. Now, when I talk about revenge trading and stuff like that, or over trading even, do you know what I mean? Yeah, these are the things we're going to get into today. But there's a difference between revenge trading and taking a break, coming back with a solid plan, seeing confirmations and pressing the button, all right? That's just called confidence, which, by the way, is something that we really need to focus on in this lesson, staying confident in your plan. I'm going to quickly just check on the chat and see if you can even see my slide. Can you see, put one if you could see that presentation slide then. All right, cool. Just so I know we're all in the same picture. Awesome. So back to it then. Lesson 1, or not lesson 1, lesson breakdown, because they all just one lesson really. So risk management basics. Risk a small amount, you know, percentage of or amount of your capital to to make 1 to 2 to 3 or whatever. We'll get into that in the risk to reward part now, even though we did a little bit yesterday, like I keep saying. Just focus on now. So risk management, risk a small percentage. So if you're trading a prop firm account and you're trading a 50K account, let's say, you're risking, you know, you realistically should be risking $500, like I'd say max, $500 max per trade to make a 1 to 2 or a 1 to 3, because that means then you've got 4 trades, sorry, 4 trades that you can fuck up. Yeah, I am recording. 4 trades you can fuck up in a row. Now, that's why even on a 50K account, when I started with Top Step, I was actually risking $250 per trade. So if I messed up the first one, I could go take the second one without any like pressure on my shoulders. So knowing your percentages, all right, 1% is max, 2% is if you really want to pass that shit fast, all right, then you know what you're doing and you've got all your confluences. You're an A+ trader, A+ setup trader, which means you ain't like me and just impulsive taking whatever. But I'm a consistent trader. That's one thing I can say I am, is a consistent trader. So yeah, I might have a bad month, but I'm confident when the markets are good and I stick to my trading plan, my trading plan is going to treat me good and the markets are going to treat me good. But if it's a bad month, shit happens. I'm still going to stay consistent. I'm not going to bounce. All right. So anyway, moving off topic again. Risk a small amount of capital per trade or percentage. Why protecting capital is number 1 priority. Why do you think protecting your capital is number 1 priority? Like, what, even saying that out loud sounds crazy. But it's a rhetorical question, by the way. Protecting your capital in trading is number 1 priority because that's the fucking only things. That's how you make money. So put it this way, we're running a business. I take a 50K Top Step challenge or whatever, any challenge. That's my business. That's my business investment. So if I invest $69 into that challenge or whatever it is, say even $100, I'm fucking trying to get back something from my investment. So protecting my capital, basically protecting my investment, that's like protecting my business. People don't see it that way. They really don't deep it that way. They just go, oh, it's $100. If I blow it, I'll try again. But how many times are you going to keep thinking that way? I'm blowing in. And oh yeah, I passed. And now I just took a couple of $100 payout. Well, think about all the money you sunk into it though. So yeah, we're all going to lose money at the beginning. Most successful businesses do. You know what I mean? Most successful businesses lose money at the beginning. But protecting your capital is number 1 priority in trading, all right? So that's all I'm going to leave it at. I don't blow accounts anymore unless they're props, which I'm being a dickhead on. Really, I need to knuckle down and be more serious. I'm in my business zone now. I'm in my mindset zone. So understand, you know, I'll talk to you about that in a bit, but I don't blow personal accounts anymore. And that's a fact. So because I understand, you know, the money's the only thing keeping my business running. So the importance of compounding. So yeah, compounding is super important because if whether that's compounding accounts or whether that's just compounding profits, like consistency is key. So small wins, compounding money. Like how do I say this? If I take a $2,000 withdrawal from a prop firm, I'm gonna put that 2K in my bank, all right, or whatever, and I'm gonna put 1,500 of it in a trading account, or keep it in like a separate savings account. Maybe splash 5, feel good for the day, do something nice, but then make sure majority of that money is going into a savings account for trading, because you want to realistically open a 10K personal trading account, all right, or more, or even 5, whatever. But I'm just saying, you need to build that, you know, compound some money, maybe compound some trading accounts. If you want to be a full-time funded trader, that's a totally different conversation. But I do truly believe that trading personal capital wins every single time. But if you actually become good at trading fundeds and taking payouts every single month from multiple funded prop firms, fair fucking play. Do you know what I mean? I don't know if I'm that type of trader. I haven't tried that yet. But all I know is taking the money and putting it in my personal accounts and compounding it is the plan. All right. So compounding, whether that's multiple accounts or profits. Boom. Position sizing, how to calculate lot size, right? We're going to go through that in a sec. There's a few different ways if you're using MetaTrader 5. They're all pretty much the same way though, right? And we've even done a bit of that in the past few lessons too. But calculating lot sizes and micros and minis is super important. You need to know before pressing buy or sell how much you're going in with. You can't just gamble the amount. Like if I go in with 1 mini on NASDAQ, I want to be going in with 3 minis on YM. And that'll probably work out. I'm risking around about the same or some shit. I'll show you in a minute, but just understand different brokers are going to be different. So we're like Fusion Markets. I'm allowed to open position with fucking 12 lots of gold. 12. Understand that sounds like Mamba FX trades on $1 million accounts and stuff and opens up like 200 lots and stuff. But how can I? No, I don't want to compare me to him. Me opening more than 2 or 4 standard lots on gold shouldn't be able to be done with a 10K account. Okay, so understand your broker, understand leverage, understand that all brokers are going to be different and have a play around with their demos first, figure out stuff. All right, risk the same, but wait, risk the same. 2 seconds, the fucking dogs are pissing me off. If you can hear them dogs, just give it a minute because they're going to stop. You can kind of hear Chico still. You got like 2 minutes before I choke him to death. Risk the same, not the same amount. What the fuck did that mean actually? Wait. Risk the same, not the same amount. Huh. That's a bit crazy. What the fuck? So risk the same, but not the same amount. How I figured that out? I don't even know if that makes sense, bro. All right, so just focus on how we're calculating our lot sizes or minis or micros if you're trading futures. Adjusting size based on percentage. Oh yeah, risking the same percentage, not the same. So, all right. So, I mean, risking the same amount of money. Sorry, not the same amount of percentage. That can change. So, you know, if I say I'm risking 1,000 today, I'm risking 1,000 of my capital, my personal capital on Fusion Markets off my 10K account or some shit like that. That's 10%. That's 10% of my account that I'm risking. So I changed the percentage, but I'm not changing the amount that I'm willing to lose. So like if I'm trading a prop firm, I'm trading 1% of 100K. If I lose 1,000, that's 1%. Fair enough. That's smart trading. But on a personal account, trading $1,000, risking $1,000 is not a smart thing to do, but who gives a shit? I'm there to flip the account. I want to take my 10 to 20 in a month, a week or two, or maybe that month. So why the fuck am I going to risk 1%? Do you know what I mean? So yeah, figuring out percentages and stuff actually matter, and knowing your goal and what you want to do and what broker you're with, leverage, all of that shit's going to be in the advanced stuff. Risk to reward. Aim for at least 1 to 2 risk to reward ratio. We spoke about that yesterday. Ratio. Higher risk to reward ratio, low win rate still is profitable. My win rate right now is 40%. I'm still up on my account. Like, and I still ain't had well, I've had 1 red day, I'll show you in a bit, but it's only a little bit because I recovered that shit, but still, it don't matter. What I'm trying to say is out of 5 or 6 days, I got 1 red day on the calendar for New York. My win rate's 40% because I'm recovering and shit. Or whatever, letting my 1 to 2s play out or whatever. But look, I'm closing on small losses a lot. Close here, take a little loss there. You know, these little tiny losses. Makes your win rate look shit. But your actual risk to rewards looking after you, so you're still profitable. I've literally had a 20-30% win rate and withdrawn thousands that month. Do you know what I mean? Because I've lost like so many little 10 and 20 pounds or a little 100 here, 100 there. And then I win 1, 2K, 3K, 4K. So risk to reward ratio matters. Let winners run, cut losses short. Now, you can either smash and grab and take the money fast, depending on how the market conditions are. Or if you're in a trend and you know that shit's heading towards somewhere, or you don't know because knowing something in trading is impossible, but knowing, I don't know, if you look here and go, I'm pretty fucking sure this downtrend's heading towards this low to sweep the liquidity before going this way. That's when you understand liquidity and shit, you're going to understand how to lay your winners run. So do you notice that, like, you find, like, before I used to go in heavy and just smash and grab? Have you noticed lately, if you've been rocking with me for a while, I've been holding my trades. I've really been giving them a chance to play out. Even though it might be going against me or whatever, I'm still trying to let my winners run. The market conditions are just horrid right now on the New York Open or whatever. So yeah, it's quite hard really. You've got to close and get what you can. But if I ain't seeing 1 to 2s at least, like double of what I'm risking, I don't see the point. Why the heck? Why am I risking 1,000 to make 1,000 consistently? I mean, if that's your thing, stick at it. Do you know what I mean? But I like to see 2K if I'm risking 1,000, or if I'm risking 500, I want to see a bag. You know what I mean? That's why I close usually on 500. And yeah, I trade twice. I lose a bag in a day, but then I know realistically, okay, so now I either got to make that bag back, or I got to wait until I hit 2K. Do you know what I mean? And let my winners run. Got to get brave with it. Trading psychology. We're going to be covering emotional control, patience and discipline, handling losses and drawdowns, and staying confident in your plan. All right, I'm going to keep going because I'm taking hella long with this intro. Common mistakes to avoid: risking too much, big time. That's a big one. Revenge trading, fucking bigger one. Overtrading, it pretty much is revenge trading, and no, we'll debate on that one. Overtrading and revenge trading are different. Revenge trading is when you lose and you instantly go, fuck that shit, and give me my money back. And then it goes against you a bit, and then you go, I'm going to risk more to make it quicker. I can do this in 2 minutes. And then all of a sudden, you just blew the account, and you're sitting there absolutely gutted, right? So revenge trading, risking too much, and overtrading all come as a package, like a premium pack for fucking shit bags. And it's horrible. It makes you feel terrible, but I've done them all. I still do now and again. And ignoring your trading plan. Now that's revenge trading. Revenge trading is ignoring the trading plan. You sit there. How many times have you sat there? You fucking made a trading plan. You've put all day into it, or maybe you just feel like, you know what? I've actually made a solid trading plan. I know my risk to reward. I know my pair, my time frame. I know everything that I'm going to be doing. And you go to the charts and you do none of it. As soon as you take that one loss, you just go, fuck the trading plan. I'm going to buy, I'm going to sell, I'm going to fucking do this, I'm going to do that. And then until something possesses you like a fucking demon, a trading demon, and then boom, you end up fucked, blowing the account, blowing the capital, lending money off your grandma, your dead grandma that you had to fucking dig up and lend her diamond ring off her finger and sell that for a new fucking account. Honestly, so this is what I want you to take. Student takeaway. I risk no more than 1 to 2% per trade, prop firm, okay? If you're trading personal, it's different, but prop firm. Otherwise, you know, you ain't risking 1% of $100, all right? Let's be real, you're risking $10, $20. So risk 1% prop firm, or 2, but 2's being ballsy. Have a plan before every trade, so know exactly what you're looking for. And that's what this course is about, yeah? Having a plan. It doesn't need to be massive. You don't need to be looking for a fair value. You got 15-minute time frame, 1 hour time frame, rejection of the bullish dick in the bearish ass. Like, you know what I mean? Just fucking do it. Just have a 3-step. I know I'm looking for support, resistance, trend, breakout. Boom, done, volume. Bang, there it is. That's all you need to know. Learn from losses. That just comes with trading. I'll be honest with you. I didn't learn from losses for a good fucking 3-4 years. Just kept losing. And then until the end, you go, I ain't losing anymore. I am not going to lose anymore, because the only thing that I haven't tried yet, which I keep planning to try, is be disciplined. Like discipline, like, you get me, is the fucking discipline and consistency, right? And not perfection. All right, because I hated that when I used to spend time looking at a chart, fucking marking up my chart for a good hour before I plan on trading or whatever, really feeling like I got this shit locked. And then I press sell or some shit, and it just goes fully against me. And I'm like, how? How did that happen? Everything that I did was perfect. Trading don't give a fuck. Trading really doesn't care how pretty you are. It's still going to fuck you. So remember, risk management keeps you in the game. Psychology keeps you growing. Discipline, strategy, execution, consistency. Out of all those words, I want you to take consistency and run with that. All right. So I believe that's me done with the slides. We can get the fuck off there now. The first thing, all right, out of all that bullshit, risk management, we're going to dive straight into it. I'm not going to long it out. Risk management. So risk a small percentage of your account per trade, all right? And this goes hand in hand with why protecting capital is #1 priority, which I already broke that shit down to you. Protecting your capital is #1 priority because without any money, you can't trade. So it's no business. And the importance of compounding. So let's get into it. Risk management. Boom. So why is it important? All right. Like, let's just say I'm trading a break to the upside. Now, a lot of traders are going to say this is the correct way to do it. Correct. That's the fucking way to do it, you know, because you know that it's likely to come down and do some shit like this and sweep some liquidity. You might even want to do this. I know people with a negative risk to reward, but they can get out of my life forever. I know people with a negative risk to reward, and this is their trade setups, and I'm like, get the fuck out of here right now. So we're going to be going like this, us. We want tight stop losses. We want to get to the bag fast, all right? So, you know, if we're looking at our charts and going, look, 3 points ain't a lot, right? But when there's not hardly any volume or whatever, or even if you want to be really cheeky, really fast, really with the shit, and you know that you've got no spreads, you're trading futures, all right? You know it's about to pop off. As soon as you fucking see this shit get touched, all right? Not right now because we're consolidating, but say like New York's about to open up. You want to be cheeky, you want to get in. 2 points, yeah, move against you, you're fucked. But you know what? Honestly, consistently, if you do this every single time there's a New York and you let that shit run and hit you 1 to 2 every single day for a month straight, and if you lose, you just take your loss and walk away, I can almost bet everything that I own. I literally probably would make a bet on it, actually, if someone's solidly done that shit. But you're going to come out profitable. Because your consistency is going to beat everything else. That's why I got no fear when I come to the charts. Literally no fear. Like, when I come to NASDAQ today, I had no fear. Yeah, it fucked me twice, all right? Like a lot of people. It happens because if I was trading and risking 1,000 on that one break, I could have only took the one trade. I was risking 500 on the break. So I understood the assignment. I understood that I'm risking 0.5% right now on 100K to trade twice. And my all-in-all loss would have been 1%. So what do I go on to do? Like, clear up my head, go let the fucking chart sort themselves out. I might even still have the drawing on my chart. I feel like that's not it. It is it. Yeah, it is it. All right. So this is where I came back and said, yo, I'm gonna get my shit back, right? So, is it revenge trading? Nope. It's over trading though, for sure. So revenge trading, like I said, is right, let's go back. Let's go back to what I was looking at. Let me just fucking break down why I even took this trade, right? Let's just go back to a time where I didn't know if I was going to take the trade or not, all right? I was just looking for confluences, all right? So let me show you how my mind works. But also, let me just, we're sticking to the same, you know, the concept of why this lesson's about percentage and risking and all that stuff. So I knew, all right, if I lose another trade again, then I'm losing $500, right? That means that I've overtraded. I got slapped in the face, and I'm not risking 1,000 though. So I could have risked 1.5% today. Knowing that, do you know what I would have done? Because I overtraded, not revenge traded. I overtraded. If I find myself doing that, this is the only way I can justify it, by not trading the next day, by actually showing up to the charts, marking up my setup, but not trading it. And when it booms and it goes in my favor and I see how much money I could have made, and I, like, from saving myself the little L, I psychologically fuck myself in the head and say, oh, you know what? If you just stayed away from those charts yesterday and didn't try and get back that money, which I did, but it doesn't matter because it could have went wrong. What I'm trying to say is if it went wrong, my only way I can justify that, some people say, go in a cold shower or, you know, starve yourself for a week. Don't starve yourself for a week. Punish yourself some kind of way. Get the whip out on your own backside, like, get me? No, my punishment is coming, marking up the charts, watching them play, but not being able to touch the button. Logging out, boom, 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 and saying to myself, motherfucker, you idiot. That was the cleanest break of your life. And you know what? You just missed out on it because you wanted to go and risk an extra 0.5% of your trading capital just to try and recover because you couldn't take the loss like a boss. You had to be a bitch. So even though I took the dub back today, all right, it was still a bitch move. So let me just show you why I did that shit anyway. Why the fuck my charts even look like this? You're probably going, where did he figure that out? You know what I mean? Well, this is how I figured it out. I figured out that, let's just break down this shit real quick. What's this right there? This is a fair value gap, okay? Also is a support and resistance, but it's a fair value gap there too. And on the 1 minute time frame, you come down. Yo, the coffee's hitting hard. And there's another little area, right? So I'm thinking to myself, 15-minute time frame, we're overbought, all right? We are overbought. Got a big ass rejection wick. We're probably going to come down and take some sort of liquidity or fill in some gaps, yeah? So you go to the 5-minute time frame, you see there's a fair value gap right there. There's your fair value gap. There's your little support and resistance. That's all I'm targeting. If it breaks back down to the downside, it does. I get in, I smash, I got the fuck out, okay? So, yeah, I made back my shit. I'm down like the littlest now. The tiny, it's still a red day on my chart, but it's a tiny one. But still though, all right, I came back with a plan. So we broke structure, boom. We do the thing. I kind of know it's going to pull back to this area, yeah? Like, it's going to fill in that gap and then it's going to go and fucking kapow. But it melted and then it still went kapow. But I was a little bit late. Sorry, I got out a little bit early. Was I trying to achieve 2K? No, I was just trying to recover for the day like a little bitch and instead of walking away. So I went against today's lesson, yeah? I'm being real with you. I didn't revenge trade. I overtraded. So I hope you know the difference between revenge trading and overtrading right now. Put a 1 in the chat if you're still with me and you actually understand the difference between a revenge trade and an overtrade. Because you can overtrade, but as long as you've got a plan, do you know what I mean? It's still not great, yeah? But revenge trading is when you take a loss and you feel hot inside, so you just bang the opposite position or whatever. No plan. I literally went and watched fucking Baddie South, and I'll admit it, yeah, I've been watching Baddie South. I've been watching some American female show with the missus. I'm just sitting there eating, watching Baddie South, and I'm like, I don't feel right the way that New York did me today, twice. So I came back and I looked if there was any structure being made and stuff, and just being a little bit more advanced. I'm not gonna say, yo, I'm goated. I know how to trade. I'm great. No, you'll see. I got it. It was just a clear setup for me, so I just got back my dough basically. But you can start doing now when you're more advanced. It's not revenge trading though. I'll argue point blank with people. It's over trading. So anyway, the whole point was percentage risk to reward. So I'm not gonna do a back testing session now, but let me tell you one thing that's true. All right, if you show up every single day, let's just go to NASDAQ and we'll do 2 examples. All right, I don't know how the fuck, but I'm pretty sure you've been training with me anyway, you lot on the lives, and seeing that we've consistently, if not every single time, been hitting 1-to-1. Every time, or close, always hitting 1-to-1s. So if you hit 1-to-1, every, like more than less, your fucking win rate's going to be 90%, right? You're just going to be taking, like, how can I say, smaller money faster, or risking more money. So it works out the same. If I'm willing to risk $1,000 on 20 pips, but you're risking 1,000 on 5 pips because you want to smash and grab really fast, like, it's risk to reward ratio matters for me. I need to hit my 1-to-2s and stuff, because then if I hit my 1-to-2, if I get, this is the difference between me and a 1-to-1 trader, all right? Let's just put it out there. When I actually grow some balls and stuff, and I know there's a trend, and I know that the shit's booming, all right? I'm like, okay, cool. We're heading towards this area up there. This is the difference between me and a 1-to-1 trader, right? All right. Also, I'm about to get into over trading too. So if I'm a 1-to-1 trader, okay, you're getting your breakouts. All right, boom, cool, whatever. Let's say you use a 30-point stop. All right, get in. You go for a 1-to-1. You just made 1,000, okay? But you risked 1,000 because you have to. If you're trading one-to-ones, you've got to risk what you're willing to make. You're probably going to win more than me, maybe, all right? But guess what? You're also going to want to overtrade more than me. You're going to want to, you know, like I feel like you're going to want to take more entries and shit. One-to-ones, sometimes they hit so fast, you're like, I want to do it again. So you got to be a disciplined motherfucker when you're trading one-to-ones, all right? Because it sounds great, but I've hit one-to-one before, like, oh shit, man, I hit another one-to-one. And I'm like, and now I'm fucking fighting myself with one-to-ones. So when you know you hit a 1-to-2 minimum, I'm going for my 1-to-2s. This is where you can start trailing stop losses and shit and know the overall targets up there. Potentially, I'm going to grab all this. So in one trading week, one day, I can make a 1-to-6 and be done for the week. But you've got to show up every single day and hit your 1-to-1s. So there's differences, but like, if you're happy with that and you can actually be disciplined enough to say, I've just hit my 1,000, I've risked 1,000, but I've just hit my 1,000. I promise you are going to be overall profitable if you can master discipline and master the consistency and stick to the same shit all the time. But 1-to-2s, 1-to-3s, 1-to-4, risk to reward ratio for me, I don't like 1-to-1s unless the markets are super iffy. I'm getting fucked all the time. I'll get my 1-to-1s. I'll smash and grab happily, all right? I'll take it off the table because there's nothing wrong with that. So neither am I saying that I'm choosing one or the other, actually. I'm quite bipolar with trading. It depends how the week's doing, how I'm feeling, what the session's feeling. But if you can, choose one of them and stick to one of them, yeah? If you're a smasher and a grabber and you say, I'm willing to do my 1,000 every time or whatever, but just make sure you know the risks and what you're risking and how many trades per day you're going to take if you're going consistently for 1-to-1s. With me, you see on the stock market open, where is the stock market open? Just look for a good fucking day because sometimes there's amazing days, right? Let's not get it twisted. Some New York opens are absolutely sick. All right, so this was 1:30. We're just going to use it as an example though and say that it's 2:30. All right, let's just say this was the New York Open. Even though it's an hour before, I'm just saying it is. So this is the thing. Consistently and psychologically, if you're 1-to-1 in it, you got to fucking be happy with this. You have to. Like, you can't close your 1-to-1 there and get FOMO and start trying to get back involved. No. Do you know what I mean? If you didn't hit this 1-to-7 or whatever, because like I'm not using a 20-point stop when candles are like that, I'll be real, I'm using like 30, 40, but still, I could hit a 1-to-5. Do you know what I mean? Fucking, this is the shit I'm going for. I like holding my trades. I like letting my winners run, but sometimes it is best to smash and grab. But listen, can you deal with this? This is what you got to ask yourself. Can you every day do that and just walk away from the charts? Because if you can't, and you're going to want more, just might as well be a risk to reward trader and be like, I am going for 1-to-2s consistently, 1-to-3s. I'm risking $5 to make 1,500. Be consistent with whatever you do, all right? So that's all I'm saying. So you kind of know what kind of trader I am. I mean, I'll smash and grab if I fancy it. If I'm on my phone and I'm like just sitting in a waiting room somewhere, I'll be like, you know what? I'm fucking bored. I'll go on my phone. I ain't traded my Forex account today. I'll push buy or sell. I'll see a quick 6, 7, not even 1,000, just something random. Bam, closed, done. You know what I mean? But when I'm coming up to show up to the party with you lot, you see how I trade. I'm trying to be consistent as I can. So let me take a look and see if there's any questions. Oh shit. Just wondering, just for somebody who is wondering, what if a oh shit. Sorry, let me drink this because it's going to be cold. Ugh. What if you're a confident trader and you want to pass a prop firm fast? Is it okay to risk more than 1% on an A+ setup going for the 1-to-1s? Yeah, 100%. So, if they say you can pass within a day or two, whatever, like top step, I know the overall I can lose is $2,000. So if I come to the charts and see an A+ setup, and I'm talking fucking beautiful looking, structured a lot, everything's just giving vibes, and I just go buff, buy, and I go in and I'm risking like a mini or two, and I know I'm like risking almost the account probably. like doing that twice, you know what I mean? And just hitting those one-to-ones fast is possible. You just gotta have balls. You can't hit that buy or sell, see yourself in a 700 fucking drawdown and go, and start like the gut flipping in that, because it's honestly, it's going to go in your favor or it's not. It's both ways. So understand, when I'm passing prop firms aggressively, I just don't give a shit. I kind of read the markets and I'm like, I'm at the point now where it's like, you know what, I'm looking at a naked chart. I can pretty much understand if a candle's going to pull back or go up or do something. So I just aggressively pass them. And that's how I've stacked up a few props on the slide. You get what I mean? Just like being away and shit and doing my thing. But yeah, like, you know, if you want to pass fast, just understand, like, say this was the New York, you came and I'm risking, I don't know, let's just say I'm risking less than you, because I don't want to pass in a day. I want to pass in a week or two. So when this breaks, I'm getting in and I'm risking $500, and I've already worked that out with my my thing up there in the corner. We'll go do that in a minute. But say I know if I lose this trade, I'm gonna lose my 500. But if you lose, you're gonna lose 1,000. But if you win, you're gonna win 2K. Well, you can't technically do that on top stacks. It's breaking the 50% rule. But if you win, you got a solid stop of a 1.5. Boom, or a 1-to-1 even, whatever. Do you mean 1,000 for 1,000 kind of thing? I'd say a 1.5 is more sensible, right? But yeah, you can do that. Get me? You can do it. You just can't be scared when it's time to go for it. Like, do you get me? So yeah, the answer is you can be aggressive as fuck when you're trying to pass a prop firm, as long as you got a bit of money to cover your resets, because you're probably gonna get reset. Don't overtrade. Don't try and pass in the day. 'Cause I've seen people spend hundreds of dollars to pass one prop firm in a day because they're money hungry, end up spending all their money in a day and then blowing all them accounts anyway because they wanted to pass in a day and they ain't even got a plan anymore, and the fucking markets are slow and everything's just against you that day. That's why I see it as showing up to work, because for me, this is a full-time job. So that's why I'm forced to trade my fusion markets without you sometimes as well, which I have done today too. I made a couple of £100. I think I'm up, like, I'll show the stats and shit, right? Whatever. I've been busy with you lot, but I have made money on my fusion since Tokyo last night and New York today. Just chilling in bed with my phone, buff, took a trade. So this is my bread and butter, do you know what I'm saying? Like, you need money to make money. But let me just get it up real quick, bro. This is today's stats. Taking the piss, bro. My phone's so slow, right? I think I need to uninstall MetaTrader and reinstall it, because even my closing my positions, and that's really bad. Really fucking bad. Oh, I don't like that number. So gross profit 1666, but still 1,335 pounds, not dollars, Great British pounds, since Tokyo session. All right, so Tokyo and today's after New York, I took some dubs as well. I paid £120 in commissions. So yeah, in a day I've made £1,300. Do you know what I mean? Like, and that's just me, because that's my personal account. Do you know what I mean? But what do you say? That mad, bro. I won't do that for sure. Oh, probably talking about, sorry, no, you ain't taking me off topic. I take myself off topic. Yeah, we were talking about being confident and passing trades and shit. So, yeah, I mean, I always tell people don't start a prop firm on a Wednesday or a Thursday or a Friday, right? If you're starting a prop firm, make sure you start taking your first trade from a Monday. That's my opinion. Unless you're planning on passing in them 2 days or 1 day. But I say give yourself a week or two. What's wrong with that? And, like, the more hungry you are for money, the more it's going to make you fucking starve. I promise you. The quicker you chase that bag, the faster the bag is than you. I promise you that. All right? This is the second question, bro. Go on. Go on, bro. I ain't in a rush for a minute. I can cover the rest of this shit real quick anyway. It's mostly just risk management. Oh, that's the second question. What advice would you give to someone who's trading props that is looking to get a payout every month and building consistency? So, yeah, every month, all right? So let's break it down. You go to a prop firm. You understand what a cycle is. So like a payout cycle. They tell you what their payout cycle is. So You know, some of them are every 14 days. Some of them you can request a payout every 6 days. Just understand the cycle. Understand how much you're allowed to withdraw as well. So realistically, say you wanted to be a funded trader with Top Step. You got a $150,000 account, the biggest one you can get. Oh, I don't like them, actually. I hate 150K accounts. I mean, only because the more the profit target and stuff like that, it fucks my head. Like, I like round numbers. There's something wrong with me. Of course, having 150K funded is better than 100, but let's just say 100 because I like 100 more. I've had a 50K and 100K, all right? Never had 150K. So I got my 100K challenge. I've passed it. Now, I know I'm allowed to make 5 racks a day, technically. I'm allowed 5 racks on the GOAT funded if I pass. I'm only allowed to hit that, and that's the maximum. And my payout cycles every... I can withdraw twice a month. So if that they're telling me the maximum I'm allowed to... oh, yeah, and the most I can withdraw in one go, I believe, from a cycle... Fuck, I can't remember, man. I think it's about 5 bands anyway, all right? On whatever, on an account. So let's just say I'm allowed to withdraw 5,000 from 2 100K accounts, 3 of them, whatever. You round it up, you go, okay, cool. Technically, I could make 50, I could withdraw 15K every month, all right? That's way more than a fucking average salary. 10 grand a month should be like a goal. You should say to yourself, you know, if I can make 5 to 10K per month, just starting off, that's fucking amazing. Like, that's absolutely amazing. So go for like 1,000 a day. Do you know what I mean? Max 2,000. Don't fuck with your consistency. Don't be too thingy. And that's why I'm talking about compounding money. Same way compounding accounts, all that stuff. Have a backup plan. They tell you to keep 50% of your profits in there for a cushion. So why would I not make my own cushion in real life? So even though when I go on a bender or I go off the rails and I'm ghost for ages, I got a cushion. Like, I got a fucking comfy cushion. Do you know what I mean? So just always have a cushion in life, wherever prop firms and stuff. Me and my bro was talking about that. I'm telling you, man, honestly, like, it's crazy how much money you can make trading, but it's also crazy how much you can lose. So when you finally do get funded, and you know if you can take 50% payouts, then you don't go and aim for massive fucking 10 grand days, 2 grand, 3. Just aim for something realistic, man, because like I said, if I see myself open a trade on my personal account, I see it hit 500, 600, £700 in a few minutes, I'm taking it. Because in the UK, to make £500 a week, you've got to graft, bro. Unless, like, I mean, you go to school and get your grades and stuff, you can probably, that's like an average wage. But, no, for someone with no education like me and like building site work and stuff, to bring home 700-800 quid a week, mate, ain't fucking happening. Not in Wales. So for me to make a bag a day, I am telling you now, 1,300 quid since last night, since earlier on, is fucking mind-blowing still. But it's real, and it happens, and it's nice. And I can look after my family, do you know what I mean? So yeah, let's keep on. I got a little bit more to teach anyway. I don't know, I go so off track. If anyone's watching this on replay, feel free to fucking break out, see where my head's gone. Reach out to me on the chat, all right, and break some questions out. I keep saying break. All right, so small percentage anyway of your account per trade. That was what that whole thing was about. Position sizing, how to calculate lot sizes, right? So let's say we're talking trading view. Now, it's different, right? Because this is futures, so you already know this trick now. I didn't even know, you know, I didn't teach you this. DG taught this, so shout DG. And like Meech and all them lot who done this shit already. Anyway, I never even done this stuff. I didn't know about futures doing it. I know that when you press buy or sell with a Forex account, you automatically can pull these stop losses and take profits and stuff, right? But this is how you calculate. On any platform, you're going to get the opportunity to do this. MetaTrader 5, they give you the opportunity to do it on your phone. I've got a risk video on that somewhere. I'll have to post it, but there's going to be somewhere you can figure that out. Don't use a risk calculator. Fuck risk calculators. Yo, risk calculators used to stress me out. When I used to go online and look at a lot size calculator, the stress it'd give me. The amount it pissed me off. Like, it's so much easier to be able to go, all right, let's take a look. Fuck this now in the corner for a sec. Let's just take a look at what I'm looking at. No, all right. And this could be MetaTrader too. I'll have to do a phone like tutorial or some shit to like add in this course when it's done in this part of the video. But you know, like I said, I want to risk 40 pips. Cool. I know what I'm risking. I want to make a 1 to 2. So you'd break this out and you'd go to your limit, make sure it's set to buy, and you put it in the middle right there, and you pull your stop loss down, and you'd know that's your 8 under. And there's pretty much your double. Yeah, 1600. Double of 800, right? So you know, now it's moved off, yeah, right? It looks out of place and stuff, but you know this right now, this fucking green and red, anywhere you put it, even if it's up there, if you get in and price, as soon as it touches this, goes, bloop, you've lost your 800 quid, all right? Or you need to be closing, because that's roughly what you're going to be losing. You know, like that's how you do it. You just fuck around with actually pulling the stop loss and stuff around. Demo trading, that's another way. Like paper trading, whatever broker you use, they're going to give you demo options. So if you go with Fusion Markets or IC Markets, anywhere, don't be scared to open a demo account and play around and mess around and get a feel for things, because there's nothing better than being able to go on my phone and knowing that on Fusion I can just go like this, put 4 in the gold, bam, hit buy or sell, understand exactly how things are going to work, how it's going to feel, how quick I'm going to be in profit or lose money on the day when I know the candles and the volume and stuff like that, right? So always mess around on demos, play around, don't be scared, because I'm still figuring shit out now with futures, to be honest. But if you're at a beginning stage trading futures, I'd say minis are for people who want to pass fast or they know their shit. And micros are for people who just started out and they're trying to figure things out, because the difference between a mini and a micro are huge. If a micro moves in, you know, a micro contract, you get 10 points profit. The difference between a micro and a mini is massive, all right? So just know that. I think it's like a, wait, correct me if I'm wrong. I think it's $10 every point on a mini, and then like the micros is $1. I'm not sure. I might have that wrong. Maybe. I'm still figuring that shit out myself, right? How do you determine what risk to reward? Let's take a look at that question. How do you determine what risk to every day? All right, so every day. Now with London session, I explained this, but I'll do it again. With London, if I like trading gold or I like trading Nasdaq, but let's just fucking go anywhere. Let's forget Trader 8 for a sec. Let's say I want to trade Euro USD. Let's just say that, which I ain't trading it, but let's just say I did. Fucking hell, that was nice, mind. What the fuck? So anyways, we come over, London session. Here's London session. No, sorry. That's gone, mate. Here's London session. Now, I used to love trading this pair because I knew that all the time when London comes in, it's going to sweep some shit and then it's going to go and carry on in a direction. Pretty much always changes structure. Euro USD is like on a London session, it sweeps out some shit and then it just changes structure, right? So I used to love trading Euro USD. But say I wanted to I determine how much I'm risking. I can't do it now because the fucking thing's placed on bar replay mode. But I'd go like this. Sorry, I wouldn't even be looking right now anyway, because I know overall, we'll be learning about this next week, but overall, all right. There's like your higher low and your higher high. People will get mixed up and say, this is the higher low. Yeah, you could use that, but you got to understand if you do, it's probably going to get swept out because it's not actually that powerful. It's not even powerful. You've got fair value gaps and everything that's begging to be filled in. So I'm not going to teach you about that today, but boom, anyway, your breakout. So let's say you got your breakout there. All right, we were looking for buys. Get your breakout. Now, how am I going to know what I want to use if I'm used to using like 4 points, 8 points on gold and shit like that? But I'm going to look anyway, bro, and I'm going to say before this shit even opened, and I know this is where I'm like trying to get in right now, technically, when price comes down. That's my breakout there. That to me looks way too big. So I'm going to go on my MetaTrader 5, all right, or I'm going to just log into whatever broker I'm trading and pull the stop loss down. That's how I'll determine it. I'll be like, you know what? This is what suits me today. I ain't using a fixed stop loss, but tell the truth, this actually kind of looks like gold to me. Yeah, right now it's giving me gold vibes with the 4 and the 8 pips. So for gold, my standard thing to trade on London is like maximum and low volume sessions like Tokyo are like 4 points. All right, I like to see the number 4. if I'm using 8 is because the fucking candle volume is like that. But realistically, I'm a 4-point trader. I like that stuff. And that kind of looks good on you too. So I understand that if we break through now, it's a 15-minute time frame. That's a lot of breathing room. Like on the 1-minute time frame, it's going to look even bigger. Like look at it on the 1-minute time frame. That's huge. Do you know what I mean? So it's whatever time frame you're on, really, and whatever you're comfortable with your eyes seeing. Like it all comes with experience, I reckon. So for me, that looks good. I know I'm getting in on a break, whatever, it works out. So on the 1-minute time frame, though, if I had to be real with myself, it could have been different, man. Like, yeah, so let's say if I was down there looking for my breakout, I don't think I would have been using a stop loss this big, if I'm being real with you. Oop. Fuck's sake, bro. Straighten out. If I was waiting for the breakout on the 1-minute down there, I was like, yo, okay, you know, this is looking bullish. I don't even think I'd use a stop loss that big. So this is how you need to start adjusting shit kind of before the trade happens. You need to be looking and going, this kind of looks good. You know what I mean? Like now we're risking 2.5 or whatever. You know what I mean? And then boom. So that just turned your fucking, that just turned your 1 to 2 or whatever risk to reward ratio into like a 1 to 6 just because you got your sniper entry and you tightened up. So it's all about being ready. That's why I say get on the charts, start playing around a little bit before the opens of the sessions. But it's hard to explain to you how I would do it because it's on the phone. That's like I'd be looking on my phone, going to MetaTrader. I'm gonna have to screen record a tutorial or some shit. But it's the same thing. Basically, just dragging the stop loss down, deleting all the lots, like deleting everything out of this, just going to 0, like putting it on 0 on that MetaTrader, and with Forex it'll be 0.00 or whatever, right? And I would just bang nothing in there and then pull my stop loss down, and I'll just start tapping the plus sign and seeing how much that stop loss is losing me if I lose. Get me? I'm just looking with my eyes. I always adjust my stuff. Like that's the difference between me and a lot of traders. I know like Mamba's got a solid 20 pip stop no matter what. So when he presses buy or sell, that shit either flies in his favor or it fucking don't. But that's how you make a lot of money with them solid fixed stop losses. But sometimes, you know, I'm not down to use this stop loss looking like that on a 15-minute time frame. I want it to be looking more like this. Do you know what I mean? So it's whatever time frame you're on and stuff like that. But you just need to be on the markets chart, on the charts, marking up the markets before they open, before you even see the move happen, right? You just need to know. So demo in, man. Like, find a pair you like and demo the fuck out of it on whatever broker you're going to be using. Or say Top Step, you trade a Top Step, they offer a demo account. Go and demo on Top Step. Go have a little play around. Get yourself, dive into the water and have a swim. Do you know what I'm saying? Because you're never going to learn how to swim if you don't even jump in and try. What do you think about... Oh, yeah, no, I think I just answered that. Yeah, but... Yeah, man, it's different, bro. It's hard. But like I said, NASDAQ, I like 20-point stops. So if the markets are already giving me candles like this before the open, which this candle was before the open, that's 180 points, bro. So that's 180 points. And people, and this is a 20 pip stop. Yeah, that's a massive move if the shit goes in your favor with a 0 break, 0 retracements. Does it? It does. It does. So if you was just sticking to your plan, bro, and saying, fuck it, I either win or I lose, and the shit popped off for you, and you used a 20-point stop, it wouldn't have took you out of the game. And then you would have caught this big ass move. And where you would have caught yourself a fucking, whatever that is, a 1 to 7, you would have got a 1 to 7. But because I was already not looking at that way and saying, no, man, these candles are averaging crazy amounts and shit, then on the pullbacks and that, this would be, well, I still would have got in on a good one, but I wouldn't have used 20 pips. I would have been using like 40, 50. Just to say I use 50, your fucking 1 to 9 is my 1 to 3. You know what I'm saying? So, yeah, using 20-point stops is fine as long as you understand one tiny move against you and you're fucked. But if anything, though, they're really... looking at them now is like, oh shit, the fuck? I'm liking the 20 pip stops. I mean, like if that was the breakout there, you do get a clean break, bro, and you got a 20 pip stop. What the fuck are we talking about there? Like, what are we talking about? A 1 to 10? Come on. But no, seriously, I'm gonna have to go and test this. But no, on Forex, yeah, you got spreads. So choose a broker with good spreads, because you could get in this thinking, yeah, and it doesn't take you out technically, but 1-0 pullback and the fucking spreads just take you out the game. We ain't got the spreads yet, but we will. Not on this lesson. So yeah, 1 to 20 fixed risk to reward's fine as well. That's actually fine, but like trading now, that'd be insane. Like, it looks amazing, but you'd be sweating the whole time this motherfucker's pushing. You're like this, oh my God. You need to get your trading emotions in check. But I'm not going to lie, no matter how I look at this trade right now, it looks tasty. And for 20 pips, oh my gosh. When I do back testing, it always looks that way. It's different in the markets. But yeah, man, if you're going to stick to 20 pips, man, fixed, that's cool. So what's the other thing I need to teach right now anyway? Crazy ass lesson is mad. So this was about calculating lot sizes and adjusting size, risk to percentage and all that stuff. So yeah, the more volatile the markets are and the more volume that's in them, like I said, is how I determine how I'm going to change my stop losses from a 20 pip stop to a 40 pip stop. Now, let's just break one thing down before I move on. Like I said, if we go to the fucking session, let's just say we know this isn't the New York Open. Let's just say it is. Let's just say it is. All right. If we know that it is, in the next minute is the New York Open at 9:30 Eastern. This is fine. You go on your 1 minute time frame. That's fine. That's fire. All right. That is fire, because in 1 minute, it almost hit your whole fucking TP. Boom. 2 minutes. Bang. 1 to 3. Whereas I would have been looking on different shit and that. So this is where I say you got to be consistent with it. You got to be consistent with it. But then, like I said, on the 1 minute time frame, I'm a pretty smart geezer, and I wouldn't tell us to use a fucking stop loss this big, if the 1 minute candles were all averaging that. So I'm pretty smart too. I mean, like right now, I probably would have been using 30. All right, 20 to 30 points. That would have been my thing. Because I look at what the candles are averaging before the open, and I just want to make sure that my stop loss is at least as big as the candles that are averaging. Because if I buy and the candles are averaging the same amount as what I risk, say like the candles are averaging 15 pips there, and my stop loss is 15 pips, that means that if I press set buy and it pulls back one fucking candle, just one tiny little baby thing, I'm done. I'm absolutely done. I just got smashed. But if that's what you're consistently doing and you stay consistent with it, you'll have a high win rate probably, and you will see money from it. But you got to understand that them L's are going to hit you faster and harder as well sometimes. And it's going to go in the way you wanted it to, but you didn't give your trade no room to breathe. Do you know what I mean? So it's good to give yourself a little bit of room to breathe. Make it make sense, that's all. But looking at it now, if you trade the 1 minute time frame, NASDAQ on the New York Open, 20 pips is fine. But I'm pretty sure there's going to be times where you look and you go, like, this actually look for the New York Open. This ain't even the New York Open, bro. This is just where it's warming up. I mean, that is the New York Open. It's not a stock market open. All right, there's the stock market open. Choppy as fuck. I'm not even sure if that was today. No, it wasn't. So yeah, I'm looking at what the candles are averaging anyway. Long story short. This was, I remember this actually. I remember this trade. I said, oh, I weren't getting in because it was a pre-break. Wish I did, but I still caught the dub anyway. But the next candle's the one. Well, that was a nasty ass candle anyway. Doesn't matter though. Let's just say we got in there and we used a 20 pip stop. Now on Forex, all right, Forex, depending on where you got in, I say there because it looks perfect, textbook, but you know, if you're actually being real, you might not get in there. You might get in there or a little bit later. With a 20 pip fixed stop loss, shit might come up and take you out the game, because if you got spreads, it's going to take you out. Or on futures, you might be very, very lucky, all right? But let's just say it took you out the game and then it just continued down. So it done that bookie shit, took you out the game and went and did the business anyway. And that is so frustrating to see, because it's like, motherfucker, for 1-2 pips, it took me out the game. Whereas me, I'm like, I'm going to give it some room to breathe. I don't mind 40, 30 pips, whatever, point stop losses. This is why you see me hold my trade sometimes, and then it goes in my favor. So having a fixed stop loss sometimes on the charts can go against you, but it can also save you, because there's been times where I ain't had a stop loss at all. Most every time I trade, I never use a stop loss, and the markets have like kicked me out, or like I've been kicked out of a platform, or it's froze, and I'm like, oh my fucking god, sorry Jesus, but oh no, I got no stop loss on, and this is my personal 10k account. What am I gonna do? So it's funny to laugh at now because it didn't like kill the account, but I'm telling you, it ain't funny at the time. All right. Anyways, we can move on. I think we ain't got much more to do with this. This was more just about risk management. Aim for at least 1 to 2. No, we got that out the way with. It's up to you if you want a 1 to 1s or 1 to 2s. I think you kind of got that now. Letting winners run and cutting losers short. So all right, this is it. We kind of covered this shit too as well, but the only way you're gonna let them winners run is if you're targeting higher time frames and stuff, or if you're aggressively trailing that stop loss. Now that comes with confidence, right? It's easy for me to say to you all now, you know, when this got broken out of, you just trail your stop loss. Just trail your stop loss. It's easy. You just trail your stop there, then you trail it there, then you trail it there, and you trail. No, bro. I mean, it technically, yeah, but it's fucking hard to see yourself up 2,000 profit, and as soon as one little red candle comes in, you start going, oh, nah, fuck this, I'm closing, right? It's hard. It's hard, right? So it all comes with time and emotions. Like, do you know, if I tested myself and I said to myself, right, I need to get a 1 to 10 this week, I'm pretty sure that I could. I'm pretty sure I could. I find the right setup and stuff, and I get in and I hold it and I trail. But you know what? It's easier said than done. So I believe that letting your winners run comes with experience and time. But cutting your losers, all right, short is not a bad thing. Cutting your winners short is the bad thing. So, like, you see yourself up $200-300, you close the trade. But you're consistently losing $500, $1,000, and you're blowing fundeds. That's because your emotions ain't in check. So how does it make sense? You need to make it make sense. At least if you're going to risk 1,000, make 1,000. And that's at least. For me, that still, I want more. So if I'm risking $500 is to make a bag, all right? And I got to make it make sense. I did used to do that, though. I used to be that guy who would let my losers, like the other day, I fucking went on tilt with a Tokyo on my one funded and was like, fuck it. And I blew like 3 bags. Like I just blew it and was like, because I was just overtired and I didn't care, which was wrong of me. Really wrong of me. That's why I'm coming so professional now. But it's like, yeah, what the fuck? Like thinking about it logically is like, nah, man, that's not okay. So it don't make sense to like let the losers run, hoping, I think that I'm going to be right. This is probably going to go my way. Because when it doesn't, you're fucked. So cutting losers fast, there's no problem with that. But cutting your winners fast, there's the problem. So it's going to take you a little bit of time to get over that. But if you see yourself up $5 and you know that the risk on the table is $5 and you're a 1 to 2 risk to reward trader, the only thing you can do is move to break even. Maybe take partials. But you're aiming for a bag. So stop cutting those winners short, all right? Be brave. You have to be. Unless you're a 1-to-1 trader, all right? So, yeah, that's definitely something you need to do. Let them winners run a little bit. But cut the losers short, though, and I mean that. If you think the trade's going against you, not think if it is going against you and you know, oh, I'm sweating now, oh my God, I'm not comfortable seeing what I'm losing, then cut the fucking trade. But if you've gone in little and you're like, I'm good, I'm only down 100 or 2, and plus this is only a pullback, so it's probably going to go in my favor, then hold it. But hoping for something, all right, is, you know, you got to have some reasons. I want some fucking proof. I want some evidence why you think you have, you know, any rights holding that trade in the red, all right? Cut those losers and look for the next setup or whatever, but just don't be emotional about it. There's a difference. Emotional control, all right, patience and discipline. So that's where the trading sessions come in. I believe for patience and discipline, all you need to do is trade a session. All right, so just trade London or trade New York. All right, this is where having 2 accounts, you know, one for London and one for New York is smart, because or even Tokyo, because if you're trading your one account, you're basically making profit, risking the profit in the same day. Makes no sense. You need 2 accounts, 2 sessions. All right, so patience and discipline. What is that? What does that mean to you? Like, patience and discipline. Ask yourself, am I patient? Am I disciplined? You could be patient and you might not be disciplined. Or you could be... no, it doesn't work that way. You can be patient and not disciplined. But you can't be disciplined and not patient, because that means you ain't disciplined if you ain't patient. All right? Get me? I'm a fucking genius at it. No, seriously. Yo, Moshy Mosh, what's good, bro? Fucking hell. Shub night, I ain't seen you in time, bro. But yeah, fucking, what was I saying before Big Shubs came up on the charts then, in the chat? Oh yeah, patience and discipline. So basically, before writing any more too much longer and stuff, the difference between them. All right, so I can be patient. This is where I was talking to you about how you can be super patient and wait for the almost all day, wait for that price to come all the way back to your support zone, wait for the breaker structure, get in, and then it goes against you and you lose and you go on tilt and you fucking, you ain't disciplined. Now, being patient was fine for you because you was patient all day. But then the discipline, you wasn't disciplined. So there's no point being patient and not having discipline. Do you get me? Because discipline beats patience every time. I don't need to be a patient trader. I can come to the charts 5 minutes before the New York Open, not even fucking barely put any effort into my setup at all. Just know that I'm getting in on a break of a high or a low. Boom. But the only thing I do need to be is disciplined. So I don't even need to be patient in trading. I don't really give a shit. Like, I can hold a trade for 30 seconds and be done. I don't need patience. Sometimes I am patient. I can be if I want to be. But discipline, I have to be. So you don't need to be patient, but you need to be disciplined. That's the difference, all right? So jot that shit down when you're watching this replay. You don't need to be patient, but you need to be disciplined. But if you can be both of them, fair play to you. That's what you need to be. So handling losses and drawdowns. How do I handle losses? I turn my computer off. I walk away. I go out. I do something. I fucking watch baddies. All right, yeah? Like, whatever. Do something, all right? And I'm not joking. There's no fucking... I'm not going to tell you to meditate. I'm not going to tell you to do that. I'm not going to tell you to go... fucking walk around and get some fresh air and like, just get on the game or something. Go do something, yeah? Like, just get off the fucking computer, because the more you look at the chart and go, like, like, what did I do wrong? What did I do wrong? Well, if you know you didn't do wrong because you're patient and disciplined, you don't have shit to worry about. All you can do is say, oh, well, bad day at the office, babes. I'm back. Didn't make no bread, but you know what? We go again. That's being a boss. That's being a disciplined trader. That is literally the secret sauce everyone wants. That's that shit that they're like, I want my aha moment. I want my aha moment. I don't fucking know what the aha moment is. Like, all I know is I'm slowly getting there, I think. So I can handle my losses. I can handle my drawdowns. I'm not scared when I see red. There's a difference between handling a loss and a drawdown. Like, some people can handle drawdown way more than they can handle the fucking loss. They're like, yo, I'm good. I'm good. I'm like fucking 10K in the red, but I'm good. I might win still. And then when they lose, they're like, oh, but it's like, why was you even 10K in the reds, bro? What the fuck? Yeah, the drawdowns and the losses, they need to make sense. So it's like, yeah, sometimes I'm like sweating a little bit, you know, if I'm on a live stream and I'm like, a little bit heavy in with my trade and I'm like, oh fuck, I hope this goes in my favor because I'm like 2K in the hole. I shouldn't have been 2K in the hole. Slap yourself. That ain't discipline. So drawdowns, I'm not scared of them. Me being in a drawdown right now, if I go in with 5 micros and see that I'm in a $200 drawdown, well, I know that I'm okay with a 500 loss, so I'm not closing my trade. 300, I'm cool. Okay, 460. I'm thinking about closing. Now I'm thinking about closing. All right, I didn't close. If gone back to 300, 200. Oh shit, now I'm back in the fucking blues. Yeah, it worked out for me. Held the drawdown a little bit, but I ain't holding my losses. If I say that I'm losing an amount, I'm losing that amount, even if it's a little bit more because a slippage or I closed a little bit late. I'm not, hold those losses like get out of those losses like a boss. Don't hold no losses. You can't hold a loss or hold your drawdown and this is hurting me, man. I'm feeling emotional. Like I got these weird butterflies in my stomach. You know what I mean? Same way as when you win, you should them butterflies as well, and you barely need to get the fuck out, because even winning and feeling butterflies in your stomach is because you know full well those butterflies shouldn't be there. Like, because you're winning too much. That's way too much bread. You're like, oh my God, I'm fucking up. Like, what? This is a good feeling. Yeah, it's called the trader's high. It's called the trader's high. Everybody has it. Everybody gets it. I used to have it. I don't have it no more because I'm just consistent. So it's business to me. I'm bored. Come to the charts and I'm like, yep, this is what we're doing. This is how we're going to make it today, or we're not going to make no money today. All right. So yeah, handling losses and drawdowns, that was anyway. Yeah, basically just get the fuck out the trade. I always tell people, what's your problem closing a trade? Like, and they go, oh, it takes energy, man. It takes so much energy to just get the mouse and go close. No, it doesn't, right? It is maybe mentally draining a little bit for you if you're like, oh, like, this is why I say when you see one-to-ones and shit, all right, move to break even, just let it a risk-free trade, or just take some off the table or some shit. Do you know what I mean? Like, make it make sense for you. I don't feel that pressure to close the button and reopen a trade. I don't. Like, if I see myself up at 500 and it comes down, then I'm like, nope, I'm closing before it goes red. And then it reacts and it goes, but I'll just press buy again. But you don't want to be doing that too much. You don't want to be doing that 10 times in a session. Closing, opening, closing, opening, 'cause you're scared. All right, so it got to make sense for you to let the shit go into drawdown. Now, let me give you an example on the chart of why I would let something go into drawdown and when. So this, perfect example right there. So I just get in on my breakout. All right, move this shit. Boom. Let's just say I get in on my breakout. There's my breakout right there. I'm using a 20 pip stop. Well, I'd be real with myself. I'm using a 30-point stop. And I see a get there. I see my 1-to-1. This is a good tip for you too. No, if you put a 1-to-2 on the charts, whatever the fuck it is, all right, just get your ruler out quick. Go from your entry. Now you know from your 1-to-2, this is your 1-to-1. Bang it there. So you know when price, gets there. 1, I'm now break even, because if price comes all the way back down, why the fuck should, and I've done it, I do it more than I should, and I know someone could clip me right now and say, you chat shit. I'm sorry, but this is what it's supposed to be like. It should come back down and you should close before it even gets back to your entry. Because 1, you've seen your 1-to-1, 2, you're up your 1-to-2 now. You've either closed the trade or you've taken half off the table, you're at break even at least. But I'm not about to let this shit come back down and do this. Just hoping that it comes back and does this. That makes no fucking sense. That's holding drawdown and losses way too much. So when I see shit do this, I'm like, right, so there we go. Couldn't have got a better example, really. I didn't even look for this shit. So right now, cool, whatever, I'm out already. Took my my half off the table, let's say. Or maybe for some reason I didn't take my full amount off the table. So I'm like, motherfucker, you've come down, you've stopped me out, and you've left this wick, all right, or whatever, and then you went and done this big blue candle or some shit. I wish it'd play out faster, but it doesn't, right? The point I was trying to make anyway is, for some reason, people find it hard to get back into trades. Let's go to, I'm on the 1 minute, sorry, I can't make it no less. So I would have closed my shit down there. Boom, before it even got there, just close. Because now you know, all right, cool, now let's just see what it done. Oh, it left a big ass rejection. So you can enter again, do you know what I mean? And for whatever reason that you did enter, okay, it comes back down. Guess what? Now I've done it to you twice. That's your sign to just get the fuck off the charts. All right. It clearly doesn't want to push up any further right now. This is where it gets emotionally draining. Because you're like, all right, I entered because I seen it react this way. And in my head, I thought to myself, yo, that shit's going to pop off now. It's going to carry on up. But it didn't. It came back down again. There's no point holding it for it to go deep into the stop loss, all right? Like this, boom. Loads of people do this. Loads of people do this. And they're like, nah, man, I know it's going to get to this TP eventually, or I know it's going to get back up to the top eventually. And they're holding it. And it's like, motherfucker, even if you're right now, even if you're correct, it just makes no sense at all for you to do this. Just to wait for it to go all the way back up there when you could have just closed. 1 time, 2 time, 3 times. You know, 3rd time out like this and they've come back 3 times and it's still doing this shit to you. Just get away from the charts, man. Walk away. It's so draining. But hopefully that made sense to you. Don't hold your drawdown and don't hold your losses, okay? But don't cut your winners early neither as well. Like, they're that shit play, man. If you're looking for your 1 to 2s, well, there's my 1 to 2. I would have been out the trade. A lot of you are going to just trail your stop loss and carry on and do your thing. Nothing wrong with that. I'll try and do that shit more often too, because I'm leaving way too much money on the table these days. But I hope that I'm slowly getting into your heads with this risk management shit. So on the replays as well, you'll be able to see everything that you can't see right now, like the list I keep bringing up and reading from. You'll see that on the replays. So where was I? Emotional control. Yeah, we got that out the way. Play a game, take a walk, go out with a missus, boyfriend, whatever. Handling losses and drawdowns. Yeah, we just got that out the way. Staying confident in your plan. Yeah. So, but like I said to you, put a 1 in the chat if anyone's still there. If you're not, then it's fine. But 1 in the chat if you get butterflies in your stomach before you press buy or sell, like every time. Are you nervous every time? Are you like a little bit scared? Are you thinking that, oh, I might lose? Do you know what I mean? 1, yeah. Ghost, nah, that's good. 1, that's also good. Fine. It's called human emotion, bro. The more you trade, the more you become numb. So, what was the 1 for again? The fuck was my question? Staying confident in your plan. All right, so there we go. That was the point I was trying to make. So, the reason you're probably feeling number 2, not number 1, is because you ain't confident yet fully in the trading plan. So, you know breakout trading's real. You know it works. You know people like me and everyone else who trades it that are profitable gets money from it. But you're not quite confident yet in the trading plan, which is fine. Because when you meet a girl or a boy or whatever is your preference, right? And you're not going to fucking feel comfortable just moving in with them on day 1. Do you know what I mean? Well, you might do. I don't know. Maybe it's true love, but the point is you're probably not. You're probably not going to just want to move in on day 1. It's going to take time for you to build confidence and trust and say, you know what? I think I'm ready for a house key. Give me a house key. Yeah, I'm going to move in. Do you know what I mean? Like, it takes time in the same way with trading. This strategy is going to fucking make you feel like shit sometimes. And you're going to hate it sometimes. And you're going to go, oh, I want a different strategy. And that is just not consistent, right? That's just giving up on something you started on. At least give it 6 months of actual real shit now. Don't come to the charts and go, bro, it ain't been working out for me. What have you been doing? I'm not blaming that trade. See, I'm going to blame you. I'm going to say, what have you been doing? All right, tell me, what did you do for 30 days in a row to not come out on top? I want to know. Like, there got to be something, all right? Then that's probably because you're feeling you're over risking, or you're thinking about the fake out. Like, I guarantee you, majority of you rewatching this think about the fake out. You actually think about the fake out. So on market open or before market open, when I'm like, everyone get ready to buy or sell, you're thinking about that fake out more than you're thinking about the fucking trade playing out. You're literally thinking, fuck. Here comes a fake out. I expect to lose. I remember the feelings, I'm telling you, all right? Now I just know that I'm there to do a job. I'm there to press buy or sell when my support or resistance gets broken. And I'm there to learn and take in the price action and see, okay, every time I do this, I get a little bit less scared. I get a little bit less emotional. So, you know, it brings me to, are you trading on a demo account? Are you trading on a prop firm? Are you pressuring yourself? Are you putting money into it you can't afford to lose? All of these things, man, all right, they're going to affect you. But the main thing that I wanted you to take away from that whole question, that whole rant, was staying confident in your plan. All right, I fucking adore the plan. I love the plan. So, listen, I don't know how I'm going to do this. Quickly, I'm not going to take long doing this. All right. Sessions by Luxargo. I hate the way it looks. Why don't I just save a fucking preset every time? Something wrong with me. All right. So 230. See one. Boom. All right. I'm just going to take you back. All right. I'm going to just go wherever the fuck. All right. Let's just take it any fucking way. So out of these days, let's just say I ain't trading nothing else apart from the 5-minute time frame. No, fuck it, the 1 minute. Let's be brave. Let me be brave. So I'm trading the 1 minute time frame. I'm seeing this is my breakout level. Why? Because, well, all of this shit's being resisted from. So you could get your sniper entries if you wanted to, be a little bit more ballsy, pull it down there. These days, I'm saying nah. All right? I'm getting in on the break. Boom. Done. All right? Didn't think about it. Didn't need to, because there's my support. My breakout to the downside is there somewhere. All right. Oh, wait. Actually, let's bring it back. Let's bring it back. Let's see if we got faked out and shit. All right. So I'm trading a little bit different these days, as you see recently. All right. So that'd be a little area right there. But I would say to people, this is the main one. You know, probably put a breakout there, maybe. So controversy, maybe. I don't know. Maybe we did get in on this. We're 230. Sorry, wait for 30 to come. Right? Boom. So it gives a little kiss. It kisses it. It kissed the entry. Maybe. Or maybe you was waiting for the entry there. Do you know what I'm saying? But regardless, even if you was, it kisses it. Wherever way you look at that shit, that's a W. Because if you lose that first one, the second one's fucking giving it back to you tenfold. Quite literally, probably tenfold. With a 20-point stop, I wouldn't be surprised. 5, right? Whatever. All right, straight flawless victory. It doesn't fucking matter. I doubt I would have got in there though, just because of what I said about this being the main kind of, you know, range. So that is a straight W. Whatever. We'll move on. I'm not gonna long this out, but that's one dub. All right, and it was a 1 to 5 though, if I wanted it to be. Remember that. Move on, bring it back. So this is why I love this strategy. I'm just trying to let you be confident in the strategy. Go do it yourself. Go back test. Stick to one time frame. Stick to one pair. Oh, it does play quite quick, actually. I don't know why the fuck I'm tapping on it so much. So we bring it back. Let's take a little look at what we're working with. We know we got like a resistance right there. Do you mean this whole area? We got like a support right there. Let's just say that, right? We'll break out there. You put your breakout there, there, but I'm already right there. So recently I've been trading this way, as you know. I've sharpened up the strategy a little bit. All right, cool. Breaks. I'm on the 1 minute time frame using a 20 pip stop. That's almost a 1 to 2. You could have closed, you might not. Guess what though? You didn't lose. Came back to break even, so you could have called it a day right there, or you could have took a 1 to 1. You genuinely could have seen this shit close there and go, well, you know what? Fuck, it's pulling back, whatever. Break even 1 to 1. It still ain't a loss. That's the point I'm trying to make to you, yeah. And then it gets all scatty and messy looking, but still. You're in, you're out, you're smashing, you're grabbing, because you're on the 1 minute time frame now. You told yourself, I'm only trading the 1, or I'm not fucking with anything else. This is called consistency. This is when you'll build like a sort of trust with your strategy, right? I just want you to be in love with the strategy. I want you to actually fully feel it. So, you know, if I'm on the 1 minute time frame sometimes, and your strategy is the 5 minute, and you're saying, nah, today, Connor, I'm not trading because you're not on my time frame. That's fine. You don't need to do everything I do. You know what I mean? Let's take it back. Let's take a look. I kind of don't like that, obviously. my breakout, if I was being real myself, would either be there or there. That's very close. That's very close. All right. That's the opening candle. Next is the opening candle. All right. So around about there. Let's just say maybe you could put it there. You could put it there, or you could put it there. Do you know what I mean? You just want to kind of make it make sense. Give yourself some sort of something. Anyway, it breaks that way. So for me, being me, like I said, I probably would have put it there. So I can't go back on my word. It's just say what I would have done. Again, on the break, I'm using a 20 pip because it's a 1 minute time frame. I got my 1 to 2. Boom, done. What happens? It comes back to break even. Then it goes and does the thing. So break and retest maybe. There's multiple ways you could have traded this. All I'm trying to say is so far, 3 days in a row, if you're a 1 minute time frame trader on NASDAQ only on the New York Open, you've had successful days 3 days in a row. All right? Like, that's why you should be in love with your strategy. You need to do this stuff. You need to do that. Back testing, basically. You just got to back test on the time frame you think you're comfortable on. Stick to it, believe in it, trust it, and understand overall, out of 30 days of back testing, I can fucking bet my everything that I got, you're going to come out on top. You're going to come out on top if you stick to one time frame, one pair, one session. All right? So I need you to fall in love with the strategy is basically what I'm trying to say to you. Oh yeah, and these are just a few things you need to avoid. So if you're watching this replay, common mistakes to avoid: risking too much. We covered that at the beginning, I think. Oh no, we didn't actually. Yeah, your lot sizes and stuff, adjusting things. Risking too much is one big massive mistake traders do all the time. They're like, you know what? I just lost $500. I'm gonna risk 1,000 to make it back quicker. That's just crazy. Revenge trading, basically. Over trading, you need to avoid that too. So even though I said over trading is, you know, not the same as revenge trading, it's probably just as bad. Do you know what I mean? Revenge trading is on the same level as over trading in a way. But I just feel less bad when I overtrade if I've actually come and looked for a setup and stuff and I've analyzed it. I feel a little bit better about myself, but it's still in the same bracket as revenge trading technically, all right? So overtrading, revenge trading, risking too much, and ignoring your trading plan. That's the fucking biggest thing on that list. So ignoring the whole trading plan that you took however long to, you know, master is crazy work. Do you know what I mean? So basically, you just need to understand proper risk management, learn your position sizing, all right? Get used to what your positions are, how much you're risking, micros, minis, become comfortable with something. All right, risk less as well sometimes, I'd say, because it's going to take less toll on your mental. So avoid all these common trading mistakes, which would be risking too much, revenge trading, over trading, and ignoring your trading plan. All right, so that's all I basically want you to do. Student takeaway. So risk no more than 1 or 2% on your prop firms. So that doesn't apply to you know, personal accounts, because risking 1% of $100 is $1. You're not going to do that. If you want to flip that 100 to 200 to 5, you're going to want to risk 10%. Do you know what I mean? 10, 20% is either make or break. But anyway, for props, risk 1 or 2%. I advise you to risk a 0.5 twice. Have a plan before every trade. So whether that means that you're going to be on your 1 minute time frame, looking for the breakout on the New York Open, trading NASDAQ, then that's your plan. Don't fucking change it for no one. Unless you're like me and I actually look at the 15 minute, the 5 and the 1. But like, I prefer the 1 and the 5 minute time frame, if I'm honest. I only really go to the 15 once I'm in the trade to see the momentum. Controlling emotions, literally, that's what I need you to do the most out of everything I've mentioned today. I need you to control your emotions. And the only way you can do that is by walking away. You know when they say the bigger man walks away? That is genuinely true in trading. Like, the bigger person walks away from the fight, because I promise you, you ain't going to win. And even if you win on that day, you're setting yourself up with bad habits to keep trying to recover losses and stuff. I've done it. I still do it now and again. But you got to remember, I'm like 4 years, 5 years deep into it. And I always reset, restart, and refocus before even thinking about taking another trade. So am I a bit of an overtrader? Yeah, I'll admit it. Am I a revenge trader? No. So learn from your losses. If you need to learn from a loss, it's because you didn't stick to your plan. All right. So learning from a loss would mean you got something to learn. If you've stuck to every step that you promised yourself you were going to do and you confidently executed that trade, it went against you and you lost, you got nothing to learn. It's nothing to learn. All right. So don't worry about it. Don't try and learn from something there's nothing to learn from. And they say there's always something to learn from. Maybe, but like not with this breakout strategy. It's too easy. Like you're gonna be like putting too many seeds in your head. If you stuck to your plan and you lost, there's nothing to learn from. And focus on consistency, not perfection. That's the last thing I'm gonna say. So consistency and perfection, the difference between them. Why would I sit there and try and perfect a strategy that's already perfect? Because if you want to know the truth, there's no such thing as a perfect strategy. So my strategy is just as perfect as every other single trader strategy in the world. Because there's no fucking perfect strategy. So the only thing you can focus on is being consistent. There's no point focusing on trying to float and fly and levitate, because it doesn't exist. Same as a perfect fucking strategy, it doesn't exist. So focus on consistency, because that does exist. If someone goes to the gym 5 times a week and eats the right diet and does all of that bullshit, they're gonna see results quicker than someone who goes once and doesn't eat good. Do you know what I mean? Consistency over time is gonna win. So fuck perfection. Focus on consistency. We're gonna just be breaking down fake outs. All right, so fake breakouts and liquidity grabs. What is a fake breakout? How we can use them in our favor. Liquidity grabs versus a fake out. You know, identifying fake breakouts, how to trade them. All right, and when to avoid these setups. All right, so we'll just be going through these 5 main things today. All right, I ain't really got a slideshow for you because this is like the easiest stuff. It's really, really easy once you get to know it. So we're going to be identifying fake outs, understanding liquidity grabs, avoiding getting trapped, all right, like consolidation, all that bullshit. Trade high probability reversals, how we can use fake outs in our favor to actually catch moves, you know, those smash and grabs I call them, or wait for the fake out to happen, the liquidity grab, the sweep, and then get in the trade. And that also improves our timing and patience. Like today, I think I was really patient and my timing was kind of perfect. So yeah, that's basically what we'll be learning today. All right, lesson overview. Not every breakout is real. Not every breakout is real. Today you'll learn how smart money manipulates price to grab liquidity, and how to identify fake breakouts, and how to trade the reversal with confidence. So smart money concepts, the big players, the ballers, whatever you want to call them, they are the ones that just like on market open, take everybody's money both ways, whatever, trigger all these orders, and then it does the thing. All right, the game is rigged, is designed for us to fail. So understanding fake outs and understanding liquidity sweeps and stuff is like one of the main things you can get good at in trading, which is instantly going to boost your trading game. So even though I say the smash and grab strategy is simple, the way we trade is simple, everything about the strategy is simple, it's only because I know all these things. Like, do you know what I mean? If I didn't know that the New York Open was likely to be a liquidity sweep, then I wouldn't have even come up with the smash and grab strategy or the Mamba effect style strategy that I trade. A little bit different to him or whatever, but I actually target liquidity. I know that he doesn't target liquidity. He's just like in, out, in, out. I hate that every single fucking lesson that I teach is based on him, but let's be real. That's exactly where I was molded from, realistically. All right. I might as well have come out of Mamba's nutsack. Like, he might as well fucking, you know, nah, that sounds crazy now. See what I'm saying? I go well off track. But yeah, I'm like, you know, yeah, basically, I think I might be older than him, though. That's the fucked up thing. Yeah, I think I might be Mamba's dad. Yeah, maybe some shit like that. But anyway, let's get into the lesson. And let's not get too weird about it. Let me just see if you've got any questions before we break it down. All right, so let's go. Kenneth the Prodigal Son. I like that. Yes, we're back. Let's do it. So it's only going to be, it ain't going to be nothing crazy, all right? Because this is like, I find this shit easy to teach. All right, so Discord, you let me know if you can see my trading view screen. Oh, actually, wait there. I got a better idea. Yeah, you can. But you can see everything. Wait there. Let me just make sure you're locked into my trading view screen. It'll be better for you. All right, cool. Should be locked in now on the trading view. All right, so I'm guessing you can see my trading view screen. All right, so the first thing I'm going to break down is, yeah, what is a fake out? What is a fake breakout? All right, a breakout that fails to hold beyond the level caused by lack of volume or liquidity runs, common in ranging markets. So let's just jump on the charts and look exactly what a fake out is. All right, a fake out. Interesting. Okay. So this is going to be interesting actually for myself too, because the liquidity sweeps are easier to see. I can spot a liquidity sweep like a million of them right now. Fake outs. That's fake outs, fake outs. All right, what people would think is a fake out anyway. You know what I mean? I'm trying to find the perfect examples for you lot, because realistically they'll be everywhere. They will be everywhere. So 15-minute time frame. I mean, I'm seeing a lot of liquidity sweeps. A lot of liquidity sweeps. All right, so let's do this. Let's do this. All right. We're obviously super bullish. If I want to load. So say we know, all right, yeah, we're making bullish structure. We're going up, okay. We're expecting to just carry on going up if we're anticipating a trend continuation, all right. But then we think to ourselves, as soon as this level there gets closed below, or this gets closed below, or it might be better on a 5-minute, yeah, some shit like this, then we're going to be like, oh, when this gets closed below, it's bearish. Or if this gets closed below, it's bearish, all right. Gets closed below. So technically, all right, this candle is now a lower low, and this candle is these candles there. This structure is the lower high. So this is where people get faked out. This is where people actually get faked out, because that doesn't look like a liquidity sweep. It looks like, oh, that's kind of like, you know, actually gonna start some new shit, and without even thinking, for some reason, they just get in and press sell. And then this happens to them. You know what I mean? So that's where it's always important to like wait for your breaks and your retests and your confirmations and stuff. Just because it finished really, really strongly, like a lot of people, they go, oh, yeah, man, that fucking uptrend is done because it closed. But that's just a fake out. The difference between a fake out and a liquidity sweep, there's differences. A sweep is fast. A sweep is like usually a wick. It'll wick you. I'll show you in a minute anyway. But this is also a fake out. If we go to the 15-minute time frame, right? Liquidity sweep, fake out, whatever. They're kind of both the same thing. There's a very thin line between the difference between what a fake out and a liquidity sweep is. But they happen fast. Liquidity sweeps, they happen fast. I suppose this was actually a sweep. Yeah, on a 15-minute time frame, that was a sweep because it swept out these lows. All right, it swept out the bodies. If you remember, I explained to you the bodies are actually the structure. All these wicks mean fuck all, really. They're just lower time frame. So that shit came down fast. It swept and then it came back up. All right, but to me, yeah, no, that is a liquidity sweep. Yeah, that is a liquidity sweep or fake out, whatever. They're both pretty much the same fucking thing. All right, this is a fake out. This is a perfect fake out. Fake outs happen in ranges. So you're in a range. You're waiting for price to break out one way or the other. We know we're ranging. Cool, whatever. We got our breakout there. We got our breakout there. This is where it's dangerous to try and trade ranges because at one point, this candle looked like it was gonna, do the thing. It popped off. It was this big. This is how big this candle was at one point. So looking at you like, yo, I'm getting in. When then it just closes back inside. That's a perfect fake out. That ain't like really a liquidity sweep. I mean, let's take a look at what happens. No, it wasn't a liquidity sweep. It was a fake out. If that was a liquidity sweep, that shit would have just went boom. That would have melted. It would have swept the liquidity and then it went boom. Difference between a fake out. Fake outs, they just fake you out. I mean, there's low volume. There's barely anything going on. Liquidity sweep. That's a liquidity sweep right there. That's a perfect liquidity sweep. So you got your bodies there. Don't know why that's blue. Let me change it white. You got a wick there. Let's just say that that wasn't even there at this moment in time. When you see some shit like this, this is a liquidity sweep. So that swept out this area there just to drop. So let's go to the 1 minute time frame to see how we could have used that. All right. It pushes up, gives you like all the confidence in the world. All right, boom. We're pushing up. Then it goes and does this and it leaves this. So that's a liquidity sweep. So that's the difference really. I mean, it basically took the liquidity from there. It took like liquidity from there, whatever. If basically just took the liquidity from the highs and then went boom. So that to me is a fucking perfect example of a liquidity sweep before drop in, because the next candle instantly was a bearish one, and it left a wick as well. So for me, seeing that and knowing, all right, yeah, we're in an uptrend, but I've just seen what happened. There's like opportunities to trade liquidity sweeps. You always put your stop losses above wicks if you really want to be safe, 40 pip stops and shit. But look, if you're an aggressive motherfucker, all right. Oh, that would have swept you out. That's probably why it's safer to put it there. I would have got swept out that day. I'll hold my hands up. But if I didn't get swept out that day, then I could have easily hit a 1 to 3, just knowing about liquidity sweeps and stuff. 2 seconds. Someone's blowing me up. And let me message them and just tell them I'm live. Not ideal. I should have had this phone on Do Not Disturb. 2 seconds, my people. At least in the course when all this is done, this will be edited out. Sorry, I'm still with you people. This will be the only message I'm sending. Your brain's ticking for what liquidity sweeps are. All right, so, oh, my bad. And fake outs. So fake outs, all right, are more like, all right, let's go down here. Let's go down here. So, do we make a higher high? No, we don't make a higher high. No fake out. It's a clean ass trend, actually. Super clean trend. I mean, there's no fake out. There's no fake outs. All right, now this shit like this is weird. This was probably a news event, or if not, just a random spike. But it's also a grab of liquidity. But all right, let me tell you why that's a grab of liquidity. That's a liquidity sweep. All right, let's bring it back. Let's bring it back. So liquidity sweeps, what are they? Why are they there? Well, you got to understand. Now, when you see something like this, and price gets pushed up, boom, like that, boom, like it started a whole fucking trend, right? You had this big push, a pullback, and then a move like this, just a straight boom, nice big move, and that's the 1 minute time frame. 5 minute, it'd look better. Now, what's gonna be left behind there? It's gonna be stop losses left behind there. All right, so you're gonna get stop losses in this area. You're gonna get orders where, you know, the ballers, they call them, right? Which they are clever people, whatever the fucking big, the people who run the markets, they're the ones running the markets. They know, okay, oh, when price comes back down there and takes everybody's stop losses, all the swing traders, day traders, whatever, I'm getting in. And their stop losses are going to look something like this. Their stop losses are not going to look like that. Their stop losses are going to look some shit like this. All right? Like their fucking stop losses are going to look way, way bigger. Whole load bigger, because they're targeting like massive moves. They don't give a shit. They are literally probably going to use a stop loss something like this. All right? Just to fucking target the top of this. Like, honestly, I'm not chatting shit. That's how these big fucking players in the game play. We're scalpers. We're a bit like, we're not like that. So anyway, back to the story. Liquidity sweep. Boom. How do I know it's a liquidity sweep? Because if come down, if swept out the low, if swept out a couple of lows actually, swept out this low, swept out this, even if it just touches it, even if it literally just touches it, that's still just triggered orders, still stopped out stop losses, whatever. Left a wick. Came back to revisit, fine. But what does it do? It doesn't break past that wick. It literally doesn't break past this wick. So you get that rejection wick. It doesn't break past the wick. It literally starts a brand new trend from there. Look at that. So if you knew about liquidity and you know these things, you're in a trend, you get a liquidity sweep, you look to the left, you and go, oh fuck, what did it sweep? It swept out all this shit. I mean, it swept out everybody's stop losses. You know, boom, it just dipped straight into that area. It just triggered a whole bunch of orders. You get a fuck. I'm not saying get straight in, but what I'm saying is, look at what they've done. They've swept liquidity, which means that they're happy, or they're going to be happy. Then you get a bullish break a structure, retest, boom, the rest is history. That's a perfect example of a liquidity sweep. That's not a fake out. That's a liquidity sweep. A fake out is, I'm still trying to find a good fake out, to be honest. Fake outs are to people who don't know market structure. So this to a lot of people would be a fake out. Like a lot of beginner traders, I'm not saying this to be mean, a lot of beginner traders, they fucking do this. They go, as soon as this gets broken now and closed below, we're in a downtrend. You can smash and grab, you can take a little bit of money that way, but if you know your market structure, you'd know that either this is your higher low, or this is your higher low. One of these swings there, right? But if you're looking and you're squinting your eyes back and going, all right, cool. Like I keep saying this in every lesson, if this shit isn't making sense to you, you need to tune your eyes into what a curve is. We're looking at the curve. So for me personally, until this shit down here gets closed below and price starts fucking doing this, we're bullish. So I don't give a shit where it breaks. So this is where fake outs happen to a lot of people. People get faked out. They're like, oh, we're in a downtrend. We're in a downtrend. No, we're not. We didn't even fucking break this. Like this little tiny bit of support right there just came down and did the thing. That's where a lot of people get faked out, because they're like, well, bro, technically though, you know, this is our higher high. This is our higher low. They're looking too deep into it. They're looking too zoomed into their charts. They see this candle close. They think that's their breakout right there. They're expecting price to like come back and do some shit like this, when in reality it haven't even broken structure. Like that's how a lot of people get faked out. I'm telling you, it used to happen to me all the time. That's why it doesn't happen to me no more much. Still happens to me sometimes. I still get faked out sometimes. Okay. Is that a fake out to me? No, that's a liquidity sweep. Liquidity sweep. Both ways actually. So this is, it's good to train your brain. It's good to identify your things as well. All right, but I'm trying to keep it as simple as possible. I feel like this looks way too messy and sketch. All I want you to get from this lesson is what a fake out and a fake out and a liquidity sweep is. All right. So liquidity sweeps, I can see them everywhere. Liquidity sweeps everywhere I look. Just look at wicks, basically. Just look at the wicks and look at what you're like there. There's a fucking liquidity sweep right there. All right. That wick and the way that it drops, that's a liquidity sweep. All right. Breakout, a fake out though, a fake out. because I say they're pretty much the same thing, but fake out, they're more, yeah, it's NASDAQ, man. You're not going to find a lot of, honestly, it's just crazy work. I'm just going to have to go back to the 1 minute. Let's get off this. Try and like keep it as legit as possible. Keep up to really seeing a lot of fake outs though, to be honest. Just liquidity sweeps. Yeah, I mean, it's like about training your lot's brain to understand when like structure shifts and things like that, because it's hard to get faked out when you know structure. Like if you know your higher highs, your higher lows, your lower highs, and your ranges and consolidation, it is pretty hard to get faked out. Like the majority of the time you're gonna get faked out is a range, 1,000,000%. So let's just put that in your head, all right? We're looking at this. This is what we're looking at. This is our price action, all right? We got this up until this, all right? So let's just do this. Boom. So we're in this range. It's been two little wicks, two little kind of like fake outs, whatever. And then we actually get this. We get some sort of like, oh shit, we've broken through. And people actually like get in. And then this happens to them. That's a fake out. That's a perfect fake out. Now, what would have been the correct thing to do? Like the correct thing to do in a situation like this is wait for the break, the retest. Like, all right, yeah, you could have got a baby move there, but an actual fucking retest back in that zone and some sort of reason for me to get back in, but there was no reason. It just kept melting. That's fake outs. That's a fake out right there for you. All right. Liquidity sweep right there, right in front of my eyes. That's a liquidity sweep, because when you've got like multiple like lows or highs or building pressure, there's a lot of like stop losses or orders and shit there waiting to be triggered. And then you get some shit like this. Sweep of a liquidity. Doesn't mean it's going to pop in your favor though. That could just sweep out the liquidity and keep ranging. You know what I mean? There you would have had a bit of luck, not going to lie. That was a nice little liquidity sweep and then a pop. But it's just good to know the difference between a liquidity sweep and a fake out. So fake outs are usually wicks in a trend. So we're making higher highs, all right, and we're making higher lows. Okay, higher highs. We got like a higher low right there. We see this shit happen. It wicks. Cool. How could have we got in? We could have just got in straight up from there, but the fucking stop loss needs to be below where the liquidity thing was, the sweep, because it's likely to come back down and test it again. So, you know, like that's why there's not a lot. I wouldn't say there's like they're amazing and are my favorite ways to trade, but I do trade them sometimes. There we go. Look, a perfect 1-to-1, and then it comes all the way back down. All right. So that's a liquidity sweep, basically. How I deal with them. Fake outs, like I explained, is when a candle body closes like this. Like this is another one. People would actually get tricked out there, and I'm not making people sound stupid. This is not for no one to sound stupid. If I come across sounding like, oh, you know, people get faked out there, of course I did all the time. I would have been thinking as soon as this shit gets broken below, we're in a downtrend, or I can take cheeky little trades to this downside and blah, 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 back into areas. And then it does this. That's a fucking fake out right there. Boom. But only because you don't know the proper market structure where your higher low would have been there. Do you know what I mean? The most curviest thing that you can find. That's not even that curvy, but still, there's a curve there. So there's your higher low. Now, for me, personally, until price actually broke below there, then I can say, this ain't a fake out, I don't think. I think we're changing structure. But it could come all the way down to there. And I'd understand. So I'd know really not to get in. But that's where a lot of people get faked out. Because technically, look, this was a higher high. This is kind of a curve right there. You look at it, this is a little curve. people might get too deep into the charts and go, it's definitely my higher low right there. So when that gets broken, that's broken structure. When really it's just a fake out, you need to like see how it acts once it's broken. Is it going to carry on a downtrend? Like people are too hasty to get in, or they worry too much, you know what I mean? They do some shit like this. I've done it millions of times myself, and then wondered why I've just gone straight back against me. Honestly, being faked out sucks. Being swept by liquidity sucks as well. But let me take a look at the chat, see if there's any questions. Left gaps in the market. So with the FX Liquidity Pro indicator, it basically helps with identifying potential targets when trading liquidity sweeps. 100%, man. So if 100%. So that's why I say to people a lot of the times, using the CAFX Liquidity Pro, right? You don't just need to use it for take profits. You can literally use it to wait for liquidity to be swept and then get in as well. So that brings me to my next point, I think. Yeah, so breakouts is a fail that actually, a fake breakout, sorry, is one that breaks and closes below like a certain structure point, like a higher high or a higher low, and then makes you think, oh, that's actually broken structure. That's a fake breakout, you know, that's a fake. Like sometimes we can't avoid those things. We just got to go, all right, cool, it got me. Because usually what will happen as well is, like I said, with a fake out, like say we're doing this. We're in an uptrend. Here's our structure, but we close below there. A lot of people are just going to enter for sells because we've closed. When really, you do need to see verification that it's going to do this. All right? That's the whole point of our breakout strategy. The fact that if we do see a close below our structure, because this is our higher high, this is our higher low, if it does close below our structure, like it did there, we wait for it to pull back, then we put our breakout line, and then we get in. That's the beauty of our breakout trading. But, you know, a lot of people don't do that. And that's how they get fucked up and faked out, because the next move then is they think if broken structure actually does this. Boom. Straight back up. Liquidity sweeps, fake outs, fake breakouts, whatever you want to call them. To me, they're all the same shit, right? Fake breaks of structure and that. But liquidity sweeps usually are more wicky, like fast, aggressive. They sweep. That's what they're called sweeps for, or grabs, because when you sweep something, it's quick. When you grab something, it's quick. A fake breakout can happen slow. So a fake breakout can literally happen slow. And you'll be like, oh, okay, yeah, it took 15 minutes to fucking fake break me out. But a liquidity sweep usually happens quick, and that's on the opening of, you know, the New York stock market open, or London or Tokyo, some shit like that. That's when most fake outs and liquidity grabs happen, all right? So, yeah, which I think I just covered both of those in one. Liquidity grabs, price sweeps, all right, below and above key levels. Why does it happen? All right, so do you understand why it happens? Like, I don't know if there is anyone actually chilling in the chat right now. If there is, though, then, like, do you actually put one in the chat if you understand why a liquidity sweep actually happens? Type 2 if you're a little bit confused. You'd like to know why. Like, I mean, because it's a simple answer. It is simple. One, you know why. Good. Yeah, man, that's cool. Well, yeah, cool. I think a lot of you know why, you know. But for the people on replay that don't know why, or even for the people on replay who I think, well, no, it's only for the people on replay who don't know why, actually. So you're watching this on replay. The reason that a liquidity sweep actually happens is like I said, there's multiple reasons, right? People's put in buy orders or sell orders because they missed their move. They want the best discount they can get. Like they how do I explain? This is going to be funny. So, you know, boom. Rich motherfucker comes to the charts and sees this has already happened. He's like, damn, well, I want to get in, but I don't want to get in there or there or there or there. I want to get in there. Like, I want to get the best price that I can get it for. Like or even just there. Do you know what I mean? Like I want to get it somewhere closest to the entry that I can get it from. Do you know what I mean? Just for it to carry on up. And they understand what liquidity is, right? So if a move like that happens, I promise you now, there's stop losses there, all in this area as one. There's orders, there's buy orders and shit. So it's just basically a reason for price to be pushed back down to this area to go back up in a vicious, rapid way. Now, a lot of people, retail traders, they call us traders or whatever, normal traders, right? We get in, say we did catch our move. We want to like have the tight stop loss and shit like this. We want to ride it out. We're like, yo, when in reality, you know, the really smart people are trading like this, and I promise you they're going for 1-to-1s, 1-to-2s, because they're putting 100,000, 200,000 on a trade. So it's okay. They can wait 3-4 days. It doesn't matter. We ain't them kind of traders. So there's millions of us. There's way more of us doing this than there is of people doing this. Now, the ones that are doing this are the rare ones, and they're the ones that don't get stopped out when price comes back down and does this, because, you know, they understand what the fuck's going on. We're the ones who get stopped out because we ain't, you know, we're not sheep, I suppose. We're in and outers though, but a lot of people are not in and outers. Some people get in and be like, yo, I got in with a 10-point stop. I'm going to let this shit run to the moon, thinking they ain't going to get stopped out before it goes up there and does that. Like, everybody thinks it at some point in their trading journey. So anyway, this is where, like, equilibrium and all that stuff comes in. Do you know what I mean? I'm not going to get too deep with you, but I'll just show you right now that it's, oh, that's ugly. I don't like that. Motherfuck. Why would it do that to me? All right. So all I can say is, see, I just wanted a fucking 50-50 box. Why is my GAN box so ugly? You're going to make me do it. Fucking hell. Honestly, I don't even want to do this. I'm going to do it myself. I'm going to make my own GAN box. All right. Boom. All right. Boom. There's the beginning of the move. And where's the middle of the move? Where's the middle of the move? Make my own GAN. Fuck it. All right. My own equilibrium. So this is basically what big ballers, I call them, are going to be looking at. So this. They ain't going to want to even get involved if the trade's still lurking around this area. They don't care. They don't care about that. Unless price gets in there, at least half price, and they get some discount on it, they want to get as close to back to entry as they can. So they're going to be getting in, you know, around this area. No chance in hell they're going to do what we do, and we're going to try and carry on continuing up. And that's why a lot of the times they do miss the move, because they're waiting on, you know, the discount to happen. The discount doesn't happen. But then it does. It does in a really fast way. We think it didn't happen, but it does, because then when the news happens and Trump opens his big mouth or some shit like that happens, it goes boom, and then it goes all the way back up. All right, it does some crazy shit. They know this stuff. All right, they're not stupid. The big players, the ballers, the ones that've been in the game for years, or people who got professionals working from. They know this shit. So anyway, back to my rant on why the fuck it even matters. All right, when we get in, we need to know, as scalpers, we need to be in, we need to be out. We're the ones likely to be swept as liquidity, used as liquidity, swept, and all of that stuff. So if we look at price right now, what's price doing right now? Every single time price pushes up, is leaving stop losses, leaving buy orders. All right, it's just asking to get smashed, it's begging for it. All right, it is. It's on bar replay mode, by the way. Fuck me, where was I even to? All right, so see what happened though? See what happened? Like, if you pull it right across, it didn't happen quickly, and it didn't happen straight away. It's like artwork. It's like artwork, okay? Every single time a stop loss or whatever order was set there, new orders, buy orders, people expecting it to come back down and keep going and trending, it usually sharply, right, sweeps people out. Boom. There we go. So all the scalpers that were just pushing price up, thinking that we're all in a game, we're doing our little thing, and let's get it right, mind, as well. It took 8 hours, because there's a scalping time frame, 8 hours to get that far up. It took 1 hour or a little bit more to fully clear 8 hours worth of work, 8 hours worth of pushing, and then 1 hour done. Boom. So that's how liquidity works. That's just basically how. Look at it. Look at that. Fucking boom. So everybody who was putting stop losses and buy orders and shit like that, they just got stopped out, or their order just got triggered. So all those people I was telling you about, and people that were like, I missed my move, I missed the beginning of the trend. Well, if this was their 50-50 box or whatever, all right, they're in now. I can fucking promise you they're in now, because they've just seen everybody get stopped out from all of these areas. Now they're in. Now they've got what they wanted. They're in. Their stop loss is somewhere like this, below all these lows. And they're just targeting the top right there. And they'll wait. They will wait. It don't matter how long they need to wait for, they'll wait. Do you know what I mean? So that's basically liquidity sweeps right there. Why they're there, why people don't understand them sometimes. They're like, why does that happen? Why is it that when I press, I put a buy order or a sell order, I get swept out? It's because you're meant to. In a sad way, you're meant to. You're like, we are dinner. We are dinner for those people. Do you understand? Until you understand what liquidity is, you're always going to be liquidity. That's all it is. Like, I understand right now, there's a shit ton of stop losses all chilling in this area, because look at it. Price was pushed down so many times. Boom, boom, boom. So I wouldn't be surprised at some point if there's news, price just goes boom, eats every single fucking stop loss or order, and then does this. You've got to understand that. And that's what a liquidity pro is as well. Like someone said in the chat. There it is. There it is. Right there. There's your TPs, or there your entries. This tester is an actual entry model. It's actually tested, instead of a take profit model, as an entry model, to see how it can work as an entry model. I believe this is today. All right. Fuck. Go back. Let's just say we're waiting for some 4-hour liquidity to get swept out. Whatever. Chunky lines, okay? Boom. Cool. Just think like the big players. I want to see liquidity to get swept out and then get in on the reversal or some shit like that, right? Boom. All right, there it is. Sorry. Clicking. I already did what I needed to do. So your entry there. But the opposite way. You know what I'm saying? Like, there's ways to do this shit. But obviously, you got to watch it first. All right, so cool. Still bearish. Bullish candle. After a liquidity sweep. I mean, don't know how far it's going to go. Didn't go far. What did it do, though? Still a trade. Still a winning trade. Still could have been a dub. 20-point stop. You enter right there. Still could have been a dub. That's one way to use it. I don't advise people to use it that way. To see how it happened again. Sweep a bit more liquidity. Get another bullish candle. Once again, do you know what I mean? Like, there's ways to use it, not only as take profits, but as actual reversals. So when it sweeps that blue line out, did it sweep it? No, you're lying to me. All right, well, I don't give a shit. In my eyes, that shit fucking swept, you know? It got touched. That got touched. So that blue line technically should have been dashed out. But anyway, let's just say that it did get dashed out and you was targeting the top. Boom. So that's another way to use that indicator. Do you know what I mean? As long as you start understanding, like, liquidity, why it's there, how it moves, when it gets touched, it usually reverses, all of that stuff. So there's so many ways, but I just need you lot to learn about liquidity. Liquidity. I'm drilling it into your heads. Let's take a look at the chat. Explain the discount. Seconds. Discount. The term discount. like, all right, put it this way. This is discount. All right, boom. This is fucking discount right there. All right, so we come to the charts. Oh, too late. We missed the move. All right, I haven't got a GAN box right now, which is annoying. But let's just say this is my GAN. All right. Now, until it gets 50% back up, so my 50% mark would be there. So I'm going to just mark this. Now, I don't even want to get involved basically until it gets back above there. So I need to see price get back above there, right? But if it can get all the way back to entry, maybe sweep some liquidity or whatever, and then I can get in and take my shorts from exactly where I missed them. That's discount. So right now we're not in a discount zone, all right, at all. Because we've broken lower again now, I'd have to move it again. So this is the lowest we've got to before I started pulling back. There's the discount. So until I'm above and I'm in this discount area, like right now, put it this way. If I was to get in from there, this is what I'd have to do to be safe, technically, to be safe. Does that make sense? Like if we're using structure, does this make sense to me? Like to be safe or feel safe, it got to be at least there or at least there. People who are using actual market structure. That makes no sense because that's like it ain't a one-to-one. All right, it's not a one-to-one. It don't make no sense. That's why people want the discount. They want to be at least there for one-to-ones or even better. Do you know what I mean? So they can use their structure. They can use these structure points. So they just wait for price to get back as close to the discount zone as they can. Now, you ain't going to get no closer to the discount zone than the entry. If they can get back up there, see the price as come back, but not only come back, actually swept out some liquidity, look, left a wick, and give us a nice bearish candle. Boom, right there. So let's just say you got in. Now you can use this as your structure because it technically is. Now you've got a discount. Now you got a discount. You just went from being in the minuses to getting a discount. All right. There we go. Stopped out. But you know what? I didn't use structure technically. I technically wasn't using structure. I was using this. That's where it should have been. But I'm going to put it there and I'm going to keep it 100. I would have been stopped out that day. 100%. But anyway, that's the discount. If I didn't, that would have been almost 1-to-5. Realistically, though, you should always put your stuff like this. But that's how them motherfuckers trade, bro. That's just discount for you. I'm not a discount trader. I don't care where it's at. All I care about is breakouts. So by the time they wait for all of that stuff, I'm already in my trades. Like, I'm already done. Do you know what I mean? Like, fuck, look at this. This is what we do. This is us. Look at that. Like, that is us. That's how we trade. We could have even took it like this. It doesn't matter. Break, retest, support, resistance, all of that shit there. Bearish engulfing candle. Like, as soon as you know all of this stuff and you can see it with the eye and you're focused on your one time frame, your one pair, that's us. That's how we're trading. We ain't giving a shit about nothing else. We're breakout traders. But I just needed to let you all know what a fake out is. Liquidity sweep. There's a liquidity sweep again, right there. Boom. But with a liquidity sweep, what do you need to see? After you see a liquidity sweep, you need to see something. You need to see an indication that it was a sweep. It was a fake out or whatever. It was like it took some level out. It took this out, even by a pip or two. It doesn't matter. And then you see this. That's a signal to go. Like, I don't know how to explain it really apart from that. That's the signal to go. That's the liquidity sweep. Now, is there a liquidity sweep there? Put it on the wicks. No liquidity sweep there. Oh, so that's still a valid point where price could get swept and price probably will get swept from. That's still a valid place right there. Know why? Because that's a double bottom. So twice they've come down. They've refused to go lower and they've been pushed up like pretty aggressively. So understand that this shit's getting swept at some point. All right. What are these sweeps? Oh, my back is killing. But yeah, so what was the point of that anyway? Liquidity grabs and fake outs. All right, so I want you to be honest with me if you're still in the chat. Oh, wait. Every contract size lot, no one paying less for that shit. But the word discount, I think a deal at the store, and it's almost that is, yeah, bro. I don't give a fuck about discounts. Honestly, like, to care about discounts, you've got to be like a day trader or a swing trader or some shit. You know what I mean? Like, I really don't care about a discount. Like we're trying to make fucking $1,000 in 30 seconds. You know what I mean? Like, no. We are the ones that are trying to avoid to get faked out and stuff. So that's why I have changed my strategy a bit. All the videos I done saying forget about the candle wicks, use the bodies. I wish I could take them back now because I kind of use the wicks like all the time. I'm so conservative the way I trade now. But you'll learn that anyway, watching with me. Diogo, it's like being at a car auction. The price will keep going up as there are people willing to pay the price. Exactly, bro. Like, literally, as long as people are willing to keep paying and paying and paying. Like, you can see as well where it gets exhausted. You can see the, like, if you read price action, look at how it was being pushed first. Pop in. Then, all of a sudden, it's doing this. Why is it doing this? This is exhausted, all right? And what does it need? What does it need? We've been driving through the desert for fucking 8 hours, all right? We need water and the car needs fuel. We've just found a gas station. Now, we need to fill the car up, and that's with all of this liquidity before popping off. You know what I mean? So the car is about to get filled up. Car gets filled up. We get ourselves a bottle of water from the fridge, whatever. All right, boom, there we go. Fucking car's full. We're happy. We're on our way back on our journey now. We're probably going to break through these highs and reach our destination, which would be the top. Is so many ways to look at it. Do you know what I mean? But price will get exhausted, and it'll show you that it's exhausted because it'll suddenly go from making you know, like how many pips is this or points? It'll go from 1 hour's worth, 116 points in 1 hour, to move in to 84 points or whatever the fuck. No, sorry, 69. My bad. I'm so stupid today. Let me redo that. I can't go on like that. All right, my bad. Okay. I'm stupid. So in 2 hours and 50 minutes, we hit like, let's say 200 pips, 200 points, all right? Now, that was in like 3 hours. Then it all of a sudden went from that to almost 6 hours, hitting 80 pips, all right? Does that make sense? No, 60 pips, sorry. Does that make sense to you? I'm slowly tired. I'm getting tired. You know when shit looks like it's exhausted, right? It pops off, it gets exhausted, needs liquidity, blah, 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 starts sweeping people out. That's when the opens of the sessions come in anyway. All right, so Nasdaq's looking really ugly, though. The more I look at it, it's giving me a fucking headache. Ew. 15-minute time frame, I mean, it kind of looks cleaner. If you zoom out, you can see how good it's been. So Nasdaq's been on a straight up bull vibe, like boom. But it's perfect. This is perfect. Another perfect example. We're bullish, but we can't just carry on bullish. We need liquidity. We need to sweep liquidity. So what's it do right there? There it is. Liquidity sweep. Took some more liquidity from there too. I might even take some more from there. And then it says, fuck it. No, actually, it didn't even take it from there. It was happy. But how do you know that's a liquidity sweep? How are you absolutely confident that that's a liquidity sweep? Because it fucking pushed down super fast And then it gave us this. A big fuck off bullish engulfing candle to say, I'm ready, bro. Came down. We're in an overall bullish trend. All right. Look at me. I still technically, you know, I'm making structure, but I've come down. I've taken some liquidity. I'm ready to go. Boom. And it'll keep going and it'll keep going and rah rah rah. We all understand, yeah. It'll take a bit more liquidity. What's it do? See? Right there. Fucking everybody stop losses who was there on the baby time zones, like the 1 minute and the 5 minute, gets swept out. Price pushes back up. It'll surely sweep again in a minute. Alright, and then it'll go back up. What did it sweep there? What did it sweep there? I didn't sweep that low. These lows got swept out. Boom. It's just fuel, just filling up the car at the old petrol station. You know what I mean? Taking a bit of fuel. Need to see a bullish engulfing candle though. There it is. There's your bullish engulfing candles. So I hope you understand that liquidity is just a part of the game, but we don't need to focus too much on that. Now, fake outs. Let me not just go off the script now. I'm going straight off the script. So why don't I avoid fake outs? Why am I so confident in the New York stock market open? All right. Why do I not give a shit? All right. And I say that as in I do give a shit a little bit because you've seen how conservative I've been lately, but I don't care as in if this is my trading chart, this is how Nasdaq's looking. It's doing some shit like this. All right. Because it really doesn't ever look too great on the open. It's never really trending wonderful. So I'll give you a real example of how it usually looks. Now, I'm doing this. You know that. Doing this. Right? You know that. I might go, oh, we're a little bit close. I needed to pull back a little bit. Might do a bit of this. And I'm like, all right, now I'm really comfortable doing that. Right? Otherwise, if it kept pushing through and it pre-broke, then I'm just going to move my shit down. But let's just say that it didn't. It done this. Right, cool. So I'm going to put my breakout there. For some reason, there we go. My breakout line there. And you know the story. You know exactly how I trade because you trade with me every single day. A lot of you do anyway. And I'm going to do the same shit down there. But a lot of people, they're hesitant on their entries. They're like, oh, the volume's there. Oh, I don't know. I might press it. But you're waiting for it to go like this far down and then push it. Now, the only time I won't get in the trade is if it goes like this. Comes down really fast and pulls back. Hesitates. Like, whoop, it hesitated before I get a chance to hesitate. So I'm like, all right, cool. It might still come down, but it did hesitate. Now, if it hesitates and then it starts pushing back through, I'm in. And do you know, if I get in and it does this and I lose my trade, I lose the trade. And then I wait for my next entry. That could be another re-entry from this break, or I could move my shit to there. And then this happens. And I usually either recover my trade or recover and get more. Or lose twice. And do you know what I do when I lose twice? I get off the charts and I just lose twice. There's no other answer. Fake outs are part of the game when you're a breakout trader. Fake outs literally make me a lot of money. Like, sometimes I'll get in on a fake out. Like, fucking, there's my breakout line there. Price is doing some shit like this. That'll be the move. I'll get out the trade up there, and then the candle will close there. So it's like, it's all up to you. It depends how, if you see what you're happy to see. If I want to see $1,000, I end up seeing about 6, 7, but it starts tweaking and pulling back. Like, fuck it, I'm taking it. I'm close enough to my TP. You can't always be a dick for a tick, and I've done that a lot of times. So you need to, like, get it in your head that being faked out is part of the strategy. Liquidity sweeps is part of trading, not just that strategy, just trading in general. And yeah, I mean, some of us are going to get used as liquidity and swept out. Then it's on us to decide what we do next. That's why it's super important to manage your risk and understand, are you trading using 0.5% per trade, or are you using 1% per trade? Well, now I'm funded on GOAT funded futures and I want to stay funded. I'm going to risk 0.5% per trade. I'm not going to change anything. I'm not going to change the way I traded the pass. I'm not going to change the way now that I've passed. So I'm trading 0.5, which is $500 per trade to make 1,000. If I don't make 1,000, I just make 500. Fair enough, 1-to-1 days. I don't love them, but they happen. And that's just how it is. Don't change nothing. Stick to your trading plan. So risk management is basically going to keep you alive. So if you get bad days where you get wicked out twice, all right, or faked out twice in that one session, it's on you to stop trading. It's on you to keep your account alive. You've got to understand that, all right, because no one else is going to do it for you. Honestly, it's all on you at the end of the day. Like, I can close my chart and then come back to the premium chat or whatever and be, oh, the fuck, you didn't close your chart. Or I might do the opposite and you close your charts and then I'll go along on my own and do my thing. But it isn't good. So let me check the chat, see if anyone's still alive, if anyone's there. One person offers $1,000, then someone offers $2,000, another offers $3,000, then 3,500. Yeah, exactly that, bro. And then, yeah, and then that's what happens. It gets taken. The orders get triggered. All right. So it's a mad one. I hate liquidity. I hate fake out lessons because they're fucking shit. Like, but we need to understand what they are. We need to know what they are. All right. So like this. I know this is petty. This is super petty. But it's still a liquidity sweep. It's a baby liquidity sweep. Look at it. See that little baby liquidity sweep right there? So we broke. And like if you go to the 1 minute, like it's such a baby liquidity sweep, but it was a sweep. All right. That's a sweep. Like, honestly, I'm not even chatting shit. That's a fucking sweep right there. What did it sweep? All right, nothing to, it is something to the left, but I can't find it. Right, and then we get this. So, where's the sweep? Where's the sweep? When the wick gets swept. All right, or when it leaves a wick. I mean, sorry, some shit like this. So we're in our higher high. Right, we're on our 5-minute time frame. This is called counter trend trading. All right, cool. We got this. That's our first indication. Candle closed more towards the bottom side. Get a bearish engulfing candle. Boom. See that shit? Like, honestly, fucking crazy. And that definitely swept something. So if I was to like put a line there now, let's put a line like here. All right, let's go to the 15-minute time frame. What did it sweep? Or is it at all-time highs? I think it's at all-time highs. All right, it's at all-time highs. My bad. I think that's definitely all-time highs. All right, but any other scenario, that would have been something swept. Something would have got wicked. Something would have got swept, and then I would have got in that trade. All right, just from understanding that. Also, this is petty as fuck too. But still, I don't care. It's a liquidity sweep. So which we're making higher highs, even though it's very, very, very choppy and slow, and I don't advise you to trade this shit. If you actually technically look at it and break it down, all right, there was the higher high, there was the higher low, all right, the wick of it. See this? Watch how this shit happens now. Get out my fucking way. There it is, right there. I know. It's petty. That's a petty liquidity sweep. But it did. It swept it. It swept the wick. It swept that. Get me? And look at what it does too. Look at what it does. You gotta study this and go, all right, that was a sweep. Cool. I always tell you have to put your stop losses below the wick. You have to, because the majority of times that it comes back to revisit that shit. So but it's still a dub. It's still a fucking dub. Don't know if it's a 1 to 2. Yeah, big time. Big fucking time. But Do you see what I'm saying about if you really dial in and you look and you tune in and you see, ooh, there's a liquidity sweep right there. We've just swept out. We're making higher highs. We've just swept a higher low. We've swept the wick as well. And the candle closed. But then, like I said, you could have even waited for it to revisit the area and give you the bullish engulfing candle. That's the cleanest entry. And you can put your stop loss right there. But you didn't have to do that, though. People who go work and shit, they don't do that. They just go, I'm going to put a few pips below where they swept liquidity, and I'm going to target, let's say, this area. You know what I mean? And then that happens. So understanding liquidity is massive. Understanding them, even the smallest little liquidity sweeps, is massive. Honestly, is huge, and it's gonna help you in trading a lot. So that's liquidity sweeps and fake outs and breakouts, whatever the fuck. But sorry, my back's killing. When to avoid these? All right, so we don't trade major news. We know that. So when you watch this back, you'll see anyway. I'm looking at the slide right now. But when to avoid? Oh, sorry, how to trade them? All right, yeah, I think I kind of just. Yeah, I think I kind of did just tell you, right? But once again, we can either wait for the confirmation of failure, so we can wait for the sweep and then get in our trades, or we can actually, on the breakouts and the opens, target liquidity, which we do. But if you wanted to, you could actually trade after the liquidity sweeps happen. So that's one way to do it. Look for strong reversal candles. All right, so that's interesting. What's a strong reversal candle? All right, so a strong reversal candle to me looks some shit like this. All right, say we're going up. All these are grey, I know. Right about it. I'm not even going to put wicks on these ones, but they're bullish. All right, and then we get some shit like this. Boop, we come down. Come down. Sorry, my drawing's terrible. And we do this. Right, that's a strong, to me, a strong reversal candle. Even if it had a little tiny weenie like this, a little tiny wiener, a little tiny little wick like that, that's still a strong reversal candle to me. All right, but if it didn't have one, that's even stronger. Or if it ended some shit like this, that's even stronger. So like that'd be a strong reversal candle, because if left a wick. So I'm always looking for wicks when there's reversals going on. Like, you know, if I think is a liquidity sweep also, that's just another word for reversal. Where we're sweeping liquidity, we're reversing. Also, even without the wick, say this candle did break and do this. This is a strong reversal fucking candle. Why? Because it's a bullish engulfing candle. So let's say these were the bullish ones, then this was the bearish ones. We come down, then this is the bullish one. So reversals for me are strong wicks, making sure the wick is longer and going in that direction, or an engulfing candle. They're the only two candles I'd really consider a strong reversal. All right, so like this. This is a strong reversal. We're going up. We know that we're making higher highs. Fuck the doji. I'm not really interested in the doji because it's 50-50. When I see this though, why is that strong? Because one, the wick is longer than the candle before it, and two, it closed strong. Even with a little wiener at the end there, it's still closed strong. That's a strong fucking reversal. Now, even though it didn't last long or whatever, and we're still bullish, at the time, if I knew in my head, yo, that's a quick scalp there. Like, that's a super quick scalp. It's a cheeky little 10-pointer, whatever. We're targeting the bottom there, maybe a little 1 to 2. Do you know what I mean? Boop. Like, this shit happens. That's all it is. That's all I'm trying to explain to you. That, to me, is a strong reversal candle right there. Stronger than the ones before it, whatever. All right. Also, an even stronger reversal candle. Even stronger. All right. So, I don't like these candles. I'll show you right now. I fucking hate these candles because, yeah, it's super bullish. But look at the way it closed. It's like the buyers was all the way up there, and then they finished there, and then it does this though. So that's a strong ass bullish engulfing candle. Now that there, all right. This isn't a reversal candle. I mean, let me try and figure this out. Yeah, it is. Yeah, it is actually. It is. So my bad. It's not. It's just a continuation candle, right? That's a strong continuation candle. A reversal candle. Where's the strong ass reversal candles too? Where can we see a? There. There's a fucking strong reversal candle right there. Boom. Why is that a strong reversal candle in an uptrend? And you can actually anticipate a little break to the downside now, because it's engulfing. It's big. It's bigger than the 1, 2. So it's bigger than the 2 before it. And even though it isn't crazy and it doesn't do anything mad, all right, there's a perfect example of 1, there's a rejection wick. That's our first thing. In an uptrend, counter trend trading. 2 is an engulfing candle. And 3 is liquidity. There's liquidity waiting, begging for it, saying, come and get me. What does it do? Comes and gets it. Comes and gets even more of it. All right. Don't know what the fuck it does next. Does a whole bunch of shit next, but put the liquidity and yeah, it did that. We'd be fucking well out of that anyway. But it's all artwork in my opinion. Like for me, I would have been able to anticipate the reversal and a cheeky little counter trend trade just from this on his own. Just from knowing we're in an uptrend. If I get in now on a sell there, and I put my stop loss there on a 10-pointer, and I go for a 1 to 2, 1 to 1, whatever, I'm seeing that the little fair value gaps, all of these things. That's why you got to understand liquidity. You got to understand where it is laying. Do you know what I mean? Or you just put the indicator on. Indicator's going to show me. Indicator's going to probably show me at this point in time. Actually, they've already been swept out before that. Let's go there. Right, the indicator did me dirty today. There should be some fucking TPs there, but they're not. Because they already got swept out because we're in an uptrend. But anyway, you get the point, right? You get the point. You actually get the point. Reversal. Boom. There we go. That was what I was looking for anyway. Reversal candle. So what have we got? Wicks. We like that because it also did it over there too. This is clearly an area that in the last how many minutes has been rejected from. All we need is a break above these wicks, all these bodies, but I choose these wicks, and an engulfing candle. An engulfing candle though would be the cake. There it is. There's the engulfing candle, and there's your entry. There's your reversal. That's a strong reversal for me. I wicked it, and that would have been my target there because I understand liquidity pushed it down. Is this sinking in? Is this sinking in? I wonder. Is this sinking into you lot? Yeah. In the replays is going to be I'm drowning in sand. It's just I don't want it to be too much. Like these them things that you'll go back and watch a few times, 5-10 times, and be like, at the time I thought he was talking so much shit, but I just want you to test yourself. I just want you to test yourself and see how many times you see a liquidity sweep and it could help you in a big way. You know what I mean? Like, there's your fucking TP right there. The first TP anyway. Because I believe we're probably at all-time highs, like always with NASDAQ. There's your TP right there. You've just swept out liquidity. Clearly. Big-ass rejection candle. The next one's blue. You know what I mean? So, oh, my bad. Next one's blue. Now, putting your stop loss is always going to be safest below these wicks. But we're risk takers. We're doing shit like this. We're doing like 10 points. Actually, 20 points ain't even a bad thing. But you just don't know where your target is now. Because I do think we're at all-time highs. So that's the only tricky thing. When you know all-time highs, you can't really judge how far it's going to go, if it's even going to go that far. You know what I mean? Nah, not quite, but still, W. Still a W, just because you knew how to read liquidity sweeps and a strong reversal candle, a nice blue one. Do you know what I mean? So there we go. That's that anyway. I think I've let that sink into you a little bit, at least. It's quite hard to teach fake outs and fake breakouts and liquidity sweeps, because to me they're like the same shit, right? They're the same shit. So the only time we don't really want to be trading them is in a range and during major news, because we don't trade major news anyway, because you're just asking to be swept out. And yeah, I think that's it, you know. I think that was literally it today, just to try and like make you understand what a fake breakout and a liquidity sweep is. So yeah, anyone who's watching the replay will be able to see everything right now. This whole screen. Have I taught everything though in this that I felt like I needed to? Yeah, I think I do, because I don't want you to overthink liquidity sweeps, and I don't want you to overthink fake outs. I just want you to understand, you know, what they are when you see them. Like, you could have even lost the trade. You could have been like this, like you go, you know, you could have got in on a breakout to the downside there, thinking, sorry, that's froze there. At one point, the candle was this big, yeah. So you could have thought to yourself, this is the breakout, getting in there, and I'm trading it to the downside. But then, do you know, when you see the candle actually close and you see it do that? Remember when I tell you, okay, I risk 0.5% to take 2 trades? Then I could have thought to myself, fuck, all right, let's see what the next candle does. Is bullish. Now I got an opportunity to wait for another breakout to the upside, or just enter from there. Do you get me? But you have opportunities, and there it is. So first one done us over. We know now what a liquidity sweep is. Damn, I became liquidity. I became swept. And then the second breakout goes well in our favor and recovers us and gives us more. Know what I mean? That's all I wanted you to understand. So I think that this is the end of this class. I don't think I need to do any more. Obviously, once I edit all of this into the course and it's all timestamped and stuff, it'll make a lot of sense, because the shit that sounds confusing I'll just take out. I'll keep the main parts, because you know that I go on like about certain stuff sometimes, get a little bit sidetracked. But yeah, I will catch you all in the London session now, I guess, and I'll catch you in the New York session tomorrow. Is there any questions before I leave? And if there's not, and if there is, I mean, sorry, and you're not watching it now, you're watching it in a replay, in the replay section, drop me a question in the questions channel, or just say in there, you know, can I ask you a private question or whatever. But like, yeah, we're all here to help each other and learn. So good stuff. I feel like once this is done and it's all put into a course, it's going to be a fucking lit course. What's the settings in the FX Pro indicator, bro? All right, I'm going to show you. I'll show you quickly, but I did do a video on it, but I'm going to show you anyway. So this is my settings for my 1 minute and 5 minute scalping time frame. All right, even 15 minute. This is what I use. So you want your 4 hour on, you want your 1 hour on. I changed the colors myself because I just want them that color. You can do what you want. And I changed the width of the 4 hour, because the 4 hour liquidity for a 1 minute and 5 minute time frame, the chunkier blue lines, I put it the width to 4, because that's going to change the skinny line to a thicker line. You can change it to however thick you want it, but 4's enough for me to understand. That's where most of the liquidity is lying. And if you see a bunch of those thick lines, you know that's begging to get taken out, all right? So that's my settings for that. Then I set my style to dashed, and then I put my removal to 1 hour, because otherwise, if you keep it on the daily, you're just going to have a bunch of lines everywhere. But yeah, just play with it and tweak with it a little bit. But mainly, though, is these are what you need to worry about. The 4 and the 1. And sometimes if there's no take profits in sight and I can't see anything, I will actually change the 1 hour to the 15 minute. it depends on what I want my take profits to be. You know what I mean? Like if I go back there now, it's giving me two. It's giving me two little take profits. But if I go to put it on the 1 hour time frame, it probably won't. It'll probably give me one. Yeah, see, it's just giving me the one. Like the lower you go, the more take profits it's going to give you. But it looks a little bit more messy as well. But you can play with that yourself. But this is literally, these are just, look, take profit indicator, boom. That take profit's going to get taken, or these bottom ones are going to get taken. It's simple as that. Bottom ones get taken. Now when it breaks to the upside, the ones to the upside are going to get taken. Do you know what I mean? Like that's but it's constantly changing. So I like to keep mine on 1 hour just to keep it more clean and go for the more like ones that make sense. So now we got a 1 hour one. You see it? So the one above is either going to get taken or the one below is going to get taken. The one above got taken, not straight away it didn't, but it definitely did in the end. So you come to the charts at that time and you've seen that your take profit was there and your breakout was there. That's how you'd use it, man. Literally how you would use it. You might be able to target down, but that's how you'd use it. Boom. Here's the 4 hour one. But them 4 hour ones though are usually the ones that price are magnets to. Like you see like that 4 hour one there. Watch how rapid it approaches the 4 hour ones. Right? Just look how fast it approaches them. Like without any fucking blue candles involved. Just straight up melts towards them. That's why I say the 4 hour ones on certain sessions are more thing. And this was the London session at 8 o'clock. So when 8 o'clock opened up and this little trend line got broken, that shit got rinsed, that 4 hour line anyway.